Okay, so in our previous day session, we started with input tax credit and we have seen section 16 conditions for availment of ITC, and we started with 17. In that 17, we have seen apportionment of credit, section 17 subsection 1, 17.2 and 17.3. Now look into 17 subsection 4, special provision for availment of ITC by a banking company, financial institution including NBFC. So basically for a banking company, financial institution and NBFC, part of their turnover will be taxable and part of their turnover is exempted. So what is the exemption? Any consideration represented by way of interest or discount collected by bank, financial institution or NBFC is exempted. So usually banks will have interest income that is exempted, and the other income of the banks is what? Commission, demand draft charges, or merchant banking services, like that. Lot of other activities they do, and they get some consideration that will be taxable, but interest will be basically exempted. So whenever a person is having partly taxable and partly exempted, so proportionate credit only they will be able to take. So to what proportion they will be able to take? Total ITC into dash by dash, taxable divided by total. So that much credit only they can take. But for a bank, so this work will be an additional burden, because every month they need to do how much is their turnover which is exempted, how much is taxable, and proportionate calculation they need to make, as bank will be doing day-to-day activities, so which are actually lot of administration activities. To relieve the burden to them, so they brought in one option. That option is, instead of taking the proportionate credit, you take 50% of the credit, which means here what is the assumption that we take? 50% of the turnover will be taxable turnover and remaining 50% will be exempted turnover. That is the assumption that we will take. Under that assumption, so part will be like ITC available. Which part ITC available? 50% portion ITC available, remaining 50% portion ITC is not available. That is the option 2. You can see here there are two options available to a bank, financial institution, NBFC. Option 1, they will avail the proportionate ITC. Option 2, avail 50% of the eligible ITC. Now in this proportionate ITC, what they do? Normal, like how regularly we did in the previous. So total ITC into taxable divided by total ITC available. Whereas option 2, they will take 50% of the eligible ITC, and remaining 50%, what will happen? Remaining 50% will be lapsed, and this 50% restriction not applicable in case of inward supply from a distinct person. What does it mean? Say for example, there is a bank, HDFC Bank, which is having a branch in Tamil Nadu. HDFC Bank branch in Tamil Nadu receives services from HDFC Bank branch Karnataka. So now Karnataka branch and Tamil Nadu branch are treated as distinct persons. So when one distinct person receives inward supply from another distinct person, so in that case what they are telling under option 2, we can enjoy the 100% of the ITC. So we don't have to reduce 50%. Generally under option 2, what we will do? 50% of the ITC we will cut and remaining 50% only we take. But in case of option 2, they are telling, so for one service alone, what is that one service alone? Inward supply from a distinct persons alone. So we don't have to take 50% restriction. Full ITC is available. Restriction of 50% shall not apply to tax paid on supplies made to another registration within the same entity. The next point is, this option 1 and option 2, can I decide every month? Not like that. So in the beginning of the financial year, we need to decide one option, and that option will be applicable throughout the financial year. Okay, so you can see option 1 exercise cannot be withdrawn during remaining part of the financial year, which means before itself we need to decide whether to go for option 1 or option 2, and which will be feasible. Accordingly we will go. If my interest income is 80%, other income is 20%, if I go for proportionate option, how much ITC I will get? Interest income is 80%, other income is 20%. How much ITC I will get? What proportion ITC I will get? 80% proportion or 20% proportion? 20% proportion. My interest income is exempted. To that extent, I will not take ITC, and my other income will be taxable. To that proportion, I will take ITC. So therefore, to the extent of 80%, I will not take ITC. To the extent of 20%, I will take ITC. This is option 1. Suppose if I go for option 2, how much credit I will take? 50% I will take. So now you tell me, when your interest income is 80%, other income is 20%, which option is better? Is it option 1 or option 2? Option 2, because in option 2 I will get 50%. Suppose if my interest income is 30% and other income is 70%. If I go for option 1, how much ITC I will get? 70% I will get. But if I go for option 2, how much I will get? Only 50% I will get. Now which option will be feasible for me? Option 1 will be feasible. Like that I should have decided in the beginning of the financial year. So that is with respect to this. So interest income for bank financial institution is exempted both for payment of GST as well as for availment of ITC. We don't have any exception with respect to that. And what is taken as the ineligible ITC? Here we will take the common ITC, because yesterday one friend asked me, sir, we are purchasing something, sir, which is used fully for taxable, sir. We are making 3 purchases. Purchase of raw material X, raw material Y and raw material Z, like that. 3 purchases I have made, and raw material X I am using fully for taxable FG, taxable finished goods A, whereas raw material Z I am using fully for exempted FG B, exempted finished goods B, whereas raw material Y, what I am doing, I am using equally for or in some ratio for FGA and FGB. Now, which will undergo proportionate ITC? Is all the 3 raw materials will undergo proportionate ITC? No. So as raw material X is fully used for taxable finished goods A, so therefore you take the full ITC with respect to this. Full ITC you take. For example, if the GST on this is 1 lakh plus 12,000, and on this 50,000 plus 9,000, on this 1,50,000 plus 27,000. So therefore, with respect to this 12,000, you take full ITC. With respect to this 27,000, don't take ITC. With respect to this 9,000, you take proportionate ITC. Okay, proportionate ITC. So therefore, what we will do here, how much is the ITC that can be availed? ITC availed equals to 12,000 plus 9,000 into, so taxable divided by total. Let's say taxable turnover is 10 lakhs and exempted turnover is 5 lakhs. Then in that case, so what is the proportion in which I will be able to take the ITC? 10 by 15. So this 9,000 only into 10 by 15, not this 12,000. So therefore, 12,000 fully we will take, 9,000 into 10 by 15. So how much is this comes to? 9,000 into 10 by 15. 9,000 into 10 by 15. 6,000? 1/3, correct? 1/3 is what? 6,000. So therefore, 12,000 plus 6,000, that will be coming to 18,000 is the ITC that can be availed. Okay, and we should not take 12,000 plus 9,000 plus 27,000 into 10 by 15, not that way. Okay, so whenever you are using exclusively for taxable, take full credit. Exclusively for exempted, don't take credit. Only the common ITC we need to do proportionate. What is common ITC? Which is used for all, which you cannot segregate between taxable or exempted. Okay, that is known as common ITC. That is with respect to this. For example, I am purchasing paper. Using paper I am making books. Okay, so these books are partly used for sale of books as it is. Sometimes books will be sold as a part of the lectures. So if books are sold as it is exempted. If books are sold as a part of the lecture, so then it will become taxable. Now in that scenario, what will happen with respect to the paper? Paper is a common ITC. Why common ITC? Because it is commonly used for taxable outward supply as well as exempted outward supply, like that. Okay. Whereas if you go for option 2, this is option 1, proportionate ITC method. But if you go for option 2, so everything will be treated as common only. Means exclusively for taxable also treated as common, exclusively for exempted also common. both for taxable and exempted also common. That is what important point you have to remember for option 2. What is considered here as ineligible ITC? Only with respect to non-business purpose and blocked ITC, which means that remaining and all means total ITC minus ineligible ITC is common ITC. Means what happens? Exclusively used for taxable, exclusively used for exempted, fully we will treat as common, and due to that reason total into 50% is what we will be getting. Is it clear or not? While doing the comparison directly we cannot do the comparison. Quickly make note of an illustration. I want you to try the answer for this. Okay, so this is illustration on section 17 subsection 4. So first we have HDFC Bank registered in Tamil Nadu. Okay, so having exempted supplies. What is exempted supply for a bank? Interest income of 10 lakhs and taxable supplies of 12 lakhs for the month of January 2023. Details of inward supplies are as follows. Details of inward supplies as follows. So we have number 1, used exclusively for exempted supplies. Used only for exempted supplies. That is inward supplies used only for exempted supplies. That is 1 lakh excluding GST at 18%. Then number 2, used only for taxable supplies. That is 50,000 excluding GST at 18%. Then 3, used for both taxable and exempted supplies. Used for both taxable and exempted supplies. That is 1 lakh excluding GST at 12%. Number 4, from distinct person, that is branch in Karnataka, used for both taxable and exempted. Used for both taxable and exempted supplies. 50,000 excluding GST at 12%. Now, this is actually one good question. So far they did not test a question like this. So because it involves everything, all the adjustments. So try the answer. I want the net GST payable under both the options. Compute net GST payable under both the options. What will be taken as the net GST payable under both the options? So let's see who will tell the first and correct answer. 5 minutes time for you. Both the options you need to do, not just one option, and see what is the net GST payable. Even if it is late, try to come to the classes. Okay, maybe at least 1 hour, 2 hours late also, it's okay. So don't skip the class, come, and even you take the responsibility of ensuring that you are making your friends also to come to the session. Okay, reason being, so if they are really successful, the credit goes to you. Okay, so that's why ensure that you're bringing your friends also along with you. That is important. Because basically people will feel lazy. Arey yaar, I have to go far, I have to attend. Anyhow, sir said he will upload it in YouTube, so I can watch in YouTube. See, definitely that cannot be compared. You would have watched lot of YouTube classes, but the way you come and sit and learn and go, nothing can replace. Okay, done. Who got the answer? Raise your hand and tell me. No one got the answer. At least one number you would have got. Outward supply rate, okay. You take 18%. So in exam also, when you don't have the rate of GST, you take 18% because that's the general rate of GST. So GST on outward supplies, GST on outward supplies is 18%. So even in exam, when you don't have the rate of GST, you take it as 18%. Simple here, first option 1, gross GST minus proportionate ITC, net liability. Option 2, gross GST minus ITC, but not proportionate, 50% model. Then you will get net GST. So this is what you need to do. If you do this, you will get two numbers, net GST, under option 1, option 2. Tell me what is that you got. Someone said there, Upa. Option 2, 1,99,500, option 2, okay. Option 1, option 1, who said? Who said? Yaar pakondu, kai thookunga. Needanamma, okay. So, lot of students are there, that's right. So, you did not do option 2, 1, darling. Adipri, I need both the answers. So, yes, ma. Option 1, 1,94,000. Option 2, Salad. I want both the answers, yeah. Yes. 1,94,455 option 1, 1,90,500. Okay. $71, 82. Option 2, okay, 90,500. Same, ah. $98. Okay. 94,454. Okay. 1,99,500. Okay, pa. 4 options enough, huh? So, because even in exam, multiple choice, there will be only 4 options. Let's see which is the correct answer. And if it is correct answer, you will get a gift also. So, concentrate. First, we will see what is the net GST payable as per option 1. So, I am taking option 1. Option 1 is what method? Proportionate ITC method. Under proportionate ITC method, what we need to do is that we need to take the gross liability. How much is the gross GST payable? So, the gross GST payable will be taxable turnover. What is the taxable turnover here? 12 lakhs. 12 lakhs into what is the rate of GST? 18%. So, 12 lakhs into 18%. Can someone help me? What is this? 2 lakh? 2 lakh 16,000 minus proportionate ITC. Proportionate ITC, that is total ITC. If you see here, used for exempted. Can we take this as ITC? No. Used only for taxable. Can we take this ITC? Yes. But fully we can take 50,000 into 80%. 50,000 into 18%, that is 9,000. Fully you take and deduct. And thereafter, used for both taxable and exempted, 1 lakh and even this 50,000, both in distinct person as well as this both. Only for option 2, invert supply from distinct person, full ITC available, not for option 1. Option 1, whether it is invert supply from distinct person or from any other person, if it is used partly for taxable, partly for exempted, proportionate ITC only will be available. So 1 lakh into 12% plus 50,000 into 12%. So 1 lakh 50 into 12%. So what is 1,50,000 into 12%? So 1,50,000 into 12%. Fully we will get no proportionate. Proportionate to what? Taxable turnover. What is the taxable turnover here? 12 lakhs is the taxable turnover and the total turnover is 22 lakhs. So into 12 divided by 22. How much it will come to? 1,50,000 into 12% into 12 divided by 22. Only one answer you will get. Multiple answers not possible because different calculators also will give the same answer. Okay, 1,50,000 into 12% into 12 divided by 22. One number you will get. What is that? 9818. So 9,818. And is there any other ITC that we have? No. So no other ITC. So therefore this will be the answer for first option. So that is 2,16,000 minus 9,000 minus 9,818. How much? 1,90,000. 182. So 1,97,182. So someone said this answer. You said this correct. And then option 2. Option 2 is what method? So ad hoc ITC. What is that ad hoc ITC? 50% ITC method. So in this 50% ITC method, so what is the gross liability? No change. Gross GST payable. Gross GST payable same. No change in that. That is 12 lakhs into 18%, 2,16,000. 12 lakhs into 18%, 2,16,000 minus 50% of eligible ITC. Now, everything you take into 50%. Used for fully taxable, used for exempted, used common. everything you take 50%. So which and all you need to take 50%? 1 lakh plus 50,000 plus 1 lakh, you need to take 50% of ITC. But inward supply from distinct person, you will take full ITC. So even though it is exclusive used for exempted, exclusive used for taxable should be treated as common. So therefore, everything will be treated as common. So 1 lakh plus 50,000 plus 1 lakh, how much it will be? 2 lakh 50,000. 2 lakh 50,000. So same way GST is there into 50%. So total 4 numbers will come. So tell me what is the first number? 1 lakh. So exclusive used for exempted, sir. Even then you will treat it as common. So 1 lakh into 18% into 50%. So how much that will come to? 9,000. Thereafter, so what is the next number? 50,000. 50,000 into 18% into 50%. Even though exclusive used for taxable, you will treat as common. So how much? 4,500. Now common is there. What is that common? 1 lakh into 12% into 50%. How much that will come to? 6,000. And thereafter, last one, inward supply from distinct person, don't take 50, you take full. What is that? 50,000 into 12% fully. So how much that will come to? 6,000. So now you reduce these 4 numbers. 2,16,000 minus 9,000 minus 4,500 minus 6,000 minus 6,000. That will be net GST payable. 1,90,500. Okay. So what is the answer? You said 1,90,500. Good. So she said the correct answer, both the options, 1,97,182 and 1,90,500. What is your name, ma? Reshma. So please come to the stage. So good, keep it up. Okay, next. So this is actually a question which I coined on the spot. So therefore it is common for everyone, whether you attended the class or not attended the class. This question and all I did not discuss anywhere. Okay. So therefore good, keep it up. And the next one, the next concept, you can see one illustration 7 here, which is on the similar line. Already I discussed one illustration. This is like similar to that. You can try this, okay, at your end. This is also the same way, but that many adjustments are not there. What we did just now is having lot of adjustment. This is a simple question compared to that. And next you can see blocked ITC, section 17 subsection 5. We completed up to 17 subsection 4. 17 subsection 1 is what? Inward supply used commonly for taxable and exempt, business and non-business, take proportionate credit. 17 to inward supply used commonly for taxable and exempted, take proportionate credit. 17 subsection 3, meaning of exempted supplies. 17 subsection 4 is the special provision, and this special provision is applicable to whom? Everyone, or only to bank, financial institution or NBFC? Only to bank, financial institution and NBFC, not for others. Okay. Now we are moving on to blocked credits, which is a very important area. Please open your mind and carefully listen without having any deviation, because this blocked credits, what we learn in exam, we will get the situations. So in that situations itself, we will be able to know whether it is a blocked credit or not. If it's a blocked credit, ITC not available. If it is not a blocked credit, but it is used in the course or furtherance of business, then ITC available. That's how we need to write. So very important area. Definitely you will be having this application in exam. Otherwise, it is not CA inter tax paper. That much important it is. So see that we have total 3 blocked credits. Motor vehicle related blocked credit and construction related blocked credit and other blocked credits. These are the 3 blocked credits that we have. So first, motor vehicle related blocked credit. You are buying motor vehicles, and it can be motor vehicles used for transportation of persons, motor vehicles for like aircraft or vessel, or other motor vehicles. So if it is motor vehicle for transportation of persons, what and all will come? So bus will come, and tempo traveler will come, Innova, like that vehicles will come, even cars will come, 2-wheelers will come. All those are for transporting persons. Vessels and aircraft means, vessels means ship, and aircraft means aircraft that you already know. What are the other motor vehicles? Like lorries, road rollers, bulldozers, trucks, etc. on that ITC always available, we don't have any restriction. So other motor vehicles ITC always available and we don't have any restriction with respect to that. Example, trucks, lorries. Why ambulance won't come under motor vehicle for transportation of persons? Ambulance is not a motor vehicle for transportation of person. Ambulance is basically to provide the first aid during the travel. So it is not that it will transport so that we can stop the ambulance, pay some 500 rupees so that they will drop us somewhere. No, definitely not that. So it is mainly to provide the first aid during the travel. They will be providing ambulance. So therefore ambulance is coming under other motor vehicles. ITC can be taken. Even caravan if you take. So usually it is a hero, heroine, etc. and all. So when they go for outdoor shootings, they will not have proper accommodation. So they will be taking the caravan along with them and they stay in that caravan only. So this is basically again not transportation of persons. It will come under accommodation, short-term accommodation. That's why it is other motor vehicles. ITC is available. Okay. So whereas motor vehicles for transportation of persons again divide into two. Capacity does not exceed 13. While counting the capacity include the driver's seat also. Or capacity exceeds 13. Capacity exceeds 13 means which vehicle will come? Bus, tempo traveler, etc. ITC always available. We don't have any restriction in that. But if the capacity does not exceed 13, then we have the restriction. If the capacity does not exceed 13, now check. Three cases ITC available, in other case ITC not available. What is the example of motor vehicle transportation of persons capacity does not exceed 13? Cars and two-wheelers. Okay. In case of this cars and two-wheelers, ITC generally not available. But in three exceptional cases, ITC available. What are those three exceptional cases? Number one, if it is used for further supply, means what? I am buying a car and selling a car. I am a car dealer. Even though car is a motor vehicle for transportation of persons and capacity does not exceed 13, but ITC available because it is used for further supply. Then next, second exception is used in the business of transportation of passengers. Example, this Ola, Uber, etc. So a person is purchasing a car. Again, car is for transportation of persons. Capacity does not exceed 13. But what he is doing with that car? He is using it in the business of transportation of passengers. So definitely he can take ITC with respect to that. And next, number 3, driving schools. Even driving schools also will buy the cars and capacity does not exceed 13, but they can take ITC. But apart from these 3, any other person purchase a car even though used in the business, but he cannot take ITC. For example, a company purchase a car for transporting its employees from house to office, office to house. Can they take ITC? Purely it is used for business purpose. Can they take ITC? No, because car is a motor vehicle for transportation of persons. And what is its capacity? Does not exceed 13. And is it covered under these 3 exceptions? Is it for further supply? No. Is it in the business of transportation of passengers? Are they into the business of transportation of passengers? No. Driving schools? No. That's why ITC not available. Okay. Then another example, a chartered accountant purchased a car and used it in his profession. Purely for profession only he used that car. So even then, can he take ITC with respect to the car purchase? No. Why? Because again, car, transportation of persons, capacity does not exceed 13. And is it covered under these 3? Further supply? So is he selling that cars and all? No. And is he into the business of transportation of passengers? So when he go to client's office, again while returning, will he load some people and come? No, definitely not. Will he teach to the article students A for accelerator, B for brake, C for clutch, like that? No. So he's not running a driving school. Therefore, these 3 not covered. So other cases, ITC available or ITC not available? ITC not available. Then next, Pizza Hut purchased, Pizza Hut or Domino's or McDonald's, etc. They purchased a two-wheeler for the purpose of food delivery. So where it will come? Is it motor vehicle for transportation of persons, vessels and aircrafts, or other motor vehicles? Where it will come? Others. So therefore they can take ITC. Suppose if a person purchased a two-wheeler for listing with Rapido, so they will be transporting the persons. So the same two-wheeler will come under for transportation of persons. Are you understanding? If they buy a two-wheeler and they are using it for food delivery or courier, etc. and all others, ITC available. If they use it for transporting persons, then it will be coming under first case, and therefore we need to analyze here. Now let's take an example, Rapido. So a person purchased a two-wheeler and he is using it for Rapido to transport the persons. So now capacity does not exceed 13. Yes. Is it covered under the exceptions? Yes. Which exception? For transportation of passengers. Therefore, ITC available on the two-wheeler purchased or not? Yes. ITC available on the two-wheeler purchase. That is with respect to this. Then vessels and aircrafts. Vessels and aircrafts, we have 4 exceptions. Now here capacity does not exceed 13. We saw 3 exceptions now. Copy paste these 3 exceptions plus extra one more exception is there used for transportation of goods. So that is, for example, Reliance Industries purchased the aircraft for transporting its directors. Can they take ITC with respect to aircraft purchase? No. Why? Is it further supply? No. Is it in the business of transportation of passengers? No. Is it for driving schools? No. Is it for transportation of goods? No. Therefore, ITC available or ITC not available? ITC not available. Suppose if Indigo Airlines purchased the aircraft used in the business of transportation of passengers, whether ITC available? Yes. Because the aircraft used in the business of transportation of passengers, ITC available. Another example, usually this Blue Dart and First Flight etc. courier agencies purchase the aircraft for transporting the courier parcels. Can they take ITC with respect to that? Yes. Why? Last point, used for transportation of goods. Even this diamond and jewelry merchants, they will be purchasing the aircraft for the purpose of transporting the diamonds and jewelry, because diamonds and jewelry will be very costly. So due to that reason, to transport it from one location to another location, they purchase an aircraft. Can they take ITC with respect to that? Yes, because it will be coming under used for transportation of goods, consequently ITC available. Are you getting this? So now, what is that you need to remember this chart? So motor vehicles is divided into 3. Okay, motor vehicles for transportation of persons, and then second, vessels and aircrafts. Third, other motor vehicles. Other motor vehicles, ITC always available. Motor vehicles for transportation of persons, divide into 2. Capacity does not exceed 13. Capacity exceeds 13. Capacity exceeds 13, always ITC available. Capacity does not exceed 13. 3 exceptions. So what are the 3 exceptions? Further supply, used in the business of transportation of passengers, driving schools, ITC available. Other cases, ITC not available. Then vessels and aircrafts. For vessels and aircrafts, 4 exceptions. Further supply, used in the business of transportation of passengers, driving schools, and used for transportation of goods, ITC available. Other cases, ITC not available. Okay. Now one example for you. I am purchasing a motor vehicle and I am not into the business of transportation of passengers, but I am renting the motor vehicles. I buy the motor vehicles and I run a business called as renting of motor vehicles. I am not transporting the passengers and all. Okay. So therefore, whether I can take ITC on the motor vehicle purchase? Yes, because that comes under further supply. Further supply does not mean sale only. So I purchase it for giving on rental. Rental also will be coming under supply. Therefore, I can take ITC with respect to motor vehicle purchased. Is it clear? Then next, see, actually, whenever I discuss all these points, I have given it as a chart. But in exam, don't write charts, don't write mnemonics and all. Please try to write it like a paragraph. So that is also a mistake which we might be doing. So don't draw any chart in tax paper. So you can learn it like chart wise, but when you are writing, you need to write like theory, okay, paragraph wise. Even mnemonics, we will be remembering some mnemonics and all. So that mnemonics also you should never write in exam. You remember that mnemonic. For example, composition scheme, I used to say one point, who are not eligible for composition scheme. So in that S9 RCM, list of cases where composition scheme not applicable. Even last exam, now they asked this. So who are all excluded from supply? Spelled slow. Okay. So this mnemonics, if you write, no, you may explain that mnemonic also, but you will not get marks. So you should not write that mnemonic spelled slow. Sir CG got salads, I creations. These are all only for remembering, but there you need to write point wise. Then only you will get the marks. You understood or not? So that is this. And this charts, and some students ask me, is it mandatory to buy the book? So even without book also can we manage? Yes, you can manage. Actually, you can manage even without the book also. But you know why I will insist on book usually? Reason being, as I am taking the class from this book only, and when you learn it first time, you are watching this. Second time, third time when you read also, when you read from the same book, usually human mind is having a photographic memory. So what it will do is that the moment you close your eyes in the exam hall, this chart will flash in your mind so that you will know, okay, this point is in this place, so that you will be able to write the answer. That's why. So follow any one book. Not necessary that you need to follow my book only. Any one book you follow, but it should be like you should be able to recollect that in the exam. If you see multiple books, no, you will have this problem. That's why, so today itself, ensure that for one subject only one book. Okay, so you don't have any other book. Whether that book is having some mistakes or etc. and all, don't worry about that. Reason being, you are not scoring, you are not aiming for 100 out of 100. We are aiming for 50 out of 100. That is our first target. Then only the next targets and all. So for that reason, first fix one book. Accounts, one book, any book, one book. I have to follow one only. Like that FM, one book. So tax, one book. DT, one book. IDT, one book. Like that, any one book you need to decide. So then only when you keep on reading it multiple times, so you will be able to recollect the provisions and recollect the points in exam. That's why. Okay, fine. Then next chart you see, this is also related to motor vehicles only. So we have 4 services in relation to motor vehicles: repair and maintenance, insurance, then servicing. What is the difference between repair and maintenance and servicing? Servicing means authorized service stations. Usually these dealers only will do the servicing of the vehicle. They are called as authorized service stations. Then repairs and maintenance. Repairs and maintenance means like private workshops who will do repair and maintenance. Insurance, okay. Hiring, renting and leasing of motor vehicles. These 4 in relation to motor vehicles. If motor vehicle is eligible for ITC, means if you buy a motor vehicle and that motor vehicle is eligible for ITC, these 4 services also, whatever GST you paid, you can take as ITC. That is the meaning of this. Suppose if the motor vehicle purchase is not eligible for ITC, then these 4 services in relation to that motor vehicle also, ITC not available. Example, I gave you a chartered accountant purchased a car using for his profession. Can he take ITC on the car purchase? What is it we learn? No. What is the reason for that? Car is a vehicle for transportation of persons. Capacity does not exceed 13 and it is not covered under exception. ITC not available. Now that chartered accountant, on that car he has taken insurance. So on that insurance he paid some premium with GST. Can that GST be taken as credit? No. As car not eligible for ITC, insurance service on that car also not eligible for ITC. Now another example, a company purchased a bus for transporting its employees. Can they take ITC on the bus purchase? Yes, because bus is a motor vehicle for transportation of persons. Capacity exceeds 13. Bus usually capacity exceeds 13. So ITC available. Now for that bus, they have received repair and maintenance service. Can they take ITC with respect to that repair and maintenance? Yes, because repair and maintenance in relation to motor vehicle, if motor vehicle is eligible for ITC, repair and maintenance also eligible for ITC. Yet another example, that is if a company purchased a car for transporting its employees, can they take ITC on the car purchase? No. Why they cannot take ITC on car purchase? Car is motor vehicle for transportation of persons. Capacity does not exceed 13 and it is not covered under exception. ITC not available. Now instead of buying the car, they take the car on rental, rent a cab services. So they take the car on rental basis. On that rent, they pay some rent with GST. Can they take ITC with respect to that? No. Why? If the car purchased, it is not eligible for ITC. So hiring, renting and leasing also not eligible for ITC. If a restaurant purchased a two-wheeler for food delivery, can they take ITC on that two-wheeler? Yes. So reason being, it will come under other motor vehicles. So ITC available. Now for the two-wheeler, if they receive servicing, authorized service station, can they take ITC? Yes, because as the motor vehicle is eligible for ITC. So tell me, what are the 4 services in relation to motor vehicle that we have discussed now? Hire, repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. If the motor vehicle is eligible for ITC, these 4 services in relation to motor vehicle also eligible for ITC. If the motor vehicle not eligible for ITC, these 4 services in relation to motor vehicle also not eligible for ITC. Is it clear? That is with respect to that. Then see these key points. While determining the capacity whether the driver's seat should be counted or not, yes, because 13 does not exceed 13, greater than 13, there you include the driver's seat also. Further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring, leasing. Already I told you. So further supply does not mean only sale. Even if I am into renting business, it is called as further supply. Repair, insurance and servicing of motor vehicle received by a general insurance company is always eligible for ITC. Okay. So what happened? You purchase one brand new car. When you buy the car, there will be bumper to bumper insurance. So for the first year, even next year also, if you renew it, so the insurance will be there. Now what happened? You purchased the car and you paid for the insurance and all. Now what happened? That car you took in the road and you are actually not a that great driver and all. So you are learning now only and you hit the car. So when you hit the car, completely the side and all got damaged. When it got damaged, you will take it to the dealer, authorized service center. You don't have to pay 1 rupee out of your pocket because it is covered under bumper to bumper insurance. So who will pay the insurance? Like who will pay the money? Insurance company will pay the money, but just the claim charges you will be paying. Some 1,000 rupees like that you will be paying. So, but major work, say for example, that costed 30 to 40,000 rupees, that 30 to 40,000 rupees who will pay? Insurance company will pay. Then the service center will raise invoice to whom? You are the insurance company. Insurance company. Remember, always to whom we need to raise invoice. Yesterday, when this question also one student asked me, sir, can I raise invoice to any person? Just like that, you cannot raise invoice to any person. The one who is paying you the consideration, to them only you need to raise the invoice. The one who is liable to pay consideration, because we have the meaning of recipient. Who is called as recipient? The one who is liable to pay consideration is the recipient. To them only we need to raise invoice. Means in this case, who is making payment to the dealer? Who is making payment to the dealer? You are insurance company. Insurance company. So therefore, the dealer will raise invoice to the insurance company. Can the insurance company take ITC with respect to this repair and maintenance expenses? Yes. Don't analyze anything. It is nowhere related to the motor vehicle which they purchase. It is generally their business expenditure. So they can take ITC with respect to that. That is this third point. Repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. Then next, hiring, renting and leasing of motor vehicles is again blocked credit, correct? Suppose if it is under a statutory obligation incurred by employer to employee, then ITC available. The statutory obligation can be under any law. For example, Tamil Nadu government has given one order to all the software companies and ITS, BPO companies, etc., that if they are working in the night shift, they need to mandatorily provide rent-a-cab, like cab services to their employees. Okay, now it is a statutory obligation. Now listen, they receive rent-a-cab service. Generally rent-a-cab service is blocked credit. Why it is blocked credit? If they buy a car, can they take ITC? No. So why they cannot take ITC if they buy a car? Car is motor vehicle. Capacity does not exceed 13. Not covered under exception. They cannot take ITC. So as they cannot take car ITC, even if the car they take on rent also, on that rental charges they cannot take ITC. Correct or not? However, this particular case, it is under a statutory obligation, so therefore they can take ITC. That is the meaning of that. So under a statutory obligation, if employer hires the motor vehicle, he can take ITC with respect to that. The statutory obligation can be under any law, not necessarily GST law. It can be under any law. Then ambulance and caravan are not motor vehicles for transportation of persons. Already we saw that point, because it will come under other motor vehicles, correct? Ambulance and caravan are not motor vehicles for transportation of persons. Means what? It will come under, falls under what? Falls under other motor vehicles. And ITC available or not available? ITC available. Write down. Falls under other motor vehicles. ITC is available. So this is about the first blocked credit that we have seen, that is motor vehicle related blocked credit. The second one is construction related blocked credit. In this you see, so what is the meaning of the blocked credits? Even though if it is used in the course or furtherance of business, ITC is not available. Construction related block credit, you are receiving some goods for construction of an immovable property. What are the goods for construction of immovable property? Like building material, like cement, bricks, steel, or iron rods, or building materials like paints, or even this electrical fittings or bathroom fittings, like that. Anything, all goods purchased for construction of an immovable property is blocked to credit. Any service, including the works contract service received for construction of immovable property, is also blocked to credit. What is the difference between any service and this works contract service? Usually in works contract service, there will be two elements. There will be goods element as well as service element, and that is called as works contract. For example, if you want a house to be constructed, you will go to one builder. That builder will buy all the material required for construction. He will also do the construction and finally hand over the property to you. So that service will be called as works contract service. Or any service. Any service means what? Construction service, interior decoration service, plumbing service, like that. Any service received for construction of immovable property, blocked credit. So tell me, what is the blocked credit here? Three are blocked credit. What are they? Any goods purchased for construction of immovable property. Number 2, any service received or including works contract service received for construction of an immovable property will be blocked credits. So ITC available or ITC not available with respect to that? ITC not available. But we have 3 exceptions. In these 3 exceptional cases, ITC available. What is that first exception? You can see the above discussion not applicable to a supplier. What does it mean? Concentrate. I am a builder. You authorize me to do the construction. Okay, I am a builder. Now, I will buy the material required for construction. Can I take ITC? Yes. The restriction is to whom? Only to the owner of the property. You are the owner of the property. I am the builder. If you buy any goods required for construction, you cannot take ITC. Suppose if I buy any material required for construction, can I take ITC with respect to that? Yes. So this restriction is only to the owner of the property, not to the supplier. Got it? Same way. Now I am a builder. I will receive interior decoration service. Can I take ITC? Yes. But if you receive interior decoration service, can you take ITC? No, because any goods, any service received for construction of an immovable property will be blocked credits. Okay. Then next, second exception. First exception is what? The above discussion not applicable to supplier. Second, if the construction expenditure is in relation to plant and machinery, even though immobile. That is, for construction of a lift or escalator in a building, you are receiving the services, okay, and or you are purchasing the goods. Can you take ITC with respect to that? Yes. Why lifts and escalators are what? Is it building? Lifts and escalators? No, it's a plant and machinery. For that, if you buy any goods or receive construction service, you can take ITC. Then third exception. Third exception is if construction expenditure is charged to P&L. If construction expenditure is capitalized, you cannot take ITC. But if the construction expenditure is charged to P&L, you can take ITC. You tell me, when will you charge construction expenditure to P&L? When will you charge construction expenditure to P&L rather than capitalizing? If such expenditure is like repairs and renovation to the building, correct? For repair and renovation of the building also you will receive some construction services, yes or no? Now in that case, will you capitalize it or charge it to P&L? You will treat as a revenue expenditure. Now whatever GST you have paid, you can take as ITC. That is this. If construction expenditure is charged to P&L, then also ITC can be availed. So tell me, what are the 3 exceptions? Come on. First exception. First, what is a blocked credit? What is a blocked credit? 3 blocked credits related to construction. Any goods, any service, including work contract service received in relation to construction of immovable property, block credit. Okay. Now tell me 3 exceptions. Exception number 1. The restriction is not applicable to supplier. Then number 2. Construction of plant and machinery. Number 3. Expenditure charged to P&L. Now, plant and machinery excludes telecommunication towers and pipelines laid outside factory. Suppose for construction of telecommunication towers, if you receive construction service, you cannot take ITC, even though telecommunication towers is like plant and machinery, but the definition of plant and machinery excludes telecommunication towers. Then, next we have pipelines laid outside the factory gate. Pipelines laid outside the factory gate, is also like plant and machinery only, but for that if you receive any construction service or material, you cannot take ITC. Okay, these two are excluded from plant and machinery. Now answer. A person purchased some goods and received construction service for construction of pipelines inside the factory. Can they take ITC with respect to that? Yes, because what is excluded here is only telecom towers and pipelines laid outside factory gate. Next, suppose if a person received telecom services for construction of a telecom tower within the factory building, so can he take ITC with respect to that? No. Telecom tower anywhere, ITC not available, but in case of pipelines inside the factory, ITC available, outside the factory, ITC not available. Understood the difference? Then next, other blocked credits. We have some miscellaneous other blocked credits, and for each and every blocked credit, we have even exceptions also. So what we have in the first column is the blocked credit. So what we have in the first column is the blocked credit, and the next 3-4 columns are called as exceptions. Okay, first block credit, you see membership of a club, health and fitness center. For example, usually these celebrities and all will take gym membership, and for gym membership they need to pay GST also, but it is purely used for their profession. So reason being, they need to look good. So because they will be acting in movies, etc. and all, so therefore they need to look good. For that they will take gym membership. Definitely it is in the course or furtherance of business. Can they take ITC with respect to that? No, because see there, membership of a club, health and fitness center is a blocked credit. You cannot take ITC. Okay, then a chartered accountant take membership of a club, social club, in order to increase his contacts. So because who will be coming to club? Only rich people will be coming. So that the chartered accountant will get clients. So who will be required to file income tax returns, GST returns and all. Now it is a business expenditure. Can he take ITC with respect to that? Yes or no? No, because membership of a club, health and fitness center is a blocked credit. Okay, you understood? Then first exception you see. Suppose if it is provided by employer to employee under a statutory obligation, then can they take ITC? Yes, that is the exception number 1. Example, there is a company and government of that particular state mandated that particular company to take membership of that club on behalf of their employees. As a government obligation they are taking. Now whether the ITC is available to them with respect to this membership fees paid? Yes. So because if it is under a statutory obligation, that is this first exception. Any other exceptions we don't have for membership of a club, health and fitness center. Understood? Then second point you see, travel benefits extended to employees going on a vacation. Okay, so suppose if there is an employee who is going on a tour, personal tour, and that expenditure is borne by the company. Say for example, honeymoon package given by the company or any other tour package given by the company. Now in that case, who will make the payment? Company will make the payment, and invoice will be raised to the company. Can the company take ITC with respect to that? No. Why? Please see, travel benefits extended to employees on vacation is a blocked credit. Suppose if the employee is going on a business visit and the travel expenditure is paid by the company, can the company take ITC with respect to that? Yes, because it is not on vacation. Then you are a auditor of a company, you successfully completed the audit, and the company also very happy about your audit report. Okay, means you did not give any objections, everything unqualified opinion you have given. Okay, so the company is very happy about that. So the company has sponsored some foreign tour for you, and they have borne the travel expenditure, and they paid the value plus GST, travel expenditure plus GST. Can they take ITC with respect to that? Yes, because statutory auditor is not an employee of the company. Statutory auditor will never be employee of the company. If you are employee of the company, you cannot become a statutory auditor. Okay, so therefore in that case, can ITC be availed? Yes, because statutory auditor is not employee. Same way director's vacation expenditure borne by the company. Can the company take ITC? Is director employee or not an employee of the company? Then ITC available. What if the director is a managing director or a whole-time director who is an employee of the company? So can they take ITC with respect to that? No, because employee on vacation. Is there any exception to this? Again, there is one exception, that is employer to employee under a statutory obligation, ITC is available. So what is this example? Say an employer has to mandatorily provide leave travel facility as per any law, like Factories Act, or as per any minimum wages act, some employment regulations. Under that regulations, employer has to provide the mandatory leave travel facility to the employee. In that case, employer paid the travel expenditure. Can the employer take ITC with respect to that? Yes, because it is under a statutory obligation, so ITC is available. The next one, NRTP, non-resident taxable person. Who is a non-resident taxable person? A person who come from outside India to India and is not having any physical place of business in India, he is known as non-resident taxable person. So basically non-resident means what? He is coming from outside India to India. Is he having any physical place of business in India? No. And what he will do in India? He will provide goods or services. Okay. For example, let's take one Hollywood actor. Okay. So Hollywood actor Chris Hemsworth, Chris Hemsworth. So he is actually acted in Avengers movie and all as Thor. Okay. So now we are bringing him to Tamil Nadu, Kollywood industry, to make him as villain against our Thalapathy Vijay or future CM Vijay. So now what happens here? So when he is coming to Tamil Nadu to act as a villain, he will become non-resident taxable person. How? Is he having any physical place of business in India? No. And is he coming to India so for providing services? Yes. And he is a resident or non-resident of India? Non-resident. So he will be called as non-resident taxable person. Now, for signing this movie, who will produce this movie, sir? Leica Productions, okay? Because they are only making a big budget movies and all. So this Leica Productions is producing this movie. They will pay some money to this Chris Hemsworth to act as a villain. That money received by him, will it be chargeable to GST in India? Definitely it will be chargeable to GST, because every non-resident taxable person, logic also, income tax also, if you see, non-resident having Indian income is required to pay income tax. Do you remember that? A non-resident having Indian income is required to pay income tax. Like that, the source is here only for him. So on that he need to even pay GST as well. Got it? But when he come to India, he will stay in some hotel. Hotel bill along with GST. He cannot take ITC. He travels. On that travel also GST is there. He cannot take ITC. He eats food. On that food also GST paid. He cannot take ITC. So he cannot take ITC with respect to any expenditure that he incurs in India. So therefore ITC not available to him because it's a blocked credit. But only one exception. In one case only he can take ITC. What is that? Import of goods. So he will be importing that hammer. Okay. For the purpose of fighting sequence with our superstar Vijay sir. So he will be bringing one hammer to fight with him. So now in that case, that hammer is import of goods. On that import of goods, customs duty along with IGST paid, that can be taken as ITC. Okay. Sir, then what will happen to that hammer? After fight and all, hammer will be broken. He will not be taking that hammer backwards. Don't worry about that. Okay. So correct or not? Our superstar hits one, one side of the hammer and all will be broken. Okay. Who is Captain America and all? No one. So our hero is only, had he was born in US and all, he would have become the biggest Avenger by now. You understood or not? So such a great personality he is. And what will happen, sir, if he hits in the hammer? Nothing will happen. Light sprain will be there. If you do like that, everything will become normal. Okay. So because he is great, God made child, God's child he is actually. So therefore, that is with respect to this NRTP. You will not forget, NRTP, non-resident taxable person, he can take ITC only with respect to what? Import of goods. Okay. Then next one. So, but nothing wrong I said, you don't interpret in a wrong way. Good only I said. I said so great about him also. And perhaps I started liking him a lot because everyone is torturing him now. So because of that only, when someone bullies other person, we will automatically get a soft corner on him. So that's the reason why even so his fate is so bad now. Right now, he should have kept quiet rather than distributing gifts to that school children who got first and all. Had he kept quiet, so even audio function would have happened. So I don't know why he does that way, but unnecessarily he is now getting all kind of troubles. I don't know whether movie also will be released or not. Maybe directly it will come in OTT. So therefore, see this next one. The next blocked credit, food and beverages, outdoor catering. Food and beverages and outdoor catering is also blocked credit. And so, for example, if you see, generally companies will be providing food to their employees. So they will cook the food. No, definitely they will not cook food. They will take the outdoor catering service. So they will pay some money to the outdoor caterer. Can they take ITC with respect to that? No, generally it's a blocked credit. They cannot take ITC. But we have 3 exceptions to this food and beverages point where ITC is available. What is the first exception? If it is incurred by employer to employee under a statutory obligation, ITC is available. What does it mean? Generally, as per Factories Act, a factory has to mandatorily provide food to their workers, compulsory. They need to provide food to the workers. So for that, if they receive food and beverages or outdoor catering, can they take ITC with respect to that? Yes, because if it is incurred by employer to employee under a statutory obligation. Understood? Then next one, if inward supply, outward supply in the same category, what does it mean? It means that, so I am into the business of sale of food and beverages. For example, I am running a canteen in a cinema theater or a shopping complex, etc. Now I buy the food and beverages, I sell the food and beverages. Can I take ITC on the food and beverages purchased? Yes, because inward supply, outward supply in the same category. Then third exception you see, inward supply is part or component of the composite or mixed outward supply. Means inward supply is part of outward supply. Say for example, I am into the business of transportation of passengers by rail or airways. Now in trains and airways and all, they will be giving lot of food and beverages, correct or not? So now in that case, so I am purchasing the food and beverages which is given to the passengers as a part of the travel. You understood? So this inward supply is part of the outward supply. Can I take ITC with respect to this? Yes, I can take. So tell me what are the 3 exceptions for food and beverages? Statutory obligation by employer to employee. Number 2, inward supply, outward supply in the same category. Inward supply is part of the outward supply. ITC is available. That is with respect to this food and beverages. Next one you see, beauty treatment including plastic surgery and hair transplantation, life insurance and health insurance. Whatever we learned for this food and beverages, the same point is applicable for beauty treatment insurance. Okay, so remember 3 words: food, beauty, insurance. You understood? If you eat too much food, beauty will be spoiled, insurance is required. You understood or not? So food, beauty, insurance. Related to food, what? Food and beverages, outdoor catering. Related to beauty, beauty treatment, cosmetic surgery, plastic surgery, hair transplantation. Number 3, insurance. What insurance? Life insurance and health insurance. These 3 are blocked credits. However, first exception, if it is under a statutory obligation, then ITC will be available. Okay. Second exception, inward supply, outward supply in the same category. Third exception, inward supply, part of outward supply. Then suppose if I am into the business of transportation of passengers by airways, airlines. Okay. Now for my air hostess, so who are employees with me, I have spent the beauty treatment expenditure. So now can I take ITC with respect to that beauty treatment expenditure? Further supply? No. So whether air hostess is in further supply, inward supply and outward supply in the same category, or inward supply part of outward supply? No, you pay ticket only for a travel and all, not for them. You understood or not? So therefore, it is not parked in the outward supply. Due to that reason, ITC is available or ITC not available with respect to that? Not available. Okay. So that is this. And then life insurance, health insurance. So this point is over. Next one you see, hiring, renting and leasing of motor vehicles. What is this? Generally renting of motor vehicles is a blocked credit. If the motor vehicle is not eligible for ITC, hiring, renting and leasing of motor vehicle also not eligible for ITC. However, already we learned one exception. What is that? If it is under a statutory obligation incurred by employer to employee, ITC is available. Another two exceptions also applicable here. What is that? Inward supply, outward supply in the same category. Inward supply part of outward supply. For example, I am into the business of renting of motor vehicles. I take a motor vehicle on rental basis. Can I take ITC with respect to that? Yes. If inward supply part of outward supply, what is that? Listen carefully. Some national parks are there, like wildlife sanctuaries, tiger reserves, etc. and all, wherein you will be provided entry to the tiger reserve, plus I will also give you the vehicle to you. In that vehicle only you need to travel. You cannot go by walk and all. If you go by walk, you will not come out, okay? So you have to definitely go in the vehicle which I am providing to you. So what are the two supplies that I am giving to you? Entry to this wildlife sanctuary plus hiring of motor vehicle. You got it? Now, for giving you the motor vehicle on rental basis, I will take the motor vehicle on rent. Can I take ITC with respect to that? Yes, because inward supply is part of the outward supply due to that reason. Then next, you are purchasing from a person opting for composition scheme. First of all, a person who is opting for composition scheme, can he collect GST from the other person? No. If I am opting for composition scheme, I should not collect GST from you. If I collect GST from you, can you take ITC with respect to this? No, you cannot take ITC with respect to that. First of all, I should not charge, but by mistake if I charged also, you cannot take ITC. That is this. Already we learned this point in the meaning of input tax. It is again repeated here. If you are making purchase from a person opting for composition scheme, you cannot take ITC. Then for personal consumption, you are making some purchases and you are not using for business purpose. You are using it purely for personal purpose. Can you take ITC with respect to that? No. For example, I am a registered person. I purchased this Tide liquid for using in my home washing machine. On that, can I take GST and all? Definitely no. I cannot say, so because of washing only, I am wearing clothes, it is business expenditure. No, it is purely personal in nature. That cannot be called as business expenditure. So ITC not available. That is this for personal consumption. Then goods lost, stolen, destroyed or written off or disposed of by way of gifts or free samples. We purchase some goods and because of a fire accident, entire goods got destroyed. Can we take ITC on that goods? No. We purchase some goods and while the goods were in transit, so what happened? So one lorry, I have one lorry. In that lorry, my lorry driver is bringing that goods and my lorry driver just got down to go for the toilet. Meanwhile, so one person boarded the lorry and he took the lorry, okay. In Andhra Pradesh, it is very famous, okay. So therefore, in this case, what will happen? And after fuel, he will leave somewhere and he will go, okay. So now in this case, whether the goods which got theft, stolen, can I take ITC with respect to that? No, I cannot take ITC with respect to that. Then disposed as gifts or free samples. I am purchasing some goods and I am giving it as free gifts or samples. Can I take ITC with respect to that? No, I cannot take ITC with respect to that. Why? Because disposed of as gifts or free samples. However, if that gifts or free samples is supply, I can take ITC. Yesterday we did not discuss few notes. It is actually connected to this point. So if I purchase some goods and dispose of that goods as gifts or free samples, can I take ITC with respect to that? I cannot take ITC with respect to that. Okay. Example, say Diwali is coming. During Diwali, what will happen? Lot of employers will be gifting something to their employees. Some people will give sweet box, correct? And some people will be giving watch, t-shirts, backpacks, everything they will be giving as gift to the employees. Now, can they take ITC with respect to that goods purchased? Everything they will buy. Can they take ITC with respect to that? No, because it is distributed as gifts or free samples. But if this distribution of gift or free sample becomes supply, then they can take ITC with respect to that. I will give you one example. Carefully listen. That is, there is one employer. There is one employer who purchased an Android phone from mobile shop, okay, or from Amazon. From Amazon, this employer purchased a mobile. And what is the price of this mobile? Let's take 40,000 rupees plus 18% GST. How much is 40,000 plus 18% GST? Huh? 11,000. So 47,200. And what this employer did, he gave that mobile as gift to his employee. He gave a mobile as gift to the employee. So mobile gift as gift to employee. Some employers are giving cars and all for employees. You don't know that. So really, last year also in OMR, ECR, there were some software companies which has given so the Swift car and all as gift to the employees. Some software companies gave even BMW cars, okay, and cinema industry, needless to say, so gift, okay. So now all these gifts, cars and all will be given. So one mobile giving gift and all is not great. So therefore gift is given to the employee. What is the value of this gift? The value of the gift does not exceed 50,000. So therefore, is it supply or not a supply? Is this gift supply or not a supply? We have one point which says that employer giving gift to the employee, if the value of the gift exceeds 50,000, then only it is supply. As the value of gift does not exceed 50,000 per annum, therefore it is not a supply. You understood or not? This gift is not a supply. As this gift is not a supply, can this 18% GST 7,200 be taken as ITC or cannot be taken as ITC by the employer? ITC not available to the employer. Why? Because purchased goods given as gifts or free samples, ITC not available. You got the clarity related to this. However, if the employer has purchased iPhone, definitely it will be not less than 50,000, it will be more than 50,000. So Amazon, employer, and purchased an iPhone. So therefore that will be having a value of somewhere like 80,000 plus 18% GST. What is 18% on 18,000? 18% on 80,000, 14,400, and now he gives it as gift to the employee. Gift to the employee. What is the value of gift? Exceed 50,000 or does not exceed 50,000 per annum? Exceeds. As the value of gift exceed 50,000 per annum, is it supply or not a supply? It is supply. It is supply. It is supply, because you need to learn one point. Any employer giving gift to the employee, if the value of gift exceeds 50,000 per annum per employee, it is a supply. Okay, and therefore even though there is no consideration, it will become supply. Why? For gift no consideration is received, because there are some activities for which it will be treated as supply even though without consideration. One such activity is this. And can employer take ITC with respect to this? Yes. Why he can take ITC? As this gift becomes supply, so employer can take ITC. How much is the ITC that employer can take? 14,400 can be taken as ITC. And whether on that gift we need to pay GST? Yes, employer has to pay GST on the gift, and he can adjust this 14,400 for payment of the GST. Is it clear or not? Now, while taking the value, don't see plus GST, see this as the value. Value will always be excluding GST. While taking the value, don't add GST and check excluding the GST. Okay, so this is what the exception I was talking about. Generally, when goods are purchased and given as gifts or free samples, ITC not available. But if that gift or free sample becomes supply, then ITC will be available. That is actually given wide circular. So now that we will see. Yesterday while discussing 17 subsection 3, I have not discussed these notes. So come back to page number 113. Come back to page number 113. Have a look into note 2. Note 1 already we discussed. What is that? So apart from whatever we discussed as exempted supply, if a transaction is taxable for payment of GST, it will be taxable for ITC. If it is exempted for payment of GST, it will be treated as exempted for ITC. That one. Note 2 you see. Note 2 you see. Say I am a manufacturer and I am engaged in manufacture of one hair oil. So this hair oil is made up of lot of Ayurvedic herbs which is available in Amazon forest. Okay, and if you apply that hair oil, hair and all will go like will come. Okay, so therefore this particular hair oil, for manufacturing this I need raw material, input service and capital goods. So I am purchasing inputs, input service and capital goods. Let's take the numbers. Okay, so write down inputs is 1 lakh, 1 lakh plus 12,000. Okay, then input service is 50,000, 50,000 plus 18,000, sorry 9,000 GST, and capital goods is 1,50,000 plus 18,000 GST. So I have purchased 3 inputs, input services and capital goods to make the finished goods. Okay, now in that case, this finished goods, what I will do, I will not fully sell, because first in order to launch this product, to make this product hitter, I need to give it as free samples and all. So what I need to do, I will be having lot of YouTubers. So these YouTubers will be putting lot of vlogs, content and all. So I will be sending it free to them. So and I will ask them, so it is free for you and you need to speak something. Suddenly, something related to hair should come. There you should tell, use this hair oil. I am using this hair oil only, like that. How many videos you would have seen like this, correct or not? And this is called as YouTube promotion they will be doing. So now in this case, what happens, I am giving it as free in order to promote my product. So finished goods disposed as gifts or free samples. What is the value of the finished goods that I have made? I made the value of finished goods, which is 10 lakhs worth of finished goods I have manufactured. In this 10 lakhs worth of finished goods what I manufactured, I have given 2 lakhs worth of finished goods as gifts or free samples. You understood the situation here? I purchased 1 lakh raw material plus GST 12,000, 50,000 input service plus GST 9,000, 1,50,000 capital goods plus 18,000 GST, and using these 3 I made some finished goods. The value of the finished goods manufactured is how much? 10 lakhs. In that 2 lakh worth of finished goods I am giving as gifts or free samples. Now in this case, can I enjoy the full ITC? No. What does that say? What is the point they are telling? You treat this disposed as gifts or free samples as exempted supply. Why you should treat as exempted supply? Actually it is not a supply. Actually it is not a supply, but you treat it as exempted supply. So they are telling it through a CBIC circular. Okay, and why it is not a supply? Because there is no consideration for this, and even it will not come under the other points of 7(1)(c). Due to that reason, it is not a supply. Right now, you remember this is not a supply. Manufactured goods disposed as gifts or free samples is not a supply, because in case of 7(1)(c), 7(1)(c) talks about the activities, even though without consideration, treated as supply. Okay, so we have section 7. What does section 7 deals with? Section 7 deals with supply, meaning of supply. In that section 7 meaning of supply, we have subsection 1 clause C, which says that following activities, even though without consideration, it will become supply. Okay, what are those activities? D, R, I, P, drip. Okay, so these are the activities even though without consideration. Activities without consideration, activities without consideration is supply. Okay, so then whether you need to pay GST on this? Yes. What is the D point? Disposal of business asset. Disposal of business asset. So I purchased a business asset, I purchased a AC, I purchased furniture, etc. So that is my business asset. That business asset I am disposing of. Okay, means with consideration or without consideration? Or without consideration, freely I am giving. Okay, on which ITC is availed. On which ITC is availed. Means on purchase of this business asset, I avail the ITC. For example, I purchased the AC. On that AC, I have paid GST and I took that as ITC. Now this AC, I have donated to one old age home. Now in that case, it will become supply. Why it will become supply? Disposal of business asset, whether ITC availed or not on that asset, yes. So it will become supply. Second one, related party transactions. Related party transactions, including transactions between distinct persons. Including transactions between distinct persons. Between distinct persons. So there are some related persons and distinct persons. Distinct persons refers to branch, one branch to the other branch, like that. And there are some related party transaction. Between them, if there is any transaction, even though without consideration, it will also become supply. Then I for import of services. Import of services from a related person. From a related person or other establishment located outside India, or other establishment located outside India. So therefore, I am importing services from a related person, or I have establishment outside India, from them I am importing some services. So that will also be coming under 7(1)(c), even though without consideration. Then P for principal agent transactions. Any transactions that takes place, principal agent transactions with respect to goods. So any transaction involving goods between principal and agent is supply under 7(1)(c). In these four cases, DRIP, what is common? That there is no consideration, even though these activities will become supply and chargeable to GST. Okay. Now, what is the example that we saw? I purchased the raw material, input, service and capital goods and made shampoo or hair oil. That hair oil I am distributing as free samples. Will it come under D point? Is that hair oil my business asset? Yes. Finished goods is my business asset. Concentrate, please listen. Finished goods is also my business asset, because will the finished goods be shown in the asset side of the balance sheet or not? Is it an asset? Current asset, na? So it is also a business asset. And is it disposed of? Yes. For consideration or without consideration? Without consideration. But whether I have availed ITC on the hair oil purchase, I am not purchasing hair oil, I am making hair oil, I have not availed ITC. You got it? Disposal of business asset on which ITC is availed is supply. Correct only, pa. But that is my business asset which I did not buy. I made it. When I made it, there is no ITC availed on that. That's why it is not a supply. Now you understood why this disposal of business asset is not a supply. You got it? Now, but what does the circular says? You treat it as exempted supply. Now you tell me, how much is the proportionate ITC available? What is the ITC that is available in this case? ITC, proportionate. What is the proportionate ITC that is available? Proportionate ITC available. How much is the proportionate ITC available? Come on. 31, 200. How? 12 plus 9 plus 18. Total how much? 39,000. 39,000 into what by what, pa? 8 by 10. Very good. Taxable divided by total. Because if this 2 lakhs will be treated as exempted, na, then what is taxable portion? 8. 8 by 10. So 39,000 into 8 by 10. How much? 31,200 will be taken as the proportionate ITC available. Are you getting this? Now, one more point you remember now. What is that? If disposal of goods as gifts or free samples is not a supply, then proportionate ITC related to this inputs, input service, capital goods present in this gifts and free samples, we need to reverse. Means we should not take that as ITC, remaining ITC only we need to take. Okay. Then next one, you see third note. So a person purchased some goods and he given it as gift along with another product. Usually you'd see this Kinder Joy as an example. Kinder Joy, usually what they do is that the sale of Kinder Joy basically depends upon the gift what they are giving. Had Kinder Joy stopped giving gift along with the chocolate, no kid will purchase that Kinder Joy. They are purchasing it only for the sake of the toy, literally. Okay. And now what Kinder Joy will do? They make the chocolate and they purchase one toy and give the toy along with the Kinder Joy as a product. Now in this case, can they take ITC on the toy purchased? Generally purchased goods given as gifts or free samples, ITC not available, am I right? But here the chocolate and the toy will become as a composite supply, because this two is together as one product now. Are you getting this? So due to that reason, as invert supply given as gift is now covered under supply, composite supply. So can they take ITC with respect to that gift purchased? Yes, that is this. So this product plus invert supply given as quantity discount. You just write down there toy. Okay, toy purchased, and supplier Kinder Joy. Okay, so Kinder Joy is an example. So in this Kinder Joy, what will happen? This toy purchased is given as gift along with the product, correct? Now on this toy purchase, can they take ITC? Yes. Why they can take ITC? Because this toy along with chocolate has now become a composite supply. Due to that reason, they can take ITC. Can you remember this point, Pa? Then next, fourth one you see. Fourth one is a trader. A trader purchasing some invert supply and giving it as gifts or free samples. Okay, and at the time of purchase of this, they have taken the ITC. Usually, some supermarkets, what they do, if you buy for 1000 rupees, you will get 1 kg sugar free. If you buy for 2000 rupees, you will get 1 liter oil free. Like that, they will be making offers. Okay. Now in this case, while purchasing the sugar, they don't know they are going to give it as gifts or free samples. So they would have availed ITC, correct or not? So sugar packet purchased. At the time of purchasing the sugar packet, whatever GST they paid, they would have availed as ITC. Now they are distributing it as gifts or free samples. So disposal of business asset on which ITC availed, it will become supply under 7(1)(c). Okay. So these are the points which is connected to gifts and free samples. Now what is the conclusion that you need to remember? Simple pa. If gift becomes supply, then ITC available on the goods purchased. If gifts or free samples is not a supply, ITC not available on the goods purchased. Is it clear? So that is about that gifts and free samples. And with this, blocked credits we have completed. Section 17 is fully over. Now, directly sometimes we will get a question on section 17. Sometimes in a normal question, this 17 will be connected and they will be asking, like they will ask you to compute the net GST payable. In that net GST payable, we will have some invert supplies. In that invert supplies, some blocked credits they will be giving. Like that it will be tested. Now look into the last section in this chapter, that is section 18, input tax credit in special cases. In this, we have 5 sections. 18 subsection 1 and 2 talks about availment of ITC on closing stock. What is this availment of ITC on closing stock? So I am just giving you a diagrammatic presentation. You don't have to write down, but just for explanation I am doing this. So I commenced business on one date. Whether I need to register immediately as and when I commence business? No. So whenever I commenced business, I don't have to register immediately. I am liable to register at a future date when, as and when my aggregate turnover exceeds threshold limit, I need to register, correct? As and when my aggregate turnover exceeds threshold limit, I will be liable to register. Understood up to this? Sir, I commence business, sir. On one fine day, my aggregate turnover exceeds threshold limit, so I am liable to register. What is that? Say 110, 1st October, I am liable to register. Now, whenever I am liable to register, I need to pay GST on this outward supplies, correct or not? Whatever supplies that happens up to 110, should I pay any GST on that supplies? No. But whatever supply that happened from 110 thereafter, should I pay any GST on that? Yes. So now here what they are telling is that as on 39, there will be some closing stock, correct or not? there will be some closing stock as on 39. Using that closing stock only, you will be making outward supplies from 110. So on that closing stock, you would not have taken ITC. Why you would not have taken ITC? Because before 110, you were an unregistered person. What does section 16 subsection 1 first point says? Only a registered person can take ITC. Unregistered person cannot take ITC. So you were an unregistered person. As you were an unregistered person at the time, on this closing stock, whether you would have taken any ITC or not taken any ITC, not taken any ITC, but using this closing stock only, you will make supply after 10, correct or not? And you have to pay GST on that sales. I had closing stock yesterday, using that closing stock only I will make sales from today, na? Now I have to pay GST from today. So they are telling on that closing stock, you avail ITC. So whatever GST that is paid on that closing stock, okay, you avail as ITC, avail ITC. That is about section 18 subsection 1 clause A. What does section 18(1) clause A says? A person who is liable to get registered. And what is the time limit within which you need to make application for registration? The application for registration should be made within 30 days. Application for registration. So application for registration, what is the time limit from the date you are liable to get registered till the time you make application for registration? What should be the time? Within 30 days. Okay. Only when you make application for registration within 30 days, then only this provision will be applicable. What does this provision says? Whatever is the closing stock, on that closing stock, GST is paid, that you avail as ITC. So when you will avail as ITC, you will avail it as ITC after the date you get the registration certificate. Avail ITC after registration certificate obtained. After registration certificate obtained. Now what is the meaning of that closing stock? Closing stock could be either raw material as such or WIP or FG, correct? Either it can be inputs or it can be WIP or it can be FG. Okay. Now input you purchased, but WIP you generated. So therefore what you purchased in WIP? Inputs. What you purchased in WIP is inputs. Again in FG you made, but what you purchased in FG is inputs. So on these three inputs, GST paid can be taken as ITC. What are the three inputs? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Which date? Before the date you are liable to get registered. On these three inputs, whatever GST you have paid, you can avail it as ITC after registration certificate is obtained. Is it clear or not? After registration certificate is obtained, the GST paid on these three inputs you can take as ITC. Provided you have to get registered within what time? 30 days from the date you are liable to get registered. Okay. So therefore you have to make application for registration within 30 days. That is the point here. So what does 18 subsection 1A says? A person, concentrate, a person who is liable to get registered is making application for registration within 30 days. A person who is liable to register is making application for registration within 30 days. Can avail ITC of what? GST paid on what? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. Which date? Before the date he is liable to get registered. Got it? Before the date he is liable to get registered. This is about 18(1)(a). You can see here situation, liable to get registered and applied within 30 days. What is the closing stock? Inputs in stock, inputs contained in WIP, inputs contained in FG in stock. On which date? Immediately before the date he is liable to get registered. One important point here is that matching is not required. What does it mean? Means it need not be reflected in your 2B. Are you getting this? Generally, to take ITC, everything should be reflected in 2B. But in this case, it need not be reflected in 2B. Even though it is not reflected in 2B, you can take ITC with respect to this. Then, this is about 18.1a. What is 18.1b? What is the difference between 18.1a and 1b? See there, 18.1a, you are liable to get registered and you make application for registration within 30 days. But 18.1b, voluntarily you are getting registered. But both cases, the closing stock is same. What is that? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. But which date? Before the date you get the registration certificate. Got it? Immediately before the date of registration. See, base you remember, and thereafter you just remember the differences. What is the base? 18.1a, you know na? A person is liable to get registered. He made application for registration within 30 days. He can take ITC on inputs as such held in stock, inputs in WIP, inputs in FG. Which date? Before the date he is liable to get registered. Matching required or not required? Not required. What is the difference from 18.1a to 18.1b? In 18.1b, so it is voluntarily getting registered, everything is same, and the closing stock date will be before the date they got the registration certificate. Now, what is the difference between 18.1a and 18.1c? 18.1a and 18.1c. 18.1a is liable to get registered, made application for registration within 30 days. But 18.1c is you were under composition scheme. Now you are migrating to normal scheme. So when you were under composition scheme, you would not have taken ITC. Now you are coming into normal scheme, so you can take ITC. And what is the meaning of closing stock? Extra one more point we have. Inputs as such held in stock, inputs in WIP, inputs in FG. What is the extra that we have here? Capital goods. And one more difference is also there. Matching is required, which means whatever you purchase, it should come in GSTR 2B. And which date you need to take closing stock? Before the date of migration. That is from composition scheme to normal scheme. Then what is the difference between 18.1c to 1d? 18.1c to 1d, everything same, 1c to 1d except the situation. What is the situation? 18.1d is previously you were making exempted supply, now you are making taxable supply. Now also you can take ITC on the closing stock. Whatever is the meaning of closing stock for 18.1c, the same is applicable. Which date closing stock should be taken? Before the date there is a conversion from where to where? Exempted supplies to taxable supplies, and even here matching is required. Okay, now don't see this, just listen. Answer my question. What are the 4 situations where you can avail ITC on closing stock? Liable to register and made application for registration within 30 days. Number 2, voluntary registration. Number 3, composition scheme to normal scheme. Number 4, exempted supplies to taxable supplies. Very good. And what is the difference between first 2 and next 2? First 2 and next 2. First 2, matching not required. Next 2, matching required. First 2, no ITC on capital goods. Next 2, ITC can be taken on capital goods. Done. Next, what is the difference between first 2? First 2, liable to register and made application within 30 days. Second, voluntary registration. Then next 2, composition scheme to normal scheme, exempted supplies to taxable supplies. Clear? Now, in all these closing stocks, it should have been purchased within 1 year prior. Means capital goods are the inputs on which you want to take ITC. As per 18 subsection 2, you see, the above closing stock should have been purchased within 1 year prior. Suppose if the stock is purchased 2 years, 1.5 years before, you cannot take ITC on that. Means on obsolete stock or non-moving stock or old capital goods, they are not giving. Only the latest ones, within 1 year backwards only you can take ITC. Then next, ITC with respect to GST paid on inputs can be availed as ITC. So whatever GST you paid on inputs here, so fully you can take that as ITC. But capital goods, you should not take fully the GST paid. Why? Because capital goods concentrate. Capital goods will be depreciated. So when capital goods are depreciated, full GST paid, you should not take, na, correct or not? Then how much you will take after providing for the depreciation? How much is the depreciation? 5% for every quarter or part thereof. See there. In case of capital goods, ITC shall be GST paid minus 5% into number of quarters or part thereof from the date of purchase till the date of migration or conversion. Now, how to count this number of quarters? For example, you purchased on 8th of March 2023 and conversion date converted on say December 15th 2023. So tell me what is the number of quarters? Number of quarters. 3 quarters or 4 quarters. You purchased on 8th March 2023 and you converted on 15 December 2023. How many quarters here? 4 quarters. How 4 quarters, sir? 8th March 2023 you purchased, correct? So you need to take March also as 1 quarter. January, February, March, that is 1 quarter. April, May, June, July, August, September, October, November, December. So that is also taken. So here calendar quarters you will take. So calendar quarters are what? Jan to March, April to June, and July to September, October to December. In this quarter, even one day if it comes also, you will count it as 1 quarter, because the words used there is quarter or part thereof. So number of quarters will be 4 quarters. For every quarter, how much we need to reduce? 5%. So 5% for every quarter or part thereof from the date of purchase till the date of conversion. Okay. Then the remaining ITC you will be taking. Then next, how to take this ITC? Usually, what is the way in which we can avail ITC? One return we will file. Which return? GSTR 3B. Yesterday only we saw availment of ITC, utilization of ITC, reversal of ITC, everything will happen in GSTR 3B. But this ITC we will not take in 3B, we will file one declaration. What is the declaration? Form GST ITC 1. And this form GST ITC 1, what is the time limit within which it should be filed? Within 30 days from the date you are eligible for the ITC. When are you eligible for this ITC? If you are now only getting registered, whenever you get the registration certificate. Suppose if you are converting from composition scheme to normal scheme, whenever you are converting from that date. You understood? So from that date within 30 days or extended time, this ITC 01 should be filed. What does this ITC 01 contains? Details of inputs and capital goods, how much ITC you will be taking, and whether it should be certified by any authority. Yes. Who should certify this? CA or CMA. When if the claim of ITC exceeds 2 lakh rupees. This declaration shall be certified by a practicing CRCMA if the claim of ITC exceeds 2 lakh rupees. Understood or not? So these are the points that we have. What if the claim of ITC does not exceed 2 lakhs? No need to certify. Self-certification, you can file this form. The moment you file this form, whatever GST that you have mentioned, that you will be getting. That is with respect to 18 subsection 1 and 18 subsection 2. And these points are common. These points are common for all the cases, 18, 1A, 1B, 1C, 1D, for all the cases, this notes is common. Now we are moving on to 18 subsection 3. What is this? Transfer of ITC. So whenever I transfer the business to you, whatever is the ITC that I have in my business, that can be transferred to your business, because I told you long back that there is no death to input tax credit. The moment we have input tax credit in our ledger, the moment when I transfer the business to you, even ITC also will be transferred to you. Okay. And provided this transfer of business is with specific provision of transfer of liabilities. For example, I have assets of 10 crores, liability 2 crores. I sell assets, repay the liabilities 2 crores, and remaining assets I am transferring to you. Is it transfer of business? No. Transfer of business means what? As it is. As a going concern, means assets also I should transfer to you, liabilities also I should transfer to you. Then only it will be called as transfer of business. That's what you would have learned now. Amalgamation in the nature of merger, amalgamation in the nature of purchase. All risk and rewards incidental to the assets and liabilities should be transferred. Okay, that is only called as transfer of business. So, whenever there is a transfer of business, what is called as transfer of business? Come on, transfer of both assets and liabilities. That is called as transfer of business. In the transfer or electronic credit ledger, whatever ITC is there, that can be transferred to the transferee's electronic credit ledger. For that, one form needs to be filed. What is that form? Form GST ITC 02. That is the form that should be filed. And a certificate of CA/CMA is required. For what reason? That this business is transferred with liabilities, like that CA/CMA should certify. What is the first form that you remember? ITC 1. What is the purpose of this ITC 1? To avail the ITC on closing stock. Whether CA/CMA certification required? Yes, if the claim of ITC exceeds 2 lakhs. What is ITC 2? Transfer of ITC from one person to another person. CA/CMA certificate required? Yes, always that is required. Then, now look into the next point. In case of demerger, in case of merger, there is no problem that two entities are now merged into a single entity. So therefore, whatever ITC that is there, that will go to this entity. For example, A Limited and B Limited is merged into AB Limited. A Limited and B Limited is merged into AB Limited. So therefore, whatever is the ITC in A Limited 1 lakh and ITC that is in B Limited 50,000, both will go to AB Limited. So the ITC will be 1,50,000. You understood this? Whereas, if there is a demerger, what is a demerger? Say AB Limited is split into A Limited and B Limited. AB Limited is split into A Limited and B Limited, and this AB Limited is having an ITC of 1,50,000. AB Limited is having ITC of 1,50,000. How the ITC can be shifted to this A Limited and B Limited? Now we need to see the assets ratio. What is the assets ratio of A Limited and B Limited? Say A Limited is having 100 crores as assets and B Limited is having 80 crores as assets. In this ratio, the ITC also will be transferred. So how much ITC will be given to A Limited? 1,50,000 into 100 divided by 180. Whereas B Limited will be 1,50,000 into 80 divided by 180. Are you understanding this? So in this ratio, the assets ratio, we need to transfer the ITC. So how much ITC will be given to A Limited? 1,50,000 into 100 by 180. 83,333, and here it will be 60,667. So this is the ITC that will be transferred to these two entities. Is it clear or not? So now what is the provision that you need to remember? In case of demerger, in what ratio the assets, what ratio the ITC should be transferred? In the ratio of assets. And that assets, whether ITC taken or not on that assets, total assets you need to take. But they use the word net assets. What is that net assets? Total assets minus ITC. Because ITC only we are transferring. Are you getting? ITC only we are transferring. See all the assets except ITC, because ITC is what we are calculating now. Then transfer or change in ownership of business will include transfer or change in ownership of business due to death of sole proprietor. So what happens here? Say there is one sole proprietor. He is dead. Now his business is carried on by his successor. Okay. Now in that case, can the successor continue with the same registration of his father? No, not possible, because every GST registration is connected to permanent account number. So the moment when the father dies and son take over the business, the son has to get a new registration. So therefore, because I told you every GSTIN will have a permanent account number. So whenever there is a succession that happens, so the son will get a new registration. So in this case, can the father's ITC be transferred to the son? Yes. So father's ITC can be transferred to son. That is what? Transfer or change in ownership of business will include transfer or change in ownership of business due to death of sole proprietor. Then one more point, transferor and transferee should be in the same state. What does it mean? For example, I am transferring my business. I am located in Tamil Nadu. You are located in Karnataka. Can I transfer the business to you? Yes. Business I can transfer. Can I transfer the ITC to you? No. So in case of transfer of business that requires transfer of ITC, where the transferor and transferee should be in the same state. This is actually a restriction as per the portal that is given, not given in the law. So this point may or may not be tested, but this point is also there. This is about section 18.3. There is one more point in 18.3. We'll take a break and then we will continue from there. Okay. So far what we have seen is section 17 we completed fully, and section 18 also, subsection and subsection 2. Take a break for 15 minutes, then we will continue with the remaining portion. So we discussed about 18 subsection 3, which says that whenever there is a transfer of business, the unutilized ITC will be transferred from the transferor to transferee. The same 18 subsection 3 is also made applicable in case a single registration of a person is converted into multiple registrations. Say for example, within the state, I can either have a single registration or separate registration with respect to my place of business. Example, in Tamil Nadu, say I have 4 businesses, that is in Chennai, Coimbatore, Madurai and Salem. With respect to this 4 place of business, either I can have a single registration or I can have separate registration with respect to each place of business. Now so far I have been under single registration. Now it got split into 4 registrations. In this case also, from single registrations to 4 registrations, the ITC can be transferred. That is this, when single registration gets converted into multiple registrations within the state, then also ITC against the single registration can be distributed to multiple registrations by filing one form. What is that form? ITC 2A. ITC 2A. And again, in what ratio we need to transfer the ITC? In the assets ratio. Now see this, transfer of ITC in case of demerger. So we have few illustrations. These are some illustrations which are not tested. So this can be asked in exam. That is, there is a company XYZ Limited. This XYZ Limited is having business in Madhya Pradesh and Uttar Pradesh. And the total assets of this XYZ Limited is 60 crores and 40 crores. So total 100 crores is the total assets. And what is the total ITC that they have? In Madhya Pradesh they have 4 crores and in Uttar Pradesh they have 6 crores. So total 10 crores they have ITC. Now what happened is that this XYZ Limited is split into 2 companies, ABC Limited and XYZ Limited. Now in that case, in what ratio the assets, like the ITC will be transferred? In the assets ratio. What is the assets of ABC and XYZ? Total assets in Madhya Pradesh is 60 crores. Now this 60 crores, how is it divided? 30 crores for ABC and 30 crores for XYZ. What is the ratio? 1:1. So this 4 crores also you need to transfer in 1:1 ratio. So 2 crores for ABC and 2 crores for XYZ. Is it clear? Same way, Uttar Pradesh. Uttar Pradesh, if you see, total assets is 40 crores. How that 40 crores is divided between ABC and XYZ? So that is ABC 10 crores and XYZ will be 30 crores. So what is the ratio of the assets? 1:3. So therefore this 6 crores also you need to divide in 1:3. So 6 crores into 1/4. How much? 1.5 crores, and 6 crores into 3/4, that is 4.5 crores. So therefore, how you need to transfer the ITC? In the ratio of assets. And while taking the ratio of assets, don't take assets across the country, take it assets state-wise. State-wise, how the assets are transferred? If you see overall assets, 100 crores, 40 crores is given to ABC, 60 crores is given to XYZ. Don't take it in that ratio. See it state-wise assets ratio and you need to divide. That is this illustration. Then next. Illustration 9. Transferor is XYZ Limited. Transferee is ABC Limited. Now, XYZ Limited is having business in Madhya Pradesh, Uttar Pradesh and Maharashtra. A Madhya Pradesh business is transferred to ABC Limited Madhya Pradesh. Uttar Pradesh business is transferred to ABC Karnataka. Maharashtra business is transferred to ABC Maharashtra. We had studied one condition. What is that? transferor and transferee should be in the same state. But in this case, if you see Uttar Pradesh is and business is transferred to Karnataka, is transferor transferee in the same state? No. So can the ITC be transferred or cannot be transferred? Cannot be transferred. But if you see Madhya Pradesh to Madhya Pradesh, ITC can be transferred. Maharashtra to Maharashtra, so ITC can be transferred. Then next illustration 10. So we know that we have to transfer the ITC in the assets ratio. But whether each head should be transferred in assets ratio or overall all heads we can transfer in assets ratio. I mean to say CGST, SGST, IGST like that. Every head we need to see assets ratio or overall we can transfer. Overall we can transfer. We don't have to see head wise. For example, you look into this illustration. XYZ Limited Maharashtra is demerged into ABC Limited and PQR Limited Maharashtra. What is the ratio? Assets ratio 4:6. Means 4/10 is for ABC and 6/10 is for PQR. Now see how much is the GST ITC they have. CGST 6 crores, SGST 6 crores, IGST 4 crores. What is the total that they have? 16 crores. Is it clear? Now, whether 6 crores into 4/10, 6 crores into 4/10, 4 crores into 4/10, should they follow? No, they don't have to do that way. Headwise, they don't have to do. What is the total ITC? 16 crores. 16 crores into 4/10, 6.4 crores, and 16 crores into 6/10, 9.6 crores. This much they need to transfer. But within the head, they can decide. Within each they can decide. So what they are doing, IGST fully they are giving to PQR. They are not giving anything to ABC. SGST fully given to ABC. They have not given anything to PQR. Like that can they follow? Yes. Headwise they can follow, but the total should be equals to 6.4 and 9.6. Is it clear or not? Headwise you can divide in any way, but the overall ITC should be in this ratio. For that only I gave you this illustration. Like this, any question can be tested. Now the next area that we have in 18 is 18 subsection 4 read with 29 subsection 5. Actually this 18 subsection 4 is an opposite of whatever we saw in 18.1c and 18.1d. 18.1c is what? You are under which scheme? Composition scheme, and you will be migrating to normal scheme. Now reverse, you will be going from normal scheme to composition scheme. Okay, then again 18.1d, what is it we have seen? We were making exempted supply. Now we started making taxable supply. Now reverse, taxable supply to exempted supply. Say this, composition scheme to normal scheme, and then we have taxable supplies to exempted supplies, then cancellation of registration. In these three cases, we will reverse the ITC on closing stock. So far we have availed the ITC on closing stock. Now it will be reversal of ITC on closing stock. In which cases? For three cases, can you tell me? Availment of ITC on closing stock is 4 cases. Reversal of ITC on closing stock in 3 cases. What is that? Normal scheme to composition scheme, taxable supplies to exempted supplies, and cancellation of registration. In these 3 cases, again, whatever inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock, on these 3 inputs, how much ever ITC you avail, that much you need to reverse. Reversal means what? Reduction. You have to reduce. Then, in case of capital goods also, you need to reverse ITC, but not full. You need to take total ITC on capital goods divided by 60. What is the logic behind 60? Life of capital goods is taken as 5 years. If you remember, in the previous point I told you we need to give a depreciation 5% for every quarter or part thereof. So 5% for 1 quarter means 4 quarters it will be how much? 20%. For 5 years it is how much? 100%. Which means what is considered as the life of the capital goods? 5 years. 5 years or also 60 months. Either 5 years or 60 months. So here what they are telling, while you are reversing the ITC on capital goods, take the total ITC on capital goods divided by 60. So you will get months. And what is the balance life? Means how many months you have used. So see the remaining life. For that remaining life you reverse. Why you need to reverse? Because you are no longer eligible to enjoy the ITC. So you need to reverse. For example, 24 months we used. 36 months we need to reverse. So total ITC divided by 60 into 36 months we need to reverse the ITC. Are you getting this for capital goods? ITC reversed equals to ITC availed divided by 60 months into balance useful life. Then some additional points. Inputs and capital goods can be purchased anytime. But in case of 18(1)(c) and 18(1)(d), what is that we have seen? The inputs and capital goods should have been purchased within 1 year prior. But here it can be purchased anytime. While like this difference, there we avail the ITC on closing stock, which is lost to the government, gain to us. Whereas here, we are reversing the ITC, lost to us and gain to the government. That's why no time limit. Okay. Inputs and capital goods can be purchased anytime on which ITC avail. Next, suppose there 18(1)(c)(1)(d), if there is no matching, we cannot take ITC, correct or not? 18(1)(c)(1)(d), matching is required. But while reversing the ITC on closing stock, no matching. Even if it is not matched with the, supplier's GSTR1, it's okay, you reverse. What if invoice is missing? Then also you reverse. Okay. How to reverse? I don't know how much is the value at which I purchased. Okay, take the market value as on today and you reverse that much. So, if ITC not availed on such inputs and capital goods, then reversal shall not arise. And say this, if capital goods are purchased before 5 years, on which ITC is availed, reversal shall not arise. Why? What is the life of the capital goods? 5 years. 5 years over, so you don't have to do anything. If invoice pertaining to such inputs not available, so if invoice is not available, what you need to do? You need to take market value as on the date, closing stock date, and it should be certified by a practicing CMA. And what is the form that we have? ITC 3. So what are the forms that we have come across? ITC 1. ITC 1 is for what? Form GST ITC. ITC 1. For what purpose? Availment of ITC on closing stock. And certification required? Yes. From CSMA if ITC exceeds, and time limit within 30 days. So ITC 1 is for availment of ITC on closing stock. Mainly for MCQs this will be helpful. Then certification required or not required? Required. CMA if ITC exceeds 2 lakhs. Time limit 30 days from the date of eligibility. Within 30 days. So as and when you file this form, immediately you will get the ITC and you can adjust with your liability. Then ITC 2, what is the purpose? Transfer of ITC in case of transfer of business, correct? Transfer of ITC in case of transfer of business. And certification, always CA or CMA, always the certification is required. And what is the time limit? Not given. There is no time limit. Whenever you want to transfer the ITC, you can transfer that. Okay. Then next, ITC 2A. What is this ITC 2A? Transfer of ITC only. This is also. But when? Transfer of ITC in case single registration converted to multiple registrations. And certificate required or not? Yes. When? Where we studied that CA/CMA certificate required, not required. For 2 only we studied, not for 2A. It's not required. And time limit not given. Then next, ITC 3. ITC 3 is for what? Reversal of ITC reversal of ITC on closing stock. Reversal of ITC on closing stock. And whether it should be certified by CACMA? Yes. When? If invoice replaced with what? Market value. If invoice replaced with market value, then we need CACMA certification. And any time limit is given? Not given. They have not given any time limit in this place. So these are the various forms and it can be tested in MCQs. That's why we need to know this. These are the only forms that you have in input tax credit chapter. Beyond this, we don't have anything else. Done? So, in case of reversal of ITC on closing stock, what we need to do is that we should find out how much is the ITC that we have availed on inputs as such held in stock, inputs in WIP, inputs in FG, even on capital goods. But on capital goods, total ITC availed divided by 16 to balance left, this much we need to reverse. Okay. And when we are doing the reversal of this, suppose if you have sufficient balance in ITC, you will reduce from that. If you don't have sufficient balance, what you will do? You will pay. So if there is balance in ITC after reversal, still you have some balance in ITC after reversal, what will happen to that balance? That will be lapsed. For example, total ITC balance that you have is 1,50,000. Now how much is the ITC that is on the closing stock is 1 lakh. So from 1,50,000 you will reduce 1 lakh. Still how much you have? 50,000, that will be lapsed. Then suppose if there is a shortfall, for example, ITC that you need to reverse is 1 lakh, but you have only 75,000 as ITC balance. So from 75,000 we will adjust this. Still what is the shortfall? 25,000 that you need to pay out of your pocket. That is this. If there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. And this computation you need to make separately for CGST, SGST, UTGST and IGST. So these are the points that we have for 18 subsection 4. Now you may get a question like this related to 18. So this is a very good question. S&P Private Limited, Coimbatore, exclusively manufactures and sells product Z, which is exempt from GST-wide notification issued under relevant GST legislations. The company sells Z only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year. Owing to the growing demand for the product, the company decided to increase its production capacity and purchase additional machinery for manufacturing Z on 1/7/2020. The purchase price of the capital goods was 20 lakhs exclusive of GST at 18%. Okay. Now, in this case, what happened? So, with effect from 1/11, so exemption available on Z was withdrawn. So, up to 1/11, what happened? Product Z was exempted. With effect from 1/11, so the product became taxable. Okay. Then, so withdrawn and by central government and GST at 12% was imposed thereon. The turnover of the company for the half year ended 30/10 was 45 lakhs. So what is the maximum threshold limit under GST for registration? 40 lakhs. Their turnover was already 45 lakhs. So definitely are they required to register or not? Yes. Why they are required to register? Because with effect from 1/11, the product became taxable. Why up to 1/11 they are not required to register? Because they are making only exempted supplies. A person who is making only exempted supplies is not required to get registered. That's why. Then the board of directors of S&P Private Limited wants to know whether they have to register under GST. What is your answer? Whether they are liable to register or not liable to register? See, up to 1/11, they were making only exempted supplies. So they are not liable to get registered because as per section 23, a person who is making only exempted supplies is not required to get registered. However, with effect from 1/11, their aggregate turnover already exceeded the threshold limit and the product became taxable. So they are liable to get registered. That is clear? First question. Second question. Whether they can take ITC on machinery purchased? If yes, how much credit can be availed? Can they take ITC on the machinery purchased? So see, the closing stock date. As on closing stock date, what is the closing stock date? 1st till November is the date on which exempted became taxable, correct? When exempted becomes taxable, we need to see the closing stock date. What is that? 31st October. As on 31st October, they purchased the machinery. Yes. Is it within 1 year prior? Check what is the date on which they purchased the machinery. 1/7/2020. So for October, is it within 1 year prior? Yes. So therefore, they can take ITC on capital goods, but full credit they cannot take. They have to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. What is the date of purchase? 1/7/2020. 1/7/2020 means it comes in which quarter? July, August, September, correct? Then October, November, December. So 2 quarters. 2 quarters should be reduced. 5% means 10% should be reduced. Remaining credit they will take. Okay? What okay? Wrong answer. This is not exempted supply becoming taxable. Actually, we are interpreting in the wrong section, 18(1)(d). Actually, we should refer to 18(1)(a). 18(1)(a), not 18(1)(d). Why not 18(1)(d)? 18(1)(d) you read. When 18(1)(d) is applicable, only a registered person whose exempted supply became taxable, correct? Registered persons exempted supply became taxable. That is what 18(1)(d). Is he a registered person here? No. So 18(1)(d) only we can take credit on capital goods. Am I right? 18(1)(a) where we have capital goods here. 18(1)(a) only applicable here because now only he is liable to get registered. Now only he makes application for registration. So in case of 18(1)(a) we don't have the credit on capital goods. Got it? So therefore, what is your answer in this case? Can he take credit on capital goods or he cannot take credit on capital goods? He cannot take credit on capital goods. Suppose if the question says, what if he was already registered as on 1/11? Then he can take credit on capital goods because applicable section will be 18(1)(d) and he can take credit after reducing 5% for every quarter or part thereof. Understood? Don't just blindly apply. So read the question properly and interpret it properly and write. Okay? So that is the answer for this. Then the last subsection, 18 subsection 6, 18(1) and 18(2), availment of ITC on closing stock. 18(3), transfer of ITC in case of transfer of business. And 18(4), read with 29(5), that is reversal of ITC on closing stock. Last section, last subsection, 18(6), that is I have purchased some capital goods. That capital goods, at the time of purchase, I took the ITC also. Now I am selling off those capital goods. When I am selling off those capital goods, they are telling we need to pay the GST as per 18(6). Why they have brought this? I will give you a scenario. You see, we purchased some capital goods. Okay, some capital goods we have purchased for 10 lakhs excluding GST. So we purchased some capital goods. What is the value of that capital goods purchased? 10 lakhs, and on this 10 lakhs GST is 1,20,000. We purchased this capital goods. Total we paid 11,20,000. Okay, and what we did is that we took the ITC with respect to this. This 1,20,000 we took ITC 1,20,000. Then what is actually our cost? What is actually our cost? 10 lakhs. 10 lakhs is our cost. What I will do is that I will sell it for, okay, this 10 lakhs capital goods. I am making a sale for 10,50,000. Will there be any person ready to buy this? Yes. Simple pa. I am purchasing an iPhone. Okay. You purchase iPhone. For me the cost is minus 18%. For you the cost is full price, correct? Because you are a unregistered person. I am a registered person. What I will do? I will buy for 10 lakh plus 1,20,000. Therefore my cost is 10 lakhs. But when I am selling to you 10,50,000, you are ready to buy. New, brand new. I have not done anything. You are ready to buy for 10,50,000. Why? If you rather buy directly, how much you have to pay? 11,20,000. Now how much you are paying? 10,50,000. Are you saving or not? Yes. Okay. But in this process, what has happened? I enjoyed a benefit. What is the benefit that I have enjoyed? 1,20,000. I will enjoy the benefit. Is it clear? And that's what they are telling. You don't take this way. You don't take this way because people will try to sell. Suppose if I am using it for some days, okay, sale after 1 year. Sale after 1 year. How much I am selling after 1 year? Say I am selling it for 8 lakhs. I am selling it for 8 lakhs after 1 year. Now what they are telling? See what is the balance ITC. How much is taken as the life of capital goods? 5 years. So how much is the depreciation that we need to give? 5% for every quarter or part thereof. 1 year means how many quarters? 4 quarters. 4 quarters into, so 5% means 20%. What is the ITC that you have availed? 1,20,000. How much is the ITC that we need to reduce? 20%. How we got 20%? 4 quarters into 5%. What is the remaining ITC you see? 96,000. Same way. So this I am just changing it to say 7,50,000. Okay. Now I am selling for 7,50,000 now. Now 7,50,000 into 12% you see. How much? 7,50,000 into 12%. 90,000. Now how much is the GST I need to pay? 90 or 96,000. They are telling 96,000 is the GST payable, whichever is higher. Why 96,000 I need to pay? Simple logic. Even though I am selling for 7,50,000, I have to pay 90,000, but I cannot enjoy the ITC because I used it only for 1 year. For 1 year ka ITC is what? 1 year related ITC is what? 20%. 20% only you can enjoy, remaining ITC you should not enjoy. Okay. Now tell me the provision. How much is the GST payable in case of sale of capital goods on which ITC availed? A. ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. Or B. What is B? GST on sale value of that capital goods, whichever is higher. Okay, again I am repeating. So much of the ITC availed on capital goods minus 5% for every quarter or part thereof, because the depreciation is what? 5% for every quarter or part thereof, means that much ITC you can enjoy. Remaining ITC you should pay, or GST on sale value, whichever is higher. Because directly they cannot say that way, because what if you are selling it for 8,50,000? What if you are selling for 8,50,000? Then 8,50,000 into 12%. How much 8,50,000 into 12%? 1,02,000. So 96,000 or 1,02,000, because government want whichever is higher, more money they want. So that's why 1,02,000. Okay. That is about this 18 subsection 6. So when 18 subsection 6 is applicable, normal goods are capital goods are capital goods, and capital goods on which ITC availed or not availed? ITC is availed. Now you are selling it. So ITC availed minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on the value of the capital goods, whichever is highest. Whichever is highest will be taken. However, in case of molds and dies. Molds and dies. What are these molds and dies? To bring a product into a requisite shape, they use this die. Okay. That then refractory bricks. Refractory bricks are used in, commercial kilns for heating the raw material. So that, and jigs and fixtures. These three goods: refractory bricks, molds and dies, jigs and fixtures, supplied as scrap, sold as scrap. Don't take A or B, whichever is higher, just to take B only. What is that B? GST on sale value. What are the three capital goods for which this is not applicable? Refractory bricks, molds and dies, jigs and fixtures. Jigs and fixtures are to hold the capital goods. Okay. So capital goods and all will be fixed to one structure na, that is known as jigs and fixtures. So these three capital goods, if it is sold as scrap, then always we need to take GST on the sale value. Okay. That is with respect to this. Look into this illustration in the next page. You purchased capital goods on 8/10/2019 for 10 lakhs excluding GST at 12%. They were disposed of on 5/5/2021 for 6 lakhs excluding GST at 12%. What is the GST payable? First, how many quarters are part thereof? 8/10/2019 to 5/5/2021. So 10 means October. So October, November, December, 1 quarter. Then again next year 2021, Jan, Feb, March, April, May, June. So 3 quarters. 3 quarters means how much we need to reduce? 15% we need to reduce. First you calculate what is the ITC. 10 lakhs into 12%. 1 lakh 20. Yeah. From 1 lakh 20 you reduce 15%. 1 lakh 20. So here, sorry here, 2021, I thought 21 means even it is 4 more quarters we need to add, because in 2019 1 quarter, then 2020 full year, so therefore 4 quarters, and thereafter 2021 will be, so 2 quarters, so 4, 5, 6, 7 quarters. So 7 into 5 how much? 35% we need to reduce. So 1 lakh 20 into 35%. Why? Because ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. So therefore 7 into 5, 35%, 1 lakh 20 minus 35%, how much you got? 78,000. And what is the sale value? 6 lakhs. 6 lakhs into 12%, how much? 72,000, whichever is higher. Which is higher? 78,000. Now see the first part. What will be your answer if such goods are not capital goods? Come on. What will be your answer if the goods are not capital goods? 18.6 not applicable. Then what we need to do? Normal sale value. What is the sale value? 6 lakhs into GST rate 12%. So that is 72,000 you need to pay GST. Understood? Then next, what will be your answer if such capital goods are disposed of without consideration and the value determined is 4 lakhs? What is this? Whenever there is no consideration, we need to determine the value as per rules. That will be usually the open market value. So for the recent attempt, this has been tested. May 23 exam, they tested open market value like the first question itself. So what is open market value? In the absence of transaction value, means whenever you don't have the value, so of sale price, etc., then you need to take open market value. How much is the open market value given here? 4 lakhs. Now again do the recomputation. A will be ITC availed minus 35%, same 78,000. B, instead of sale value, you take the open market value. What is the open market value? 4 lakhs. So 4 lakhs into 12%, 48,000. Which is higher? 78,000 only. Then what will be your answer if such capital goods are disposed of without consideration and value cannot be determined as per rules? Then B will be 0. Understood? But A will be 78,000. So whichever is higher is 78,000. Then what will be your answer if such capital goods are sold after 5 years? A will become 0. How A will become 0? Life of the capital goods is 5 years. So 5% for every quarter or part thereof if you depreciate. So A will become 0. B will be GST on sale value. What is the sale value here? 6 lakhs. 6 lakhs into 12%, 72,000. Whichever is higher. Then there is one latest amendment here, that is, if the place of supply is outside India, for a transaction, place of supply is outside India, but the transaction is charged to GST. Okay. For example, in case of transportation of goods from India to outside India, you are in India, I am also in India, I am transporter, you are my client. You are asking me to transport the goods from Chennai to Singapore. I transported the goods. I collected some freight from you. This will be chargeable to GST. Now on this, can you take ITC is the question. Yes, you can take. Even though the place of supply is outside India, anywhere we studied as a restriction that if the place of supply is outside India, recipient cannot take ITC, like that we studied. No, which means can the recipient take ITC? Yes, that is the circular. So if place of supply is outside India, can recipient in India avail ITC with respect to the same? Just remember, yes, there is no restriction that if place of supply is outside India, recipient cannot take ITC. If it is used in the course or furtherance of business of recipient, and if it is not in blocked credit, recipient can take ITC. Understood? So that is about this. With this, we completed fully input tax credit. Okay. And so on the last day, we will do the problems and solutions in the practice manual, because now we need to focus more on the concept discussion. So thereafter, we will see the sums, okay, because here itself we are doing lot of sums as illustrations itself, that's why. And next today afternoon we will do an MCQ on this. So after our lunch, okay, so 10 questions I have selected. The 10 questions we will be discussing, and those who get the high marks, I will give you gift also for that. Done. So on input tax credit, because afternoon after lunch and all we will be so much drowsy, na, that time we will do for test, okay, because our exam is also in the afternoons only, 2 to 5, correct or not, that's why. Then the next chapter that I am going to discuss is value of supply. Please see the next chapter, value of supply, which is in page number 65. Page number 65, value of supply. Valuation or value of supply under GST is purely practical. So we will get only questions related to computation of value. They will give some adjustments in the question. We need to add or less something and you need to arrive at the answer, okay. And this value of supply repeatedly asked for 5 marks, 4 marks, many attempts they have asked this question. Now only one section we have, 3 subsections only we have in this. So section 15, only one section, that is section 15. In this section 15 we have 3 subsections. Section 15 subsection 1 says the value will be taken as transaction value. What is transaction value? The price involved in the transaction. The price actually paid or payable will be taken as the transaction value, okay. And this particular transaction value will be taken as the value for payment of GST if 2 conditions are satisfied. What are the 2 conditions? Supplier and recipient should not be related, because between related parties the price involved may not be the genuine price. Only between unrelated parties the price will be genuine. That's the reason why between related parties, if the transaction takes place, we cannot take transaction value. Also, if price is not the sole consideration, apart from price, if I am getting any other consideration, then also transaction value not taken. For example, I am selling you a new TV in exchange of your old TV plus some 20,000 rupees. Is 20,000 rupees my sole consideration? No, I am getting some other consideration also. What is that some other consideration? Old TV I got. So is price the sole consideration? No, therefore transaction value not applicable. So this information is given in 15 subsection 1. So come on, tell me what is 15 subsection 1? Value of supply. Why we need to determine the value of supply? We need to pay GST na. On what amount we will pay GST? On the value into rate of GST. So therefore value of supply is what? Value of supply equal to transaction value. What is the meaning of transaction value? Price actually paid or payable, okay, provided 2 conditions are satisfied. What are the 2 conditions? Supplier and recipient should not be related. Very good. Then number 2, price is the sole consideration. Suppose if these 2 conditions are not satisfied, what will happen? Value will be determined as per rules. And what will be that value? Open market value, okay. Just like in income tax you have fair market value, na, like here open market value, but that open market value will be given in the question itself. You don't have to do anything. That will be given in question, but don't always take open market value. First you need to check whether transaction value applicable or not. If transaction value not applicable, then only you need to take open market value. When transaction value not applicable? If the transaction is between related parties, or if price is not the sole consideration, then in that case we will take open market value. In the given price, it is a transaction between unrelated parties. Apart from price, there is no other consideration received by the supplier. So only you will take transaction value, because nowadays in exam they are giving both open market value as well as transaction value. That's why I am telling you this point. Then next we have 5 inclusions in the value. 5 inclusions to this transaction value you need to make. Say this: there is a supplier who is making supply of goods or services. there is a supplier who is making supply of goods or services for which recipient is making some payment. So this payment which is made by the recipient will be taken as the transaction value. Okay. Now to this transaction value, total we have 5 inclusions part. First inclusion is that taxes, duties and cess by whatever name called other than GST should be included in the value. 15(2)(a). Tax other than GST should be included in the value. Okay. Now say this. So there is one movie ticket, and for that movie ticket, okay, cinema ticket, the ticket price is cinema ticket, the price is 170. Cinema ticket price is 170. And there is entertainment tax. Entertainment tax. This entertainment tax at 12.5% and GST at 28%. Now tell me how to calculate GST. How to calculate GST in this case? First, what is the transaction value? 170. And while determining the value, should we add entertainment tax or not? Yes. So entertainment tax should be added. How much is that entertainment tax? 170 into 12.5%. That comes to 21.25. So therefore, how much will be taken as value of supply? Whether GST we need to add or no need to add? No need to add, because what does 15(2)(a) says? All taxes, duties and cess other than GST should be included in the value. So therefore, what is taken as value of supply? 191.25. Therefore, how much is the GST payable? 191.25 into 28%. That is 53.55 will be taken as the GST payable. You understood? Then next, another example. So that is, say you are purchasing a smartphone and that smartphone price inclusive of GST is 19,999. Inclusive of GST is 19,999. And what is this rate of GST? Say 18%. At 18% is 19,999. What is taken as the value and GST? How much will be taken as value of supply and how much will be the GST? Huh? 16,948. How you got? Sir, this 19,999 is inclusive of GST. So therefore, into 100 divided by 118 is value, and 19,999 into 18 by 118 will be taken as GST. You understood? So whenever the value is inclusive of GST, generally value excludes GST, na? Yes or no? So therefore, we need to separate that. How to separate? Simple, GST divided by 100 plus GST. That will be taken as the GST component. What is the GST component here? 3,051 is GST component. So remaining will be value. What is that? 16,949 will be taken as the value. You got it? So whenever we get on inclusive basis, this is how we need to do. So that is about 15(2)(a). Can you tell me what is the first inclusion? Come on. All taxes, duties and cess other than GST should be included in the value. Then second addition, you see, recipient is incurring some expenditure on behalf of the supplier. Then that expenditure should be included in the value as per 15(2)(b). What is that? Say you are going for a outstation audit. I am your client. You asked me to pay the accommodation and travel expenditure. Actually, you should incur. You are going for the audit. You should incur the travel expenditure. but you asked me to incur the expenditure, I incurred it. Now in that case, so I like whose liability it is? Your liability. Who is incurred? Recipient on behalf of supplier. So it is nothing but as good as your consideration and it should be added to you. Actually, who should pay? You should pay. Am I right here? Yeah. If you pay and recover it from me, means it will be your consideration. Am I right? Instead, you are asking me only to pay any amount that the supplier is liable to pay, but which is paid by the recipient. So that should be included in the value. In this case, who is the supplier? Chartered accountant is the supplier. Who is the recipient? Client is the recipient. Who should incur the travel expenditure and accommodation expenditure? Chartered accountant. But who incurred? Client incurred. In turn, recovered from the client? No, client only incurred fully. And means it is like escaping the income, diversion of income. You would have studied somewhere in income tax. Diversion of income. If you receive only, it will be taxable in your hands. You are trying to divert it. Actually, this is a case of diversion only, wherein rather than receiving the money in your hand, you are ensuring that the person is only incurring the expenditure. Will it be indirectly your consideration or not? Yes, it should be added in your value. Understood? Whereas, if recipient is incurring some expenditure on his own account, will it be included in the value? No. What does it mean? I have an electronic shop. I will deliver the product. Say you are purchasing a refrigerator. I deliver the refrigerator in my shop. You need to take care of the transportation to your place and you incurred some transportation cost. Will it be included in my value? No. Why? Recipient incurring some expenses on his own account, not on behalf of supplier. Is it clear? So not all expenses incurred by recipient will be included. Whenever recipient is incurring an expenditure on behalf of supplier, then it should be included in the value. What is the first point? Taxes, duties and cess, whatever name called, other than GST. Then next one. Recipient incurring expenses on behalf of supplier. Okay. Then next you see this, supplier incurring expenditure, okay, and recovering it from the recipient. Supplier incurs the expenditure and recover it from the recipient. Example, you purchased a product from Amazon and they charge some delivery charges to you. Now in this case, this delivery charges is an expenditure incurred by the supplier. Am I right? And in turn recovered from the recipient. Is it before delivery of goods or after delivery of goods? Before delivery of goods. Therefore, it should be included in the value. You got it? Or before supply of service. Any expenditure incurred by the supplier and charged to recipient. When? Before supply. Before supply, then it should be included in the value. Understood or not? Then, so here expenditure incurred by supplier, if it is in the course of supply, there is one concept called as pure agent. Pure agent means on behalf of the recipient. As this pure agent concept is not applicable for your exam, you don't have to bother about it. It will not be tested in exam. Simple, you remember, supplier incurred expenditure, recovered it from the recipient. Example, packing charges, advertisement charges, or transportation charges, etc. and all. And in turn recovered from the recipient. Will it be included or not? Only one condition you need to check. What is that condition you need to check? Is it before supply or after supply? If it is before supply, include it. After supply, don't include. Got it? Then that is about the third inclusion. Then fourth inclusion, interest, late fee or penalty for delay in receipt of consideration. What does it mean? I invoiced to you for 1 lakh. I invoiced to you for 1 lakh. You did not pay on time. When you are not paying on time, what I will do? I will receive some extra interest from you, interest or late fee. That will also be included in the value. But interest on account of loans, advances, deposits is exempted. This is different, that is different. That is, I am giving you a loan and I collect the interest. That is exempted. But this is what? I gave you an invoice, you did not pay it on time. I gave you a credit period, you did not pay within the time. So I am charging you interest or late fee. This will be included in the value. Come on, tell me 4 inclusions. Taxes, duties, cess. other than GST. Okay, first inclusion. Second, recipient incurring expenditure on behalf of supplier. Super. Third, supplier incurring expenditure and recovering it from the recipient when? Before supply. Then number 4, interest, late fee, penalty for delay in receipt of consideration. Fifth one is related to subsidies. Subsidy from CG or SG is not treated as consideration. First of all, what is subsidy means? Subsidy means what? Grant, government grant. Subsidy means what? Grants. That grant we can get from any person. We may get from government or non-government. If you get that grant from government, that will not be treated as consideration. Example, for every electric scooter that is sold by a dealer, government will pay a subsidy to the dealer. You know that? If you are buying two-wheeler, which is an electric two-wheeler, so to the dealer of the two-wheeler, for every two-wheeler sold, government will be paying some 10,000 to 15,000 rupees as a subsidy to the dealer. So why? In order to encourage the sale of electric vehicles. You got it? So now this subsidy will not be treated as consideration in the hands of the dealer. Why? Because the subsidy is from whom? Central government or state government, not treated as consideration. Suppose if this subsidy is from any other person, for example, you take this Maruti Suzuki will be using MRF tires. As they are using MRF tires, MRF will be paying subsidy to Maruti Suzuki because the future sales of MRF depends upon Maruti Suzuki using the MRF tires. Will you agree with me? Suppose you purchased a Suzuki car, Swift car you purchased, and you have to change the tire. 3 years, definitely you have to change one tire. And you are changing the tire, that too in Chennai and all, easily the tire gets punctured. So some 3-4 punctures, so the tire you have to change, no other go, because nowadays it is tubeless tires and you need to change the tire. When you are changing the tire, you will change MRF tire or some other company tire, Seat, Bridgestone, etc. MRF tire only, which means the future sales of MRF depends upon usage of their tires in the car. That's why for every car, they will be paying some subsidy. This subsidy paid by whom to whom? MRF to Suzuki means, is it from central government or state government or others? Others. So that will be treated as consideration and it will be included in the value. Is it clear? So subsidy from whom should be included in the value? Other than CG or SG, but it should be linked to the price. Linked to the price means what? The subsidy should be with respect to outward supply. Okay. Suppose if a company has given subsidy ad hoc some 20,000 rupees, that will not be covered under directly linked to the price. That is some ad hoc subsidy that will not be included in the price at all. Ignore. You understood or not? So now subsidy is divided into two. You can see that in the next pages, subsidy point, which is in page number 69. Page number 69 you see. Subsidy is divided into two, directly linked to price and not directly linked to price. What is the difference between directly linked or not directly linked? If the subsidy is with respect to every product sold or every service rendered, it is directly linked to the price. Say for example, I am running a coaching center and I am offering to some below poverty line students coaching at a subsidized rate. So now I got a subsidy of 2,50,000 rupees from a NGO. Is it directly linked to the price or not directly linked to the price? Not directly linked to the price. Suppose if I get a subsidy of 2,000 rupees per student from a NGO, is it directly linked to the price? Yes. You got the clarity. Whenever we receive the subsidy, irrespective of our outward supply, it is not directly linked to the price. So ignore it. Ignore it. Don't treat it. Such subsidy shall be ignored from the value. So don't consider that at all. Ignore it. It will be treated as a separate activity. You understood? While doing valuation, simply ignore. But if the subsidy is directly linked to the price, directly linked to the price means what? That subsidy is for every product sold or every service rendered. then you again check, is it from CG or SG or is it from others? If it is from CG or SG, so that subsidy shall be excluded from the value. Is it clear? Suppose if it is from others, such subsidy shall be included in the value. Understood? Now, what is the treatment that you need to follow? First, you need to check whether an amount is to be included or to be excluded. And then you need to see in the given price, is it already included or not? Then only you know what is the treatment to be done. This is how you need to interpret every time. Okay. First, you need to see whether in the, like as per provision, whether that amount is to be included or to be excluded. And in the given price, what has happened? In the given price, what has happened? Based on that, you know what is the treatment to be followed. First, an amount is to be included. An amount is to be included. Please make note of this. An amount is to be included. Example, packing charges. Packing charges to be included or not? Sir, packing charges is an expenditure incurred by the supplier and charged to recipient. Is it before delivery, before supply of goods or after supply of goods? Before supply of goods. So packing charges is to be included. Okay. But in the given price it is already included. What will you do? Ignore or you will add? Ignore. Then next, number 2. As per provision, an amount is to be included. An amount is to be included. Example, municipal taxes. Municipal tax. Municipal tax is other than GST, correct? To be included or to be excluded? To be included. In the given price it is not included. So what you will do? You will add. Then number 3. As per provision, an amount is to be excluded. So example, subsidy from CG. We should exclude, correct? Subsidy from central government is to be excluded. And in the given price it is not excluded. It is not excluded, means included. So what you will do? You will deduct, minus. Then number 4. As per provision, an amount is to be excluded. Example, GST to be excluded, correct? All taxes other than GST to be included. So GST is to be excluded. But in the given price it is already excluded. What you will do? Already excluded. So ignore. So these are the 4 points we need to apply for each and every adjustment and we need to arrive at the answer. Okay. Mainly in case of subsidy, you will get a confusion because subsidy is having 2 treatments. Subsidy is having 2 treatments. That's why in case of subsidy you get a confusion. We will try to discuss that. It's a very, very important point, that subsidy. First you have written this. Everyone? Okay. Now we are going to see the subsidy related provision. So, but before that, I want you, all of you, to stand and sit once. Yes, sit. Usually, when we continuously sit, or we get sleep and all. So even our brain also will get deactivated. So now some physical activity should be there. So whenever, I don't mind when you are standing and all, when you are getting sleep, etc. and all, just stand and stand in that corner for some time and listen, then again come and sit. Okay, but don't sleep. Okay, because I told you this 4 days only you are going to prepare this subject. Remaining days you are going to prepare other subjects. I don't want you to sit and prepare again the same subject. That's why. Okay. So we have only 4 days. In that already 1 day is over. This is second day. So 3 more days only. That's why. So I cannot give you multiple breaks and all. So you yourself, so you should activate. Okay. Now concentrate. Subsidy related provision we are discussing. Now there are 2 treatments related to subsidy, means 2 assumptions we can take. Whether the price is after considering subsidy or the price is before considering the subsidy. Okay. Now listen, there is a person who is selling a product. Okay. So product X, sale price is 15,000. Product X sale price is 15,000 and subsidy from CG is 2,000 and subsidy from NGO is 3,000. Okay, very simple question. Product X sale price is 15,000, subsidy from central government is 2,000, subsidy from NGO is 3,000. Now there are 2 assumptions that we can take. Assumption number 1, the given price is after considering subsidy. What does it mean? While arriving at this 15,000, already we would have reduced that 5,000, 2,000 and 3,000. What is 2,000, 3,000, 5,000? Already we would have reduced, which means let X be the original price. Okay. We are talking about view 1. Let X be the original price. From that X, we already reduced 5,000. Then we got 15,000. Got it? So this is known as what? Price after considering subsidy. Price after considering subsidy. Price after considering subsidy. Then view 2. What is it view 2? Price without considering subsidy, means that original price itself is 15,000. We have not reduced any subsidy from that. You got it? We did not reduce any subsidy. The original price itself is 15,000 and whatever 2,000, 3,000 that we are getting, we did not consider while fixing the price of 15,000. Price without considering subsidy. Price without considering subsidy. Suppose if it is price after considering subsidy, what will be taken as the value? And without considering subsidy, what will be taken as the value? Come on, try and tell me. Just use your calculator and tell me. View 1, view 2. What will be the answer? View 1, 17,000 and 13,000. Okay. First, what is the transaction value? View 1. What is the transaction value for view 1? View 2. Both cases 15,000, 15,000. Correct? Now, view 1 we will see. Subsidy from central government to be included or to be excluded as per provision. Subsidy from central government to be included or to be excluded? To be excluded. Only from others to be included, to be excluded as per provision. In the given price 15,000, is it already excluded or not excluded? Already excluded, because the 15,000, what is the assumption? After considering subsidy. So it is already excluded. Whether you need to exclude it again. So ignore. Then next. Subsidy from NGO. Subsidy from NGO. What is your answer? To be included or to be excluded? To be, as per provision, to be included. In the given price it is not included. We deducted it, correct? So therefore we need to add. How much? 3,000. So the answer will be 18,000. Understood? Then go to the view 2. View 2. 15,000. Subsidy from CG to be included or to be excluded? To be excluded. In the given price, we did not do any deduction. So we need to deduct now. How much? 2,000. Then Subsidy from NGO to be included or to be excluded? To be included as per provision. In the given price, already included, we did not deduct. So therefore, ignore. And what will be taken as the answer? 13,000. So two different answers will come. Okay. Now, which view we need to take? That will be given in the question itself. Price after considering subsidy or without considering subsidy will be given in the question. Suppose, sir, if the question is silent, what should we do? So you follow view 1. You follow view 1 if question is silent. If question is silent, you follow view 1 because that is a view which is taken by ICA also in many questions. 95% they will give in the question itself whether the price is after considering subsidy. They will say price net of subsidy, price is after considering subsidy, like that words they will give. If they give, it is view 1. Yeah, otherwise they will clearly give price without considering the subsidy, like that. So that is view 2. But if the question is silent, you follow always view 1. That is price after considering subsidy. Means while arriving at the given price, subsidy is already considered. Means what? Already they would have deducted the subsidy while arriving at the given price. Okay. So that is about these two views. And you can see this illustration in the next page. You should answer this illustration. Look into this. C Limited owns a coaching institute in Puri. The institute charges 18,000 rupees per student for giving training in digital marketing. However, this training program is subsidized by different institutions as follows. State Government of Orissa 500, PQ Charitable Trust 200, Government of Japan 100. We will do first view. Take your calculator. We will do it as per first view. Okay. What is that first view? The price. What is the price given here? 18,000 is after considering subsidy. Means what? While arriving at 18,000, already we would have reduced, come on, some subsidies, correct? Already we would have reduced some subsidy. So the given price is after considering the subsidy, means we would have reduced the subsidies. So take 18,000 in your calculator. First, what is the first subsidy? Come on. 500. Is it from, it is from whom? State Government of Orissa. As per provision, to be excluded in the given price. Because it is view 1, assumption 1, already excluded. So, ignore. Then second, subsidy from PQ Charitable Trust as per provision to be included in the given price. Not included. We have deducted, correct. So, we need to add 200. Add 200. Then Government of Japan to be included or to be excluded as per provision. To be included. Only central government or state government. So therefore, to be included. In the given price, it is excluded. So you need to add 100. How much you got? 18,000. That is the value. Got it? Now, view 2 we will take. What is view 2? The given price is without considering subsidy. Means while arriving at 18,000, they did not reduce this 500, 200 and 100. Okay. Now let's start. 18,000 rupees. What is the first subsidy? Subsidy from State Government of Orissa. As per provision, to be excluded. In the given price, not excluded. So, deduct 500, minus 500. Then PQ Charitable Trust, as per provision, to be included in the given price. So, ignore. Then Government of Japan, as per provision, to be included in the given price, already included, we did not deduct. So, ignore. So, what is the value that you will get? 17,500. Are you understanding? So, in the absence of information in question, which view you need to take? Consider view 1 for exam purpose. Okay. So we completed all the inclusions. So what are the various inclusions that we have? Try to remember along with the clause. Okay. Section 15 is value. Subsection 2 is inclusion. In that, try to remember along with the clause. Think of, you are writing the answer with the clause as per section 15 2D. So it should be included in value like that. So valuer will think, Arey, you prepared only GST for 6 months. Okay. So let him think that way. So therefore, this area definitely it will come in exam. That's why I'm asking you to remember along with the clause and all. So we have total 5 clauses. 15 to A, B, C, D and E. Total 5 clauses we have. These 5 clauses are for inclusions. Okay. And you remember a keyword THARUN's. Okay. TR like that, one actor used to be there, T. Rajendra, who is known for sister sentiment. Okay. So therefore you remember that. T for what? Taxes other than GST. Taxes other than GST. Or recipient incurring expenditure on behalf of supplier. Very good. Recipient incurring expenditure on behalf of supplier. Then next, yes, supplier incurring expenditure, supplier charged expenditure when? Before supply. Supplier charged expenditure before supply. I, interest, late fee, penalty. For what? For delay in payment. Then, yes, subsidy from whom? Subsidy from other than CGRSG, other than CGRSG, directly linked to price. Directly linked to price. So these are the 5 inclusions that we have, and whenever we take the transaction value, we need to make these inclusions and we need to arrive at the value. But related to these inclusions, we have some special points. We will see those special points. We completed 15.1 and 15.2. But related to this inclusion, some special points are there. Let's see that. You finished? Okay. Now, see this special points in page number 65. Come back to page number 65. Important notes like that we have now. See that. I am a property owner. I paid municipal tax, but I did not recover it from the tenant. Should that municipal tax be included in the value for payment of GST? Generally, as per 15.2a, all taxes, duties and cess by whatever name called other than GST should be included. Here, municipal tax is other than GST. But I did not charge it to my tenant. Should it be included or not? No. Only when it is charged to recipient, it should be included. Just because I pay some taxes, why it should be included in value? Only when I recover it from a recipient, it should be included. That's the first point. See that. Only when taxes are charged to recipient, it should be included. Example, municipal tax paid by the property owner, but not charged to tenant. It is not required to be included in the rent. Got it? Then next. As per rule 35, whenever the price is collected without GST, means I am collecting some money from you, but I am not charging GST separately to you. Will that be included in the value? That is, whatever price I collected already inclusive of GST. So I have to take an assumption that the given price is inclusive of GST. For example, I collected 5,000 rupees from you, but I did not charge GST separately to you. What does it mean? It means that this 5,000 is inclusive of GST. Then how to calculate GST? Into rate divided by 100 plus rate. See that. As per rule 35, if price charged is inclusive of GST, then the value shall be price inclusive of GST into 100 by 110, that is 100 by 100 plus GST rate. For example, a trader charged 500 rupees for a product and GST not collected from the recipient separately, and this 500 is inclusive of GST. How to compute value? 500 into 100 by 112. Suppose if it is GST, 500 into 12 by 112. Got it? Then next, both value and GST to be rounded off to nearest to 1 rupee. For example, you got GST as 35.21. You will take it as 35. If you are getting GST as 68.63, 69. So that is the meaning of rounded off to nearest to 1 rupee. Then next one you see TCS. TDS and TCS under income tax, what is the impact while doing the valuation? Okay, whatever TDS, TCS that is deducted by the recipient, what will be the impact on the valuation? Let's see. So first I am taking TDS to make you understand here. There is one chartered accountant and who provided services to a client, and for these services, the client has paid 1,05,000. The client has paid 1,05,000 and that much only, nothing extra. Okay, and here in this case, how much is the TDS that client has to pay to government, and how much is the GST that chartered accountant has to pay to government? You understood? So we need to understand what has happened here. A chartered accountant provided services to client, for which client paid 1,05,000. And what is the TDS rate? TDS under section 194J of Income Tax Act is 10%. And GST is 18%. GST is 18%. Now you tell me how much is the TDS that client will pay to government? 10,500. How? Because this 1,05,000 is inclusive of GST also. While computing the TDS, you should not include GST. You know that? Income tax, while computing TDS, you should not include GST. So how will you calculate? 1,05,000 into 10% if you take, that is wrong, because 1,05,000 is inclusive of GST also. Okay, so 1,05,000 if you take inclusive of GST 18 by 118, that is also wrong, because already TDS is deducted by the recipient. So on the balance amount only he is receiving. Are you getting this part? If it is that much direct, why will I give you this question? Think. 8,898 is what? TDS. Okay, how you calculate it? 1,05,000 into 100 by? No, that is wrong. That's what I am trying to convey. Because see, client has, there is some value. Okay, here we have to definitely take like mathematics only. Let x be the value. In that x or 100, let's take 100. Let 100 be the value. In that 100, recipient is already deducting TDS 10 rupees. Okay, and adding 18 rupees and remitting 90 plus 18. You got it? Again, I am repeating, carefully listen. So client will be, if the value is 100, let's take the value as 100. Let's take the value as 100. In this 100, what is the GST? 18. And what is the TDS? 10. How much is the amount remitted by recipient? Amount given by recipient. How much? How much? Illappa. How much is the money out of this 100 will be given by recipient to supplier? Full 100 rupees he will give, 118 he will give, 108 he will give, 108. How 108 we got? 100 plus 18 minus 10. Why 100 plus 18 minus 10? 100 rupees is the value. 18 rupees GST, 10 rupees TDS he will deduct. You got it? So 108 rupees is what he has given. Understood? Now, what is that 108 equivalent value? 1,05,000. Now you do the cross multiplication, you will get what is the TDS and what is the GST. You understood or not? Now do the cross multiplication. For 108, if it is 1,05,000, for 10 it is how much? One lakh The total amount paid is 1,05,000. So, okay. Tell me what is that 10? Cross multiplication you do. I am making it simple for you. I am not making it complicated for you. For 108, if it is 1,05,000. For 10, it is how much? First TDS you tell me. 9,722. This is TDS. Then 18 portion is how much? For 108, if it is 1,05,000, for 18, it is how much? 17,500. 17,500. Okay. Then what will be the value portion? 90 to 22. So this is how we need to calculate TDS and GST whenever we got both TDS and GST in the question and they gave the amount to be remitted. You understood? Because how we got this 108, so total 100 rupees is the value. On that 100 rupees, 18 rupees will be the GST, and on that 100, TDS will be 10 rupees. Okay. So usually TDS will be deducted, GST will be added. So that's where we got 108. So therefore, if 108 is the amount given by the recipient, 1,05,000, then proportionately what will be the value, what will be the GST, what will be the TDS, fully you will be getting. Accordingly, we can show that in the answer. Is it clear? So while computing the value, whether TDS deducted by the recipient should be included or not, yes, we need to include. That's where we are taking 9,722 is part of this value, correct or not? 9,722 is part of 97,222. So what is the conclusion we can draw? While computing the value, TDS deducted by the recipient under income tax should be included in the value or not to be included in the value? To be included in the value. So this part is a very important adjustment. This may be tested in exam. See, problem is that already they tested all kind of combinations. Now new way they may be asking question. That's why I am giving you this and all. So write down. So TDS under income tax. TDS under income tax. TDS under income tax. What we will do? First write down this example. There is a CA who provided services to the client and the client paid 1,05,000 and CA is required to pay GST to government and client is required to deduct TDS and remit it to government. The rate of TDS under 194J is 10% and the GST is 18%. Then how much is the GST and how much is the TDS? Okay. So here the logic is what? Let's assume the value as 100. And if value is 100, the TDS will be 10 rupees and GST will be 18. So both TDS and GST will be computed on value only. And in this case, so we need to get 108 rupees from the client. How? 100 rupees plus 18 rupees GST minus 10 rupees TDS he will deduct. So remaining 108 he will remit. Suppose if 108 rupees is 1,05,000, what will be 100? And what will be the TDS and what will be the GST. So logically if you see 97,222 on the 10% is what? 9,722. You got it? Again on that 18% will be 17,500. So what is the conclusion we can draw out of this? TDS deducted under Income Tax Act. Under Income Tax Act 1961 should be included in value. Should be included in value of supply. Then next, TCS under Income Tax Act. If we have some TCS, what is the treatment of the TCS? TCS under Income Tax Act. Let's see. So usually there is a car dealer. This car dealer is making sale of car to Mr. A. Sale of car to Mr. A. From Mr. A, the car dealer has to collect price, then GST, then TCS. So three things will be collected by the car dealer. From whom? From Mr. A. Suppose if the price of the car is 10 lakhs, if the price of the car is 10 lakhs and GST is 28% and TCS is 1%. Okay. So now how much will be the GST? 10 lakhs is the price of the car. Now, while taking GST, whether we need to add TCS or not is the question here. Okay. So, GST 28%, okay. Whether the 28% is computed on 10 lakhs or we need to add this TCS and then compute. Okay, let's take TCS first. TCS 1% of what? After adding GST or before adding GST? Definitely before GST. TDS and TCS under Income Tax Act is always before adding GST. That is as per the CBDT circular which is given under Income Tax Act. Okay. So therefore, while computing TDS and TCS under income tax, don't add GST. So you calculate only on the amounts. What is that amount here? 10 lakhs. 10 lakhs into 1% is how much? 10,000 is only the TCS. Now GST, come to GST aspect. Whether GST is computed on 10 lakh, 10,000 or only on 10 lakhs? Only on 10 lakhs, not on 10 lakh, 10,000. But 15(2)(a) says any taxes, duties and cess by whatever name called other than GST should be included in the value. So won't this 10,000 be included in the value? No, because first of all this 10,000 is not a tax, it is an interim levy. Why it is called as an interim levy? Because this 10,000 rupees which is collected by the car dealer is not going into the pocket of the car dealer. This will be remitted to the government as the liability of Mr. A. Mr. A can take this TCS as credit while making his income tax payment. You understood? While computing the income tax, we take tax on total income and add these health and education cess, and then we will deduct advance tax, TDS and TCS. So remaining amount is the liability to be paid. So therefore, whatever TCS that is paid by the car dealer, Mr. A can take it as an adjustment for his liability. Understood? So that's the reason why GST will be computed only on 10 lakhs, that is 2,80,000 will be taken. So therefore, the car dealer will remit TCS and GST to government. The car dealer will remit GST and TCS. This TCS will be given as a credit to Mr. A. TCS credit of 10,000 is available to Mr. A. So basically this 10,000 is a tax? No, it is actually not tax on income. Why it is not tax on income? Mr. A is spending money. So on that only 10,000 is collected, which means that it is not a tax on income. It is just to identify the source of income of Mr. A. So it is an interim levy, not actually income tax. That's the reason why it is not to be included. So what is the conclusion we can draw out of this? TCS collected, TCS under Income Tax Act collected by supplier should be included in value or should not be included in value? Should not be included, in value. TCS under Income Tax Act collected by supplier should not be included in value. Understood the treatment of TDS, TCS? I don't know, somewhere my intuition says this time this TDS, TCS points could be tested in the questions. Then next part. So now see this incidental expenses related point. So look into this chart, expenses incurred by the supplier and recovered from the recipient. In this we have two divisions. as a pure agent in the course of supply. I told you this pure agent concept is not there for your exam, so leave it. In the course of supply. In the course of supply can be again divided into two: incidental expenses and other expenses. What is incidental expenses? Without incurring that expenses, supply cannot be made. That is known as incidental expenses. Even without incurring that expenses, supply can be made. That is known as other expenses. Okay. For example, you are going to, afternoon over, you are going and having some chicken biryani. Now, when you are having chicken biryani, you also get so little bit of raita and gravy. So, is this raita and gravy coming under incidental expenses or other expenses? Incidental expenses. So, by default, when they sell biryani, they should give raita also. So, it is incidental expenses. Whereas, you want something for munching, because so leg piece is not sufficient for biryani, so you order separately chicken 65 or pepper chicken, etc. and all. So this will be coming under incidental expenses or other expenses. Other expenses. Why it will come under other expense? Don't go. Okay, so don't leave. I just tempted you. So therefore control your senses, because after eating full biryani and all, you will come and sleep here. So therefore, this other expenses, that is the difference between incidental and others. Why? Even without that pepper chicken, chicken 65, the product chicken biryani can be sold, correct or not? So therefore, even without incurring the expenditure, the supply can be made, that is other expenses. But only after incurring the expenses, the supply can be made, that is known as incidental expenses. Incidental expenses always you need to include in value, whether it is before supply or after supply. Example, installation charges. You buy a AC. Installation. Is installation incidental or others? Incidental. Without installation, the AC will not function or the supply cannot be made. But when the installation is done, after delivery, after supply of goods or before supply of goods? After supply of goods. So, but then also it should be included in the value. That's what. Incidental expenses are essential to make the supply of goods or services. Always it should be included in the value. Whereas other expenses not essential but adds value to the supply of goods or service. If it is before or at the time of delivery of goods or services, it should be included. Otherwise, it should be excluded from the value. For example, concentrate. Nowadays, whenever you are purchasing a mobile, so there is something called as insurance on that mobile, correct? Premium phones and all, there is insurance. For Apple phone, there is something called as Apple Plus coverage, like that it is there. What is that Apple Plus? That is Apple Care Plus. If at all the mobile is broken, damaged, now they will replace it for free. That is known as Apple Care. Okay, but for that Apple Care, you have to pay some extra amount. How much? If the mobile is 1 lakh, you will pay some 15,000 rupees for this Apple Care. So this 15,000 rupees which is paid is incidental or others? Others. Why others? Even without that, the product can be sold, correct? Others. And is it before supply or after supply? At the time of supply. So before or at the time of supply. So it is not after supply. Therefore, you need to include it in the value. You understood? Suppose you purchased it. You used it, okay, for actually they say that within 60 days you can take this Apple coverage, okay. Now within 60 days, so you purchased it. After 30 days you pay that 15,000 rupees. Now, is it incidental or others? Others. Before or at the time of delivery or after delivery? After delivery. Will it be included in the value? No, that's a separate transaction. It will not be included in the value because already the product has been sold, invoice is prepared. How we can include it now? So therefore, it's a separate transaction. That is the meaning of this. Is it clear here? Then, next, equalization levy under income tax should be included in the value of supply. What is equalization levy? That is a separate tax which is there in income tax, which you will be learning at CA final level. So now you don't have to bother. Suppose if they give equalization levy under income tax, anyhow we know as per section 15(2)(a), any taxes, duties and cess by whatever name call other than GST should be included in the value. So we will normally include it. And I told you that this pure agent concept is not applicable for exam. Okay, but this will be applicable for CMA intermediate students. That's why I just gave this. But for CA intermediate, it is not applicable. Leave it. Then look into this illustration 1. Admission to True Theatre is 90 rupees per ticket for a Tamil movie as well as for a Hindi movie, plus entertainment tax 10% on Tamil movie and 20% on other languages. In the month of November, True Theatre sold 2000 tickets of Tamil movie and 1500 tickets of Hindi movie. Find the value of taxable supply of service. Find here whether entertainment tax should be added or not. Yes, because it is other than GST. What is the price of the Tamil movie ticket? 90. What is the entertainment tax? 10%, means 9 rupees. So 99 rupees will be taken as the value. Whereas Hindi movie, 90 plus entertainment tax 20%, that is 18. So 108 will be taken as the value of supply in case of Hindi movie. Multiply with the number of tickets, that will be the total value of supply. Then illustration 2. Mr. A supplied goods worth rupees 10,000 plus GST of 1,200 on 28/4/2021 with a credit period of 30 days. Non-payment shall lead to interest at 24% per annum charged by Mr. A to Mr. B. Payment along with interest is paid by Mr. B and on which date? 39/2021. Compute the GST payable first. Here, what is the date on which invoice is given? 28/4/2021. On the date of invoice, whether they know that they will be receiving the interest? No. So interest will arise when? At a later point of time on account of non-payment of this interest, and therefore when the interest is actually received, see the question, when the interest is actually received, 39/2021. So as on 28/4, we don't know about the interest, correct or not? So first we will prepare the invoice. In that invoice, we will take value as how much? 10,000 and GST will be 1,200. And what is the date of the invoice? 28/4/2021. Now to collect that interest, so supplier is required to give one document to the recipient. What is the name of the document? Debit note. What is the journal entry for this transaction? Invoice 10,000 plus 1,200. Can you tell me the journal entry in the books of Mr. A? In the books of Mr. A, supplier books. A is the supplier, B is the recipient. In the supplier books, can you tell me the entry for this? 10,000 plus GST. Mr. B account debit, how much? 11,200. To sales, 10,000. To GST payable, 1,200. Understood? Now the interest is collected. How much is the interest? How much is the interest? Count na. What is the rate of interest? 24% per annum. And it is computed from when? So what is the time limit by which you need to make the payment? Within 30 days. 28/4 is the sale. Within 30 days means what? So you add, in April you add 2 days. And in May you take 28 days. So it is 28th of May. So the payment should be made by 28th May. But when is he making the payment? 30th September. So in May you take 3 days. June 30 days. July 31 days. August 31 days. September 30 days. See the number of days. May 3 days. June 30. And July 31. August 31. September 30. How many days? 125 days. For 125 days, you will be collecting interest from the recipient. What is the interest that you will collect? 24%. How much you need to pay? How much he need to pay you? 11,200. So take your calculator. 11,200 into 24% into 125 divided by 365. This much money you will be collecting from your recipient. Correct or not? How much? 921 rupees. Apart from 921, are you going to collect any extra GST from the recipient? Check the question. Check the question. Apart from interest, are you going to get the GST also? Is it given in the question? No. Which means that 921 collected is assumed to be inclusive of GST. I told you, whenever we collect some amounts and we are not charging GST separately, the amount so collected is assumed to be inclusive of GST. So this 921 rupees is inclusive of GST at what rate? What is the invoice rate? What is the invoice rate? 1200 on 10,000 is what, pa? 12%. So even this interest also will be taxable at what rate? 12%. So 921 into 12 by 112. 921 into 12 by 112. How much? So that much is the GST. Okay. Remaining portion is what? 822 is the value of supply. You got it? So see the next page. Tax invoice dated 28/4/2021, value 10,000, GST 1,200. Now we are going to collect interest 921. How 921 we got? I have given the computation here. In that 12 by 112, 99 is GST on interest, 822 rupees is the value. Now for this, what is the entry? For this interest, what is the entry? Come on, in the books of supplier. B account debit, how much? 921. 2. Interest income, how much? 822. 2. GST payable, how much? 99. So recipient account, what we have made? Debited, correct? As we have debited the recipient account, supplier will be giving what document to the recipient? Debit note. So in order to collect the interest, late fee or penalty, what is the name of the document given by supplier to recipient? Debit note. And there are three important points that you need to remember here. To collect the interest, supplier will be issuing a debit note. Number 2, this interest is chargeable to GST on receipt basis. So whenever we are actually receiving the interest, then only we need to pay the GST. Third point you need to remember is that this interest is assumed to be inclusive of GST. At what rate? At the rate applicable to the supply. What is the rate applicable to the supply here? 12%. So that should be taken. Can you remember these 3 points? Come on, tell me. Number 1. In order to recover interest, supplier should issue debit note. And this interest is taxable on receipt basis. And this interest is usually assumed to be inclusive of GST. At what rate? At the rate applicable to original supply. Those points I have given in the footnote. You can see. Same page. Debit note to be issued to recover the interest. Usually such interest is considered as inclusive of GST. Applicable rate of GST is the rate of original supply. Okay. So like this you may get a question. Sir, suppose in exam we don't get this point, that is interest paid by Mr. B is on 39, but we know that there is interest. Then what we should do? If they have not given the date exactly on which date the interest is paid, then you normally include it in the value. Okay, means in this case you just take the value of supply as 10,000 plus 822. You got it? In this case, don't bifurcate like this. Invoice this much, debit note this much. Fully you merge and take 10,822 is taken as the value. You understood? Suppose if you know exactly on which date the interest is paid, then you split this way. That is, invoice this much, debit note is this much. If you don't know the date on which interest is received separately, then you merge everything and do it as a single computation. Then look into illustration 3. There is a supplier ABC Limited. This supplier ABC Limited is making supply of goods to Mr. X, a recipient, and what is the invoice value of the goods? 1 lakh plus 12,000. Okay. But what happened here is that this ABC Limited procured some services from XYZ Limited, for which the invoice is 40,000 plus 4,800. Now this 44,800, who paid? ABC or X? X paid. X has made the payment of 44,800 to XYZ Limited. Now in this case, what is the transaction value? First 1 lakh is the transaction value. Am I right? Now whether this 44,800 to be included in the value? Yes. Which point? any amount that the supplier is liable to pay. Actually, who should pay this 44,800? Supplier. But who paid it? Recipient should be included in the value. So what should be included? Where 40,000 is included or entire 44,800 included? Entire 44,800. Any amount that the supplier is liable to pay but which is paid by the recipient should be included in the value. So therefore 1 lakh plus 44,800, 1 lakh 44,800 on that GST should be computed. So the GST will be 17,376. You understood? So this is an adjustment related to 15(2)(b). Any amount that the supplier is liable to pay but which is paid by the recipient. Whatever amount that recipient is paying on behalf of supplier, everything should be included in the value. Got it? Then next. So this taxability of interest income, this is the last adjustment pa. After this we'll take a break, okay? So see this, taxability of interest income. Interest is divided into two. Interest on loans, advances, deposits. Interest on account of delay in receipt of consideration. Interest on loans, advances, deposits. What is the treatment of that interest? Exempted. We don't have to pay GST. But interest on account of delay in receipt of consideration, should it be included in the value or not? Yes. It should be included in the value and taxable accordingly. But don't treat this interest as a separate transaction. Actually, interest should be included in the value of supply. Suppose if the original supply is exempted, the interest is also exempted. You got it? Pa, I gave you an invoice, pa. In that invoice, there is no GST. Now, for non-payment of that invoice, I collected some interest from you. Will this interest be chargeable to GST? No, because the original supply is exempted. The interest on account of delay in receipt of consideration also exempted. If the original supply taxable at 12%, this interest also taxable at 12%. Original supply 18%, this interest also taxable at 18%. Understood? So that is what. So included in the value of supply and taxable accordingly, not a separate supply, rate of original supply to be considered for payment of GST. Now, so with this, we completed all these special points related to value of supply inclusions. So what we have seen, section 15 subsection 1, meaning of value, section 15 subsection 2, inclusions in the value. We have only one subsection, that is subsection 3, exclusion from the value, that is discount. Okay. After completing that, we have only problems and solutions in this, and that is the agenda for afternoon. We will take a break now. We will meet at 2 o'clock. So this illustration number 3, there is one doubt to some of our students, that is, isn't there a double taxation here? Because when 44,800 is included here, so then on 4,800 again we are computing GST. Yes, of course, there is double taxation. So in order to avoid this double taxation, what ABC Limited should have done? ABC Limited should have asked X to make payment of only 44,000 instead of 44,800. Or only 40,000. So that 40,000 will be included. You understood? So instead of making payment of 44,800, only if X has paid 40,000 and ABC had paid 4,800, then this 40,000 only will be included so that the double taxation can be avoided. So therefore, that's how, not based on their business model, provision will change. Based on provision, they need to change their business model. You understood or not? So whatever amount that is paid by the recipient to the third person on behalf of the supplier, entire amount will be included in the value here. Got it? That is this provision. Then section 15 subsection 3 talks about exclusions from the value of supply. So 15 subsection 3 is divided into total 3 points. So only discount is excluded from value. That discount is divided into 3. Discount given before or at the time of supply. What is the discount which is given before or at the time of supply? Trade discount, and that is allowed as deduction. If the discount is given after supply, but the terms are agreed before or at the time of supply. Example for that is what? Cash discount. Cash discount, what we will do? cash discount is agreed between the parties before at the time of supply, but the cash discount is given after supply. So even then it is allowed as deduction. But how it will be allowed as deduction? At the time when we give invoice, we don't know, no? We will give cash discount or not. So therefore, at the time of invoice, we will normally prepare the invoice, and later on when we offer cash discount, supplier will be giving one document to the recipient. What is the document? Credit note. So because usually what is the entry for discount? Discount account debit to recipient. So as we are crediting the recipient, so we will be giving a credit note. Now in this case, what will happen to the GST component? Okay, so let's take a scenario here. First, invoice by Mr. A to Mr. B, invoice by Mr. A to Mr. B for 10,000 excluding GST at 12%. What is the journal entry for this? In the books of A, in the books of Mr. A, and in the books of Mr. B. Can you tell me the journal entry in the books of Mr. A? Mr. B, account debit, how much? 11,200. To sales, how much? 10,000. To GST payable, what is the GST payable? 1,200. Now this is in the books of Mr. A. Now let's see this in the books of Mr. B. In the books of Mr. B, what is the entry for this in the books of Mr. B? Purchases account debit. How much purchase account debit? 10,000, not 11,200, 10,000. This 1,200 will be taken as input tax credit because it's a asset which they will adjust with the liability now. So therefore, input tax credit account debit 1,200 to Mr. A account. How much is that? 11,200. This is the transaction. Then next one. So now discount is given. Cash discount by Mr. A to B, Mr. A to Mr. B at 5%. So means how much is the cash discount that will be given? 5% of 11,200. So 11,200 into 5% is how much? 560, correct? 560 rupees will be the cash discount. Now for this cash discount, in the books of Mr. A, in the books of Mr. A and in the books of Mr. B, in the books of Mr. B. Now what is the journal entry in the books of Mr. A? Discount is given. So discount allowed account debit, discount account debit, discount account debit. So to what extent the discount is given? From the sales 5%. So 500 will be kept under discount account. Why? Because simple, 11,200 into 5%. In that, on sales portion, whatever discount is given, that is only really discount. Because of that, the tax also will come down. So GST payable is showing a credit balance, means it's a liability, so it shows a credit balance. In order to reduce it, what you need to do? You need to make a debit. So therefore, GST payable account debit. What is a GST payable account debit? 60 to Mr. B account. How much? 560. So as we credit the B's account, so that's the reason why, what is the name of the document to be given by supplier to recipient? Credit note. Whenever credit note is given by supplier to recipient, what will happen to the supplier's liability? Is it coming down or not? Yes. Supplier liability is coming down. Previously, the supplier liability was 1,200. Now the GST payable account is reduced. So therefore, it is coming down by 60 rupees. So therefore, 1,200 got reduced. So liability of the supplier gets reduced. Understood or not? So because of credit note, what happens to liability of supplier? Liability gets reduced. Liability gets reduced. Now, in the books of Mr. B, you see, what is the journal entry for this transaction? Mr. A account debit. Because, so what happens here is that A's balance is getting reduced now. in B's books. So Mr. A's account debit, how much it will be? 560. He is receiving the discount. So to discount, received. So to discount received account, how much is the discount received account? 500. To ITC, because already Mr. B took a ITC of 1200, but actually 1200 is not the ITC. Why? Because 60 rupees got reduced now from supplier liability. Means here also 60 rupees ITC should be reduced. So to ITC account 60 means because of credit note, what will happen to the recipient? ITC gets reversed. Okay. So because of credit note, ITC gets reduced. ITC gets reduced. So therefore, whenever credit note is given by supplier to recipient, supplier liability will come down and recipient has to reverse the ITC. Actually, ITC account shows what balance? Debit balance. Now we are reducing. So that's why we are making a credit. So ITC got reduced. So tell me, whenever credit note is given by supplier to recipient, what recipient should do? Recipient should reverse the ITC. That is a condition here. So if discount is given before or at the time of supply, example trade discount, it is always allowed as reduction, and we know that at the time of preparing the invoice itself. So in the invoice itself, 10,000 rupees minus 2,000 rupees, 8,000 rupees we will show as value. On that we will compute the GST. But when the supply, like discount is given after supply, but the terms are agreed before at the time of supply, we will be allowing it as reduction provided two conditions are there. What are the two conditions? Supplier should be giving a credit note to the recipient, and based on the credit note, recipient should reverse the ITC. Then third discount. Discount given after supply, but terms are not agreed before at the time of supply. What is that discount? End of season sale discount. Means we are giving the discount after the supply has been made. Example, I am a wholesaler. I sent 1 lakh worth of goods to you. You are my retailer. I sent 1 lakh worth of goods, but those goods are not getting sold. So therefore, I gave you a discount of 50% to you. So now in this case, how much you will pay me? 1 lakh or 50,000 only? 50,000 only you will pay me, but I have to pay GST on 1 lakh. Why I have to pay GST on 1 lakh? Because post-supply discount is not allowed as reduction. Again, I am repeating this example, carefully listen. I am selling the value of goods to you for how much? What is the value of goods at which I am selling to you? 1 lakh. But what is the discount that I gave you thereafter? 50%. Means how much you will pay me? 50,000. But I need to pay GST on 1 lakh, because this post-supply discount is not allowed as reduction because the terms are not agreed before or at the time of supply. These are the three discounts that are there. Now, based on this, there is one circular here, that is, usually what happens is that this no claim bonus. No claim bonus means insurance when you take, for example, motor vehicle insurance you are taking. You are not claiming anything for the first year. Now, second year, you will get a reduction in the renewal premium. You know that? First year you pay premium pa, and you are not claiming anything, which means no accident, nothing, everything proper. Now, will you get any refund from the insurance company? No. Next year again you need to take the insurance. When you take the insurance for the next year, as the previous year you did not claim anything, they will be giving you a no claim bonus. So which means if 18,000 rupees is the insurance premium that you need to pay, so some 1,000 rupees or 2,000 rupees they will give as a no claim bonus. Now in that case, so whether that no claim bonus is treated like a discount? Yes. No claim bonus is treated like a discount. For example, next year renewal premium is 18,000. 18,000 minus no claim bonus 2,000. So which means GST is payable only on 16,000. So no claim bonus is allowed as a deduction, just like discount. Then one more point, concentrate. Usually in case of low value beam UPI transactions. So we have low value UPI transaction. Low value is 2,000 rupees is the low value transaction. On that, usually processing fees will be there or not. There will be processing fees. Concentrate. So usually when you go to a vendor, vendor will have swiping device as well as UPI, okay, but he will encourage you to make phone pay or GPay. Why he will encourage you to make phone pay or GPay? If you make the card payment, full amount he will not be getting. There will be a processing fees that will be cut. But whenever you are making through GPay or phone pay, full amount they will be receiving. That's why they will encourage to make the payment through GPay or phone pay instead of card. You understood or not? So, but sir, in case of the GPay or phone pay, will they get the full amount into their account? Yes. Won't there be processing fees? There is processing fees. There is processing fees. But this GPay or phone pay will get this processing fee from the Ministry of Electronics and Information Technology. Actually, they will get the money from the other person like a subsidy. You got it. So, reason being, Ministry of Information Technology and Electronics of Government of India only created this UPI system. Okay, this UPI system is created by Government of India. So, because of that reason, to encourage this UPI payments, 2000 rupee up to 2000 rupee transaction, processing fees is there, but that processing fee who will be paying? So the government will pay. So it should be treated like subsidy from central government and state government. What is the answer for subsidy from CG or SG? Is it treated as consideration or not treated as consideration? Not treated as consideration. That is this circular. Say this. It is clarified by CBIC through circular that incentive paid by the Ministry of Electronics and Information Technology to acquiring bank for promoting RuPay debit card or BIM UPI transaction is in the nature of subsidy, and consequently it will not be included in the value because this is from Government of India. That's why. So this is about exclusions. And one more circular you see, this is related to molds and dies. That is, usually whenever the manufacturer is sending the molds and dies to the component manufacturer. For example, Maruti Suzuki is a original equipment manufacturer. They purchase some molds and dies, and on these molds and dies, they paid 10 lakhs plus GST of 1,20,000. Now, these molds and dies are sent by Maruti Suzuki to the component manufacturer to make the car doors. Got it? And this molds and dies is sent on a free of cost basis. And this IR India Private Limited, which is a component manufacturer, using the molds and dies, they made the car doors. Now the question here is whether the molds and dies value should be included in the value of the car doors, for which as per contract, see section 15(2)(b) says what? Any amount that the supplier is liable to pay which is paid by the recipient should be included in the value. Correct? For this car doors, who is the supplier, who is the recipient? For this car doors, who is the supplier, who is the recipient? Car door. IR India is supplier. Maruti Suzuki is recipient. You understood? Now, who should incur the cost of molds and dies? Read the contract and tell me. As per contract, who should incur the cost of molds and dies? Supplier or recipient? Contract to purchase car doors manufactured by component manufacturer using the molds and dies supplied by OEM. Okay. So, who should incur the cost of molds and dies? Recipient. But who incurred it? Recipient only incurred. So, when recipient incurs an expenditure on his own account, will it be included in the value? No. So, consequently, no need to include the value of molds and dies in the value of car doors. Suppose, as per contract, if the supplier has to buy that molds and dies, but which is incurred by the recipient, will it be included in the value? Yes. Any amount that the supplier is liable to pay, but which is paid by the recipient, should be included in the value. You got the clarity related to this. So, as per contract, component manufacturer should buy, but it is sent by OEM. Then we need to include the value of molds and dies in the value of car doors supplied by component manufacturer. Actually, this circular is based on 15(2)(b). 15(2)(b) says what? First of all, it is the liability of the supplier, which is incurred by the recipient. Definitely, it should be included because it's an indirect consideration to the supplier. If it is the liability of the recipient, which is incurred by recipient on his own account, will it be included in the value? No. That is this point. Then, GST implications on debit note, credit note, already we discussed. Who will be giving debit note and credit note to whom? Supplier will be giving debit note or credit note to recipient. When debit note, when credit note? increase in the invoice value, decrease in the invoice value, credit note. Now, is there any time limit for issuing credit note? Yes, yesterday we studied 5 time limits. Time limit for availment of ITC, time limit for issuance of credit note, time limit for GSTR1, rectification of GSTR1, GSTR3B, GSTR8. So what is the time limit for issuance of credit note? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. Okay. And is there any time limit for debit note? No. Why? Because of credit note, what will happen to government? Loss or gain? Government, loss. Why it is loss to government? Because tax liability gets reduced. So it is loss to government. Am I right? That's why time limit. And in case of debit note, loss or gain to government? Gain. How? Extra tax they will be getting. That's why no time limit. After 20 years, 30 years also you give no issue. Okay. So because of debit note, what happens to the supplier liability? Debit note. Because of debit note, what happens to supplier liability? Increase. What happens to the recipient's ITC? Increase. And where these debit notes and credit notes will be reported? GSTR1 and GSTR3B. Then next, credit note. Because of credit note, what will happen to the supplier's liability? Decreases. Already we saw one journal entry for that. And what will happen to ITC of the recipient? Decreases. So that's why he need to do the reversal. If he is having balance, he will reverse. If he is not having balance, he need to pay the liability. You understood? Now, so see this illustration 5 in the next page. This already we discussed similar time limits. So look into illustration 5. A Limited GST registered supplier manufacturer has supplied goods under the cover of tax invoice 20,000 plus 5% GST. How much? 21,000. 5% of 20,000 is what? 1,000. 21,000. Tax invoice is dated 30th August 2020 and has been reported in the return file for the month of August 2020. What shall be the GST treatment under the following situations? Goods are returned by recipient in December 2020 and supplier returning full amount of 21,000 to the recipient. What is the invoice date? Invoice date. Check the question and tell me what is the invoice date. 30th August 2020. If invoice is 30th August 2020, what is the time limit by which credit note should be issued? 30th November of succeeding financial year or date of filing annual return, whichever is earlier. They have not given annual return. So what is the time limit for issuance of credit note? 30th November 21. Correct? Now in this case, by December itself sales returns happens. Can we give the credit note? 30 November 2021 is the time limit by which we can give credit note. And the returns is happening on December 2020 itself. Can the supplier give credit note or not? Yes, within the time limit. Why it is no? So 30/11/2021 is the time limit and the December 2020 itself is happening. 2021 is next year, this year itself the returns is happening. Then what is the pain in giving the credit note? Credit note can definitely be given, no problem in this case, because it is within the time limit. And whether full amount is returned, yes. So credit note can definitely be given in this case, no issue at all. And because of which what will happen to the supplier liability gets reduced by 1,000 rupees. Now second situation you see, goods returned by recipient in December 2020 within the time limit. And supplier returns only 20,000. Can the credit note be issued? No. Why credit note cannot be issued in this case? Sir, supplier did not return full amount. He returned only 20,000. So that's the reason why credit note cannot be issued. A normal credit note can be given, but not credit note under GST. Because of which will there be any reduction in liability? No. Simply, already I collected money from you. I did not refund 21,000 to you. Means still you are having the burden, correct? Now, how my liability will be reduced? My liability will not be reduced. Then, third situation. Goods are returned by recipient in Jan 2021 and supplier returning the full amount of 21,000 to the recipient. Supplier returned full amount and Jan 2021. Is it within the time limit? Yes. So can the credit note be issued? Yes. And because of which in the month of January liability gets reduced by 1000 rupees. Then fourth situation. Goods are returned by recipient in Jan 2022 and supplier returning full amount of 21,000 to the recipient. Now, when the goods are returned, is it within the time limit? So therefore, credit note cannot be issued even though full amount is refunded, but credit note cannot be issued because the time limit is over, and therefore will there be any reduction in liability of the supplier? No, there won't be any reduction in liability of supplier, but a normal credit note can be issued. That is what we need to write as the answer here. Okay. So with this we completed value of supply also. It's a small topic only, but lot of questions like practical questions only will be tested on this. Okay. So now we will move on to the next area, that is exemptions and RCM. I told you that is our next chapter that we will be discussing, exemptions and RCM, and little bit of writing work is there for you now. You close all your books and keep it aside. So you take your notebook alone. In your notebook, you make note of this list of services which are covered under RCM along with its exemptions. Okay, list of service under RCM along with its exemptions. And so you prepare one big table. So you turn your notebook into landscape mode because lot of columns are involved in this. So first we need to know what are the list of services which are covered under RCM. Okay, that is the discussion we are making now. So write down the heading, services covered under RCM. Services covered under RCM. What is RCM means? Reverse charge mechanism. So where we have the list of services covered under RCM, one notification part. What is that notification? 13 of 2017. So whenever you are writing that a particular service is covered under RCM, you need to give reference to section 9 subsection 3 red with notification number 13 of 2017. This you please remember. So you need to write this in exam, like whenever you are telling that the said activity is covered under RCM. So you need to write as per section 9 subsection 3 read with notification 13 of 2017, the said activity is taxable under RCM, therefore liability to pay GST is on the recipient, like that. Okay, so this heading, like the section reference, you need to remember, and you please take some columns. First, what is the service? What is the service that is covered under RCM? And next we need to know, is there any exemption with respect to that? Is there any exemptions with respect to that? And where the exemptions are given in one notification. What is that notification where exemptions are given? Notification 12 of 2017. And then conditions for RCM. What are these exemptions alone? Little big column. Okay. Service, a small column. Exemptions, little big column because lot of exemptions will be there, and conditions for RCM, and last non-applicability of RCM. Means RCM will not come even though the service is under RCM, but it is an exception to that. Means in that case it will be FCM. That is known as non-applicability of RCM. Non-applicability of RCM. So please take this 4 columns: service, exemption, conditions for RCM, non-applicability of RCM. These exemptions alone little bigger column. Okay. Now, first we are discussing what are these services. These services you remember with a mnemonic: Sir CG got salads. SIRR CG got salads. This is the list of services which are covered under RCM. In that, the first one, yes, refers to security lending scheme. Security lending scheme. Security lending scheme means, so what happens is that I have some securities. You can borrow that securities from me. What you will do with that securities? You will do the business using that securities and you will return that, for which I will be charging you a lending fee. So on that lending fee, I will not pay GST, you will pay GST. Got it? So in security lending scheme, so there will be a lender of securities and a borrower of securities. So the borrower will pay a lending fee to the lender. On that lending fee, borrower will pay GST under RCM. Security lending scheme hyphen lending fee. Lending fee is the consideration. On that lending fee, who will pay GST? Borrower will pay GST. Okay. So then, is there any exemptions with respect to this? We don't have any exemptions. We don't have any conditions for RCM. We don't have non-applicability of RCM. Okay. That is about this first one. Okay, understood the first one? What is the first transaction? Security lending scheme. In security lending scheme, who are the parties involved? Lender of securities, borrower of securities. Lender will lend the security and borrower will borrow the securities, for which borrower will pay a lending fee. On that lending fee, who will pay? Lender or borrower? Borrower will pay. Then second, I for import of services. Import of services. In case of import of services, where the supplier will be located outside India, where the recipient will be located in India. Import of service is covered under RCM, which means who will pay GST? Recipient in India will pay GST. Okay, because supplier is outside India, na? Indian government cannot ask the supplier to pay generally. So that's the reason why primarily the liability is on the recipient who is in India. Is there any exemption with respect to this import of service? Yes, we have one exemption. Import of other than OIDR services. Import of other than OIDAR services. What is OIDAR? Online Information Database Access and Retrieval Services. Okay. So other than OIDAR services by non-taxable recipient is exempted. So OIDR refers to online information database access and retrieval services. What is the example of OIDR? So Netflix, Amazon Prime, all OTT platforms, even online games, so which we play by paying money, by spending money. So all those will come under OIDR service, a service which is mediated through internet. Any service that happens through internet and it is automated is known as OIDR services. If you see, even Facebook and Instagram, digital marketing is there now, that will also be coming under OIDR services. So because everything is through internet only. And what about online live classes? Online live classes will not come under OIDR, even though it requires internet, but it is not automated. We need another person to take the classes. What if it is online recorded classes? Will it come under OIDR? Yes, because it requires internet and it will be automated. You understood or not? That is what OIDR service is, a service which is through internet and it is automated. Okay. So OIDR means service through internet, service provided through internet, service provided through internet, and it is automated. And it is automated, then it will be called as OIDR services. But which case we have exemption? OIDR other than OIDR? Other than OIDR services. But who should be importing it? Imported by whom? Non taxable recipient. Who is a non-taxable recipient? That is, generally we are individuals. We trust whom? Government. So individuals trust government. These three people are covered under non-taxable recipient. Okay. Who will come under non-taxable recipient? Individuals trust government. Trust is charitable trust. Government. These three people are covered under non-taxable recipient. Okay. So who is non-taxable recipient? Individuals, comma, charitable trust under section 12AA or 12AB of Income Tax Act, and government. So these people are called as non-taxable recipient, and for what purpose they are importing other than business or commerce? They are not importing for business or commerce, so they are importing for other than business or commerce. Importing for other than business or commerce. Importing for other than business or commerce. So then they will be called as non-taxable recipient. Basically, non-taxable recipient, individual should be importing for personal purpose, charitable trust should be importing for charitable activities, government for their regular administration activities, then it will be coming under non-taxable recipient. Let's see an example for this. Swami Nityananda Trust is there, which is a charitable trust. What they will be doing? They will be doing many things, but they have imported video conferencing software for the purpose of interacting with the pilgrims over video call. Okay, so that in that video call, so this Swami Nityananda will be giving spiritual knowledge to the people. Okay, now in this case, is it import of OIDR service or other than OIDR service? Other than OIDR, because he is importing the software. Okay, and that is other than OIDR. And so to who is importing it? Charitable trust. For what purpose? Charitable activities. Therefore, this import of service is exempted. Understood? Then next, another example. You are subscribing for Amazon Prime or Netflix. Is it import of OIDR services? Yes. So here exemption is not available. Okay. Suppose if you are importing some consultancy services, you are an individual, health consultancy services. So you will take an opinion from a foreign doctor and you will share the reports, and the foreign doctor will give you some opinion whether to go surgery or not to go surgery, because in India and all, so this hospital has become a big mafia and they loot money like anything. Normally if you go also, they will tell some diseases which we don't know also, which we would have not heard also, and they will say this surgery, that surgery and all. So whenever patients are walking into the hospital, so every patient, one graphic will be there, this much budget we can collect from him, like that. Okay, so whenever like goats and all coming into the slaughterhouse, by how the person will be so happy, like that. So that's the reason why, usually whenever doctors in India tell something, so this surgery required, you have cancer, you have this brain tumor, you will die, like that and all, they will take a second opinion from a foreign doctor. Foreign doctor will say, nothing, this is normal, you take this injection for 3 continuous times so that it will go off, like that they will say. So therefore, because the technology that is used in medicine is so much advanced in the foreign country than in India, so we take an opinion. Actually it is what service? Import of other than OIDR services. Correct? And it is imported by an individual. For what purpose? Business purpose or personal purpose? Personal purpose. So that will become exempted. You got it? Individual importing for personal purpose, charitable trust for charitable activities. Third, government. So government will be importing some litigation services. So what happens now? Canada has made a war against India. Okay, literally. So they don't want so to be happy with India, and because of that, what happened, unnecessarily they are putting allegations on India, stating that so India only has killed one Singh leader over there. Okay, that's where all the problems started. And now India is going to file a case with the UN, stating that Canada has insulted us in the public forum. So Canada should tell the apology and withdraw their statement. So because we will have one mediator, who is that? UN organizations. So basically UN will be mediating this. Now one case is filed. When one case is filed, definitely one litigation person is required now. So for this, Government of India imports some litigation services for the purpose of arguing against Canada in the UN court. Now in this case, is it import of services OIDR or other than OIDR? Other than OIDR, by whom? By government. For what purpose? Business or commerce? No, other than business or commerce. Therefore, this activity is also exempted. Is it clear? So tell me, who is non-taxable recipient? Individual importing for personal purpose, charitable trust importing for charitable activities, and government importing for other than business or commerce, that is for their administration. So this import of OIDR, other than OIDR, other than OIDR service by non-taxable recipient is exempted. Then next, is there any conditions for RCM? We don't have any conditions for RCM. And is there non-applicability of RCM? In one case, generally import of service is RCM pa. Who will pay GST? Recipient will pay GST. But in some cases, recipient will not pay GST. Some other person will be paying GST. That is under FCM. What is that? Import of OIDR services by non-taxable online recipient, liability to pay GST is on the supplier. Okay. So write down import of OIDR services, import of OIDR services by non-taxable online recipient. Who is non-taxable online recipient? Any unregistered person. So non-taxable online recipient, non-taxable online recipient, NTOR. Who is a non-taxable online recipient? Any unregistered person importing for personal purpose. Any unregistered person importing services for personal purpose. Personal purpose means other than business or commerce, will be called as non-taxable online recipient. Now concentrate. You are subscribing for Amazon Prime or Netflix. Is it import of OIDR services? Yes. You are unregistered person. Am I right? For what purpose you are importing? For connecting it in projector and playing movie and all. Netflix and all don't put in TV also. Okay. A big problem it will happen. And therefore, it is only purely for personal purpose. And therefore, is it covered under taxability or not? Yes, not exempted. We are not discussing as exemption. It is taxable. But who will pay GST? Not you, supplier. Who is the supplier? Netflix or Amazon. Where are they located? Outside India. They need to pay GST. Sir, how they will pay GST, sir? They are outside India. Let them. They need to pay GST because it is their Indian income na. It is the source in India. So they have to pay GST. What if they are not paying GST, sir? Simple. We will ban that app. Okay. Indian government will ban that app. Then night times, like how you visit UK, US and all, you have to visit there and you need to watch that. Okay. Watch Netflix. Okay. So that's what I mean to say. So this is about import of OIDR services by non-taxable online recipient. Liability to pay GST is on whom? Is on the supplier. Okay. So this is about import of services. Come on, tell me for import of services, what are the points you need to remember? In case of import of services, generally it will be RCM. But we have only one exemption. What is that exemption? Import of other than OIDR services by non-taxable recipient is exempted. And then only one case, it will come under FCM. What is that? Import of OIDR service by non-taxable online recipient. Actually, we have two, NTOR and NTR. When NTOR, what is the difference? Extra O we have, that is OIDR service. You understood? Only in case of OIDR services that NTOR will come into picture. What is the difference between NTOR and NTR? NTOR is any unregistered person importing for personal purpose, whereas NTR is only three. Who are those? Individual, trust, government. Okay, that is about import of services. Then number 3, that is renting of motor vehicles. Renting of motor vehicles, write down. Renting of services, renting of motor vehicles. Renting of motor vehicles. I am making you write because so that you can remember these points, exemptions and RCM. So that's why. Renting of motor vehicles, we have totally 4 exemptions with respect to renting of motor vehicles. And in other cases, it will be taxable. What are the 4 exemptions? Number 1, I have a motor vehicle that I am giving on rent to a road transport corporation. I have a motor vehicle that can carry more than 12 passengers. Means what? I have a bus, a private bus that I am giving to government, road transport corporation, for which they will pay me some higher charges. That higher charges will be exempted. Okay. So hiring of motor vehicle. Hiring of motor vehicle. So greater than 12 passengers. Hiring of motor vehicle greater than 12 passengers. To whom? To state RTC. RTC means Road Transport Corporation. Hiring of motor vehicle that can carry more than 12 passengers to state road transport corporation, that rental charges received will be exempted. Then number 2, hiring of electric motor vehicle. Hiring of electric motor vehicle. Hiring of electric motor vehicle that can carry more than 12 passengers. That can carry more than 12 passengers to a local authority. To a local authority. What is the difference between first point and second point? First point is what type of motor vehicle? Normal motor vehicle. Second point is electric motor vehicle. Okay. First point is given on rent to whom? State Road Transport Corporation. Second point, it is given on rent to a local authority. Then third, hiring of motor vehicle to a goods transport agency. To a goods transport agency. So there is a goods transport agency who is engaged in transportation of goods, and to them we have given our vehicle on rent. Now whatever rental charges we get is exempted. You understood these 3 points? Can you tell me? First one, hiring of motor vehicle that can carry how many passengers? Greater than 12 passengers. While counting this, should we include driver seat or exclude driver seat? 12 passengers. 12 passengers means excluding driver seat. Okay. So more than 12 passengers. It is given to whom? State Road Transport Corporation. That rent is exempted. Then second one, what? Electric motor vehicle. Again, it can carry more than 12 passengers. To whom it is given on rent? To local authority. Whatever rent that we get will be exempted. Third point, hiring of motor vehicle. To whom? To a goods transport agency. That rent is exempted. Then next point, hiring of motor vehicle. Hiring of motor vehicle to a person. To a person providing transportation services. Providing transportation services. Hiring of motor vehicle to a person providing transportation service to educational institution up to 12th standard. Educational institution up to 12th standard. What is the educational institution up to 12th standard? School. Correct? Up to 12th standard means we call it as school. And 12th standard or equivalent. Why equivalent? Because in some states So 11th and 12th may not be part of school, may be part of college. So up to 12th standard, there is an education institution which is providing education up to 12th standard. Now to that education institution, you are providing transportation service. Please carefully listen. There is a school. To that school, you are providing transportation service. Means what? Actually, school should provide the transportation service to the students, but they outsourced it to you. They don't have bus. They asked you to do the transportation daily basis. Now you provided services to the school, transportation service. Now you took that bus on rent from me. Now you pay the rent to me, na? That rent is exempted. You got it? Hiring of motor vehicle to a person who provides transportation service to a school. So this hiring charges is exempted. These are the 4 exemptions. Come on, once again, please repeat these 4 exemptions. Number 1, hiring of motor vehicle that can carry more than 12 passengers to a state road transport corporation. Number 2, hiring of electric motor vehicle that can carry more than 12 passengers to local authority. Number 3, hiring of motor vehicle to goods transport agency. Number 3, hiring of motor vehicle to a person who is providing transportation service to education institution up to 12th standard. These 4 renting of motor vehicles is only exempted. All other renting of motor vehicles will be taxable, and we have conditions for RCM. 3 conditions should be satisfied, then only RCM will be applicable. What are the 3 conditions? So, number 1, supplier should be other than body corporate. Supplier is other than body corporate. Other than body corporate. And number 2, recipient is body corporate. Recipient is body corporate. And number 3, rate of GST is 5%. So if these 3 conditions are satisfied, supplier should be other than body corporate, recipient should be body corporate, and rate of GST 5%. Who is a body corporate? So body corporate is public limited company, private limited company, or any body under any law for the time being in force. So body corporate means a public limited company or public limited company or private limited company or body under any law. Whether LLP will come under body corporate? No. LLP is not treated as a body corporate. LLP is treated as a firm under GST. Okay. So then whether a public limited company, private limited company is treated as body corporate? Yes. Whether ICI treated as body corporate? Yes. It is a body under law. Okay. RBI, SEBI, IRDA, EPFO, ESIC, like this, all these are called as body corporates. Okay. So they are, even LIC is also a body corporate. So any body established under any law for the time being in force is called as a body corporate. And so body corporate, supplier should be other than body corporate, recipient should be body corporate. And how much should be the rate of GST? 5%. Sir, is there any other rate of GST? Yes, we have 12% and 18% also. Only if these 3 conditions are satisfied, renting of motor vehicles will be coming under RCM. Otherwise, it will be FCM. So when RCM is not applicable, any one condition is not satisfied, then it will be FCM. Any one condition for RCM is not satisfied, then it will come under FCM. Now, can you tell me about this renting of motor vehicles? Come on, 4 exemptions. Am I right? Remaining cases taxable. What are the conditions for RCM? 3. Supplier other than body corporate, recipient body corporate, rate of GST 5%. And if any one condition not satisfied, it will automatically come under FCM. Then number 4. The next one is SIRR. In the next R is renting of residential property. Number 4, renting of residential property. Renting of residential property. So I have a residential property which I am giving on rental basis. Okay. Is there any exemption with respect to this? Yes. Residential property given on rent for residential purpose to an unregistered person is exempted. Okay. So write down first point, for residential purpose, to whom? To an unregistered person is exempted. Now second, one more point is there, that is the latest amendment. Suppose if you are giving it to a registered individual for his family stay, then also it is exempted. Okay, we have two exemptions for now. Until last attempt, it was renting of residential property for residential purpose to an unregistered person exempted, registered person taxable. But now one more point they have added in the exemption for November 23 exam. What is that? For renting of residential property for residential purpose, to a registered individual, for his family stay, then it will be exempted. Like say for example, I am a registered individual and I take a property on rent for my family stay. Even though I am registered person, it will be exempted. So only for other than registered individuals they are making it. Okay. So tell me, what are the two exemptions for renting of residential property? If you are giving it for residential purpose. Residential purpose means what? Accommodation. Okay. To whom? Unregistered person. Any unregistered person exempted. Suppose if it is registered individual for his family stay, exempted. Registered individual for business purpose, taxable. Okay. So then any conditions for RCM? So yes, we have one condition for RCM. Recipient should be registered, then only it will come under RCM. Recipient is registered, then it will come under RCM. Then is there any non-applicability of RCM? Yes, one case it will be FCM. What is that one case that is FCM? Suppose if it is given on rent for commercial purpose, it will always be FCM. So renting for commercial purpose. So this point can be tested in forthcoming exams because it is a latest amendment for November 23. Definitely it will be tested. So I have a residential property. What is the meaning of residential property renting for commercial purpose means? Say I have a house that I am giving on rent to a doctor to run a clinic. I am giving it on rent to an advocate to run his office. I am giving it on rent to a chartered accountant to run his office. I am giving it to a restaurant to run a hotel. You understood or not? So therefore, if I am having a residential property that I am giving for commercial purpose, it will be taxable under FCM. Okay, who will pay? Supplier will pay. Suppose if it is given on rent for residential purpose, then it will come under RCM. Who will pay? Recipient will pay. Only if it is registered recipient. So remember this R. What is that? Residential property, residential purpose to registered person. It will come under RCM. Okay. Residential property, residential purpose, registered person, it will come under RCM. But we have two exemptions. What are the two exemptions? Unregistered person exempted, registered individual for family stay also exempted. Then next. So we have seen SIRR, then C. So number 5, copyright services. Copyright services means, so these are basically intellectual property rights. I have a copyright, patent, trademark is there na, that copyright. So in copyright, we have total 4 copyrights. Original literary, dramatic, musical and artistic works. Okay. So first write down copyright services, and in that we have original literary. What is the example for original literary? Copyright in relation to original literary means what? Books. So for example, I have authored a book. I have the copyright on that book. I can give it to any person for which I get some money. On that money, who will pay GST? I will not pay GST. My recipient will pay GST because it is covered under RCM. Is there any exemption with respect to this? No. Is there any conditions for this RCM? No. So therefore, we don't have any conditions and exemptions. But in one case, copyright services will be coming under FCM. What is that one case where it will come under FCM? In case of original literary, the author is having an option to pay GST under FCM. If the author exercises the option to pay GST under FCM, author only will pay GST, but the publisher or the recipient will not pay GST. Please concentrate. I have authored a book. You are a publisher. I give the copyright of that book to you. Now you will publish and sell. For every book sold, you will be giving me some royalty. This royalty will be taxable. Okay. Now who will pay GST on this royalty? Publisher only will pay GST under RCM. But if author opts to pay GST under FCM, the liability will be shifted to the author. So therefore, author will pay GST. But tell me, why will author opt to pay GST under FCM? Because just now in input tax credit chapter, we saw one point. If my outward supply is covered under RCM, it will be treated as exempted supply for me. So if I buy anything, I cannot take ITC. Got it? That's the reason why author opts to pay GST under FCM. What are the inward supply of author? They may purchase laptop, or they may be receiving some software services, or they may be receiving renting of immovable property service. On that, if they want to take ITC, they will go for FCM option. But remember, once they go for FCM option, for the next 1 year, they will only be paying GST under FCM. There is a lock-in for 1 year from the date of exercising the option. For RCM to FCM, no lock-in. RCM to FCM, no lock-in. But FCM to RCM, there is a lock-in for 1 year. So, in case of original literary, so author can opt to pay GST under FCM. Author can opt to pay GST under FCM. But what is the lock-in that we have in this case? 1 year. 1 year from when? From the date of option. From the date of exercising option. From the date of option. So they will be going for FCM only, which means they will pay GST under forward charge mechanism. Otherwise, liability is on whom? Recipient, that is publisher or any other person. Who is any other person? Maybe producer or director who inspires, who take inspiration from that novel, and he may make a story based on that. So then also it will be coming under transfer of copyright. Then next, number 2, musical works. Example, musical works, background score or any music composed, etc. Okay. So right now, so it is Anirudh's era. Okay. So wherein back to back he is composing crazy musics and all, and even he went to Bollywood also. Now he will never transfer the music permanently. Why he will not? Because in Bollywood he will not be successful. Reason being, Bollywood music directors, so there will be music companies will be there. So music companies will purchase the tunes. The moment music company purchase the tunes, so they will be holding, and the music director cannot use the same tune for another movie. Usually what they do is that, so they make some change in that and they use the same tune. We will forget also. 5 years, only when someone posts a Instagram reel stating that this like that comparison, if they put only, we will know, otherwise we will not be knowing. So every music director will do the copy of that only. So permanently they will not be transferring. So there will be a temporary transfer which will be coming under service and it will be taxable. But the liability to pay GST is not on the music director, but the liability to pay GST is on whom? On the producer. Okay. So in case of musical work, we don't have any exemption, even we don't have any condition for RCM, and we don't have non-applicability of RCM. Means always it will be RCM. Okay. So therefore, third one is artistic works. Dramatic works. Example of dramatic works. story, screenplay, script, etc. Okay. Again, here we don't have any exemption. So liability to pay GST is on the director or producer. Then artistic works. Example of artistic works: drawings, designs, paintings, sculptures, etc. and all. So again, we don't have any exemption and we don't have any conditions for RCM or non-applicability of RCM. So always it will be RCM only, and liability to pay GST is on the recipient. So what are the 4 copyrights that we have seen? Original literary, dramatic, artistic and musical works. Always the liability is on the recipient. But in one case, there is an option. Which case? Original literary, author can opt to pay GST under FCM. But if author opts to pay GST under FCM, for the next 1 year from the date of excising option, author only should pay GST. You got it? Now, what is that we have seen so far? SIRRC. S for, don't see book. S for security lending. I for import of services. R for renting of motor vehicles. Another R for renting of residential property. Then C for copyright services. Okay. Now we are moving on to the next one, that is GTA services. Goods Transport Agency Services. We will complete that and then we will take break. Okay. So concentrate. Next one, number 6, Goods Transport Agency Services. Goods Transport Agency Services. Basically, who is Goods Transport Agency? There is a person who collects the parcels belonging to different consignors and transports it to different consignees. They will be called as Goods Transport Agency. For example, you wanted to send 2 boxes from Chennai to Delhi. Now, for the sake of 2 boxes, you cannot pay the entire rent for the lorry, na? So, these 2 boxes you will go and hand over. Like you, some 10-20 people will hand over the parcels to the Goods Transport Agency. What Goods Transport Agency will do? They will accumulate all those parcels, they will load in one lorry and they will take it to Delhi. Now, the entire lorry cost will be apportioned between these 10-20 people. So, they will collect 2000 rupees or 1000 rupees from everyone, so that they will apportion the freight cost. These people are known as Goods Transport Agency. Instead, if you book the entire lorry for taking the goods from Chennai to Delhi, that will not come under Goods Transport Agency. Understood or not? So that will be normal transportation of goods. And yesterday while discussing one exemption, I told you, normal transportation of goods other than GT and courier agency is what? Exempted. Normal lorry transporters and all will be exempted. So GTA will be taxable. And generally in case of GTA services, it will come under RCM. So who will pay GST? The consignor or consignee who is paying freight. If Goods Transport Agency is transporting, they will transport the goods belonging to some person. Na? That person who pay the freight will be paying the GST also under RCM. And here, is there any exemption for GTA services? Yes. 3 exemptions we have for GTA services. Number 1, specified goods. What are those specified goods? Yesterday already we discussed. Come on. Agricultural produce, food grains including flour, milk and salt. Then organic manure, newspapers and magazines. Then 2 more. Relief materials, defense and military equipment. Please write down. Specified goods hyphen agricultural produce, comma, food grains, in brackets including flours, comma, milk and salt. Then newspapers and magazines, Then next, organic manure, then relief materials, then defense equipment. So these are the 6 specified goods. Already we studied two exemptions. What are the two exemptions? If it is transported by vessel between places in India, exempted. If it is transported by railways, it is exempted. Now this is the third place, GTA. So these three cases, transportation of specified goods will be exempted. What are the three? Come on, tell me. Vessel between place in India, railways and GTA. Okay. Then second exemption. Previously we had this 1500 rupees freight does not exceed 1500 exempted, 750 exempted, like that. But that is omitted now. That is not there. So next second exemption is if recipient is central government, state government, local authority registered only to deduct TDS. Only to deduct TDS. So if the recipient is government, then also GTA service is exempted. Number 3, if recipient is individual or HUF or AJP, artificial juridical person, and they are unregistered and not having factory. So if the recipient is individual or HUF or artificial juridical person and they are unregistered and not having factory, then also GTA services provided to them is exempted. So tell me what are the three exemptions for GTA services. Number 1, specified goods. Number 2, recipient is government. Number 3, recipient is individual, HUF or AJP who are unregistered and not having factory, then also it will be exempted. Then next, remaining cases it will be taxable. Wherever it is taxable, who will pay GST? Recipient will pay GST. So we don't have any conditions for RCM. However, like how author is having option to pay GST under FCM, even GTA is also having option to pay GST under FCM. Okay, but concentrate. If GTA opts to pay GST under FCM, for the financial year they need to opt. Previously for every month they can opt like that. Now for every financial year, means lock-in period here is what? One financial year. What is the difference between author and GTA? Author lock-in 1 year is from the date of excising option, but GTA lock-in is for every financial year. Means every financial year they need to decide whether they want to pay GST or they can make their recipient to pay GST. Now, in this, we also should remember the rates of GST. If GTA opts to pay GST under FCM, the rate of GST will be 12% with ITC or 5% without ITC, which means, so if they want to pay GST 12%, they can enjoy the ITC on their inward supply. If they don't want ITC, what is the rate of GST? It will be 5%. Whereas in case of RCM, always the rate will be 5% only. Okay. So now see here. So GTA, you write down option 1. Option 1. What is the default option? Option 1 is default. What is the default option? RCM. So who will pay GST? Recipient. What is the rate of GST? 5%. Okay. RCM at 5%. Understood, pa? So in exam, they did not give anything. So you will take RCM 5%. Okay. Suppose if they gave 12% FCM. If they give 5%, we don't know. Because under FCM also 5% is there, RCM also 5% is there. Only if they give that it is FCM, then only FCM. Otherwise it will be always RCM. So option 2. Option 2, FCM option. So FCM, again what rates they have? FCM at 12% with ITC or without ITC? With ITC or 5% without ITC. 5% without ITC. Option 2 is FCM at 12% with ITC or 5% without ITC. When they need to exercise, what is the lock-in? 1 financial year. 1 financial year is the lock-in. Means every financial year they need to decide whether they want to pay GST under FCM or RCM. Okay. So that is with respect to this option 1 and option 2. So GTA services you understood here. First, GTA services, 3 exemptions, and in other cases it will be taxable. Wherever it is taxable, either they will pay GST under FCM or they can make their recipient to pay GST under RCM. If recipient pays GST under RCM, rate will be 5%. Recipient can always take ITC. But if GTA pays GST under FCM, again they have 2 rates. What is that? 12% with ITC, means their inward supply. Their inward supply. Appa recipient can always take ITC. You understood or not? Whether supplier charges 12% or 5%, recipient can always take ITC. It is to the supplier. If the GTA wants ITC, what rate they need to charge? 12%. If the GTA don't want ITC on their inward supply, what rate they need to charge? 5%. You understood? But whether recipient pays 12% or 5%, he will take ITC. You got it? So that is about this, and this lock-in is for a period of 1 year. So we have completed now so far SIRRCG. S for security lending. I, import of services. R, renting of motor vehicles. Another R, renting of residential property. Then C, copyright services. G, GTA services. The next one is government services. So which will be really like lot of points are there in that. So you take a break for 15 minutes. Thereafter we will continue with that government services. Okay. Relax yourself and come back, because that government service, lot of irritating points and all is there. That's why. Okay. We'll start. So in the list of services which are covered under RCM, so the next service that we need to see is government services. So this, first we will complete the discussion in the book and then we will update in our notebook. So please take revised book, page number 143. Please look into revised book, page number 143. So government services. Government services. So it is in the exemptions chapter, page 143, government services. So here, services provided by government, that is central government, state government, local authority, so is divided into 2, specified activities and other activities. These 4 specified activities are covered under supply and other activities are excluded from supply. What are the 4 specified activities of government which is covered under supply? Department of Post, then transportation of goods or passengers, and airport or port services, and services provided to business entity. These are the 4 activities of government which is covered under supply. All other activities are excluded from supply. Even you can write it as exempted. For example, you take a driving license from RTO. RTO is state government department and they give you driving license. Are you required to pay some charges for the driving license? Yes, above the table. Okay, you need to pay some charges. Whether this will be covered under supply or excluded from supply. See that and tell me, is it covered under supply or excluded from supply? RTO charges. Is it Department of Post? Is it transportation of goods or passengers? Is it airport or port? Is it services to business entities? No, others. Therefore, it will be excluded from supply. Suppose if a company is purchasing a lorry and on that lorry they pay the registration charges, whether it is covered under supply or excluded from supply? Covered under supply. Which point? Services provided to business entities. Then you go to post office and send a speed post or express parcel post. So on that post you pay some charges, speed post charges. Is it covered under supply or excluded from supply? It is covered under supply. Where? Department of Post. So now tell me, what are the 4 activities which are covered under supply? Come on. Department of Post, airport or port service, service provided to business entities, transportation of goods or passengers. Remaining activities and all will be either exempted from supply or excluded from supply. Now, in that Department of Post, you see what are the activities which are exempted. So first we studied what are covered under supply. Then we are seeing what are taxable and exempted. So postcard, inland letter and envelopes less than 10 grams. These three are exempted. All other service of Department of Post is taxable. Can you tell me what are the other service of Department of Post? Speed post, express parcel post, life insurance and agency service, like they will pay the bills and all, and even this Aadhaar enrollment and all they will do, then distribution of passport applications, so even saving schemes, banking service and all they will do, money order, all these activities will be taxable. Only three are exempted. What are the three activities of Department of Post that is exempted? Postcard, inland letter, envelopes less than 10 grams. Actually, these are all rest in peace. Okay, not available as on today. Postcard, who is using postcard? Inland letter, and everyone is sending mails, SMS, so WhatsApp. So where from still they are using? Envelope less than 10 grams means what? One paper. Okay, in one cover, one paper if you put, that is only. So no one. Wedding card you take care. One wedding card will be easily 20 grams, 25 grams here. Minimum to minimum. Okay, that too now lot of hangama they do in the wedding cards. So therefore basic wedding card itself will be 20 grams. Instead they don't have to give this exemption and say Department of Post always required to pay GST. At least one point would have been saved here. Okay. So all services of Department of Post except these three are taxable. Okay. What are these three? Postcard, inland letter, envelope less than 10 grams. Then transportation of goods or passengers, we have a separate discussion. Yesterday already we saw transportation of goods, like the transportation of passengers also. Then services to aircraft or port, aircraft or vessel in a port or airport, always taxable. We don't have any exemption with respect to that. And services provided to business entity. For this services provided to business entity, we have some specified activities, 14 specified activities. You can see the next page, 14 specified activities are exempted and other activities will be taxable. And in that other activities also again we have two general exemptions. Okay, so in case of services provided by government to business entity, we have 14 specific exemptions and two general exemptions. In remaining cases it will be taxable. You got it? Now let's see what are those 14 specific exemptions. Charges under RTI Act, Right to Information Act. Usually you know better. Okay, you will be making RTA application to get your evaluated answer sheets na, for which you pay some charges. Those charges and all will be exempted. That is this charges under RTI Act. Then interdepartmental services. Interdepartmental service means one department of government to another department of government. Usually what happens, income tax department when it go for raid and all, they will take the service of police department. So police department providing service to income tax department will be coming under interdepartmental service, for which police department will definitely charge some money from income tax department. So that will be coming under interdepartmental services, which is exempted. So what is the first point? RTI charges. Number 2, interdepartmental services. Number 3, assignment of right to use telecom spectrum. So this telecom spectrum is what? Telecom license, this radio frequency waves. So this telecom license given by whom? Government. To whom? Telecom operators. When is it assigned? Before 1/4/2016. Which telecom license is given before 1/4/2016? 4G. 4G, 3G, 2G and all before 1/4/2016. Now, but one-time charges and annual royalty, both these are exempted. What is this one-time charges and annual royalty? Whenever government is assigning the right, at the time when they assign the right, they will collect some charges called as one-time charges. Depending upon usage, they will be collecting annual royalty. Is it clear? The time when they assign, they will be collecting one-time charges, and for using that, they will be collecting annual royalty. Now, is still these telecom operators are using this particular license which they got before 1/4/2016? Of course, yes. Many times in our mobile, we see 4G, 3G, even that GPRS, EDG and all we will be seeing sometimes, which means what? It is downgrading the network. So still they are using the 2G technology. Therefore, whatever royalty that they pay will be exempted. So what is the third point? Government assigns right to use telecom spectrum. To whom they will be assigning? To telecom operators, for which they will be collecting one-time charges and annual royalty. Both will be exempted. But when it should have been assigned? Before 1/4/2016, on or before 1/4/2016. Then next point, you see, what is the difference between this fourth point and third point? Assignment of right to use other natural resources, only one-time charges are exempted, assigned before 1/4/2016. What is the difference, pa? Third point is telecom spectrum, but fourth point is any natural resource. Third point, both one-time charges and annual royalty exempted, but fourth point, only one-time charges exempted. Both cases it should have been assigned when? Before 1/4/2016. Then assignment of right to use natural resources to an individual farmer. What is the difference between this fifth point and fourth point? Both are natural resources, but the fourth point is assignment of right to use natural resources to any person. For example, mines like mineral reserves or coal mines or bauxite mines will be given to a leaseholder for extraction of the natural resources. So that is fourth point. Whereas fifth point is assignment of natural resources to an individual farmer. What will be given? Land. Agricultural land will be given to an individual farmer for cultivation purpose, and the farmer has to pay some royalty to government. That royalty received by government also exempted. But what is the difference between fourth and fifth point? In fourth point, only one-time charges is exempted, but in fifth point, both one-time charges and annual royalty exempted. In fourth point, it should be assigned before 1/4/2016, but in this fifth point, it can be assigned anytime. So tell me the 5 points, 5 exemptions. Come on. RTI charges, interdepartmental services, and 3 licenses. What are the 3 licenses? Spectrum license before 1/4/2016. Both one-time charges, annual royalty. Then any other license for natural resources and only one-time charges before 1/4/2016. Assignment of natural resources to individual farmer anytime, both one-time charges and annual royalty. Understood these 5 points? Then look into the next one. Registration charges under any law for the time being in force. Means what? Generally, what are the registration charges that we pay to government? When you buy a vehicle, you will pay registration charges. When you buy a property, you will pay registration charges. And when you incorporate a company, you will pay registration charges. Correct or not? All these registration charges collected by government will be exempted. There is no GST on that. That is this registration charges under any law for the time being in force. Then next, safety certificate charges. Usually, whenever some establishments which are dealing with public at large, they need to get a safety certificate. For example, recently you would have heard one news in Iraq and all. So in one marriage function, they have lit the crackers, and because of which fire accident happened, and around some 90 people dead, including the groom's parents and the bride's mother. Everyone died, and so many casualties will come when people are there, in big establishments. That's why proper safety measures should be maintained, like fire extinguishers and proper exit doors, etc. and all. So therefore, these safety measures are there or not, one officer will be giving a certificate. So for giving that certificate, some charges are collected. This charges collected by the safety certificate officer is exempted. That is this safety certificate charges. Then fee for birth certificate, death certificate, driving license, passport, visa. These are given to individuals. Now, if it is to individuals, why is it coming under services provided by government to business entity? Because who is a business entity? Any person engaged in business is known as business entity. Any person engaged in business. Any person engaged in business is known as business entity. Now here, listen, there is a company which is sending their employees for out of the country for a training purpose. Now the company will take the passport and visa on behalf of employees. So therefore service is provided to company in relation to issuance of passport and visa. Then a company will take key man insurance policy. So for taking the policy, they need birth certificate. For claiming the policy, they need death certificate. So they will receive death certificate and birth certificate services. Then there is a company which is into transportation business. So they have employees as drivers. On their drivers, so the driving license renewal and all the company will only pay. So that is driving license. So these 5 certificates, what are the 5 certificates here? Birth certificate, death certificate, passport, visa and driving license. Then next one, consideration for tolerating an act. That is, whenever you enter into contract with the government and you breach the contract, when you breach the contract, government will be collecting some damages from you. So that is known as liquidated damages. Whatever damages that government collects from you will be excluded, like which will not be covered under taxable, it will be exempted. That is this consideration for tolerating an act. Then merchant overtime charges under customs. Generally, customs department will be working on all days, 24/7, 365 days, except for public holidays like Gandhi Jayanti, Independence Day, Republic Day. Otherwise, they will be working every day. And therefore, as they are working after office hours and on holidays, they will be collecting some extra charges from the importers and exporters for doing the clearances. This is known as merchant overtime charges. That is also exempted. So tell me, what are the 5 more points? First 5 points we have seen. Next 5. What is that? Registration charges under any law for the time being in force. Safety certificate charges. Fee for birth certificate, death certificate, driving license, visa, passport. Then consideration for tolerating an act and merchant overtime charges. First 10 points. Then next part. You can see assignment of right to mine or explore petroleum, crude or natural gas against consideration in the form of profit petroleum. So we have the concept of cost petroleum and profit petroleum. What are these terms? Let's try to understand. Please concentrate, everyone listen, it's a very important concept. First, government previously what they used to do, they used to give the license to extract the petroleum, crude or natural gas initially. Before, say you are a leaseholder, Reliance Industries Limited. What you will do, you will identify a locality where there is gas reserve or petrol reserve. Now you will approach me, I am government. So you will tell me, see sir, in this place there is gas reserve and petrol reserve. Give me permission to extract. What I will do, okay, you extract it and you need to pay me 10,000 rupees per ton or 15,000 rupees per ton as royalty, and you extract it. I don't have any problem. So therefore they will extract and government will get the royalty. And these people, when they extract, it is actually scarce resource. When they extract it, they sell it at a very huge price. When they are selling at that price, they are going to get good profits. Am I right? Now, thereafter, government started telling, see boss, if you are able to generate this many profits, it's only because of me. Are you getting this? So, therefore, corporates, actually India is not ruled by politicians. India is ruled by corporates. It's not the politicians. Politicians what? Every 5 years take money and spend money to get the votes. And again they need to think of next election. But corporates are not like that. So no one will touch them. So for many generations they will be there and they will only be feeding the politicians. Now government started asking them, boss, you are growing like anything. We are still like this only. So therefore, we need profit also. We don't need the royalty alone. We need profit also. Give me profit. So then the government and the leaseholder form a joint venture. In this joint venture, so who will incur the expenses? Leaseholder only. Government will not spend money. Government will just take the profit share. Okay. So now they form a joint venture. Now who will incur the expenses in this joint venture to extract the petroleum, crude or natural gas? Leaseholder. So leaseholder will generate the crude oil or natural gas and sell it. So some revenue they will get, correct? From this revenue, government will take annual royalty. Government will take annual royalty. Leaseholder will recover his expenses. Now whatever portion left is known as profit. Okay. So how the profit is arrived? Revenue from operations minus annual royalty. Who will take that annual royalty? Government. Minus recovery of expenses. Who incurred the expenses? Leaseholder. He will take out. Now whatever left is known as profit. The name of this profit is Profit Petroleum. You got it? The name of this profit is known as Profit Petroleum, and whatever expenses that is incurred by the leaseholder and recovered is known as Cost Petroleum. Now, in this Profit Petroleum, a percentage will go to leaseholder and a percentage will go to government. That percentage which is received by the government is exempted. Is it clear? Now look into this chart in the next page. Page number 146. Page number 146, Cost Petroleum and Profit Petroleum. So basically it is a production sharing contract between government and leaseholder, where government assign right to extract petroleum, crude or natural gas to the leaseholder. Apart from royalty, government receives a share of profit from the joint venture. Now, first there is some revenue from production and sale, and leaseholder will recover the expenses. What is the name of this recovery of expenses? Cost Petroleum. Is it taxable or exempted in the hands of leaseholder? Exempted. Cost Petroleum is exempted. Then government will take the royalty. Whether that royalty will be taxable or exempted? Taxable. Royalty always taxable. Why royalty always taxable? Assignment of right to use natural resources anytime. So before 1/4/2016, one-time charges is only exempted. Even before 1/4/2016, annual royalty will be taxable, correct or not? So annual royalty will be always taxable. Now, if you reduce this Cost Petroleum and annual royalty, the balance is known as Profit Petroleum. In this, a percentage will go to the leaseholder, which is not a supply. Why it is not a supply? He is investing and he is taking the profit. That is not a supply. But why for government it is exempted? Is government investing? No, but they are getting a profit share. So that is exempted here. You got the clarity? Yes or no? So what you should remember? So total 4 points you need to remember. Number 1, share of profit received by the leaseholder. What is your answer? Share of profit received by the leaseholder, not a supply. Share of profit received by the government, exempted. Annual royalty received by government, taxable. And recovery of expenses, Cost Petroleum by the leaseholder, exempted. You understood? So these 4 points you need to remember. What is that? Share of profit received by the leaseholder, not a supply. Share of profit received by the government is exempted. Then annual royalty received by government will be taxable. Then recovery of expenses by the leaseholder known as Cost Petroleum is exempted. Then come back. So that is about this Profit Petroleum point. Then next, guarantee commission for guaranteeing the loans taken by public sector undertaking. Generally, public sector undertaking will borrow the loans from banks. This will be guaranteed by Government of India. As government guarantees the loans taken by PSU, this public sector undertaking will pay some commission to the government for giving the guarantee. This commission received by government will also be exempted, known as guarantee commission. Okay. The next point. So, services provided by state government to excess royalty collection contractor to the extent of variable royalty is exempted. What is this excess royalty collection contractor? This is also one interesting concept. So please concentrate. That is, generally what government will do, the source of income to government will be tax revenues and other revenues also they get. Tax is the major source, but they get other revenues, like they will be giving licenses, etc. and all to extract the natural resources. So lot of natural resources are there in India. So we don't know that. So we are hearing methane, ethane, hydrocarbons, and even lithium and bauxite, coal reserves, okay, and lignite reserves. Like this, lot of natural resources are there in India, because India, basically because we have the waters around, like sea, Arabian Sea, Indian Ocean, and even Bay of Bengal. So lot of reserves will come and gets deposited beneath this land. Okay, so that's where lot of reserves are available. Even in Jammu and Kashmir recently, they have identified some lithium reserves, which is basically used for making batteries and all. So now these reserves, government itself can extract, and they can make good business, and they can get lot of money. If they get lot of money, no, they don't have to actually charge anything to the people. So education will be fully free, hospitals, medicine will be fully free, food, clothing, shelter will be fully free. All the basic necessities for the people can be given free, absolutely free. 1 rupee also, even tax and all they can make zero. Income tax, no need to pay. Indirect tax, no need to pay. That much of revenue they get. But they did not do that. What they are doing, they are asking the people to take extract. But to us, you pay some amount. Okay, so therefore this royalty what government gets is an income to the government. Okay, but what type of royalty it is? Is it a fixed royalty or the variable royalty? It is variable royalty. Why? Because this year 100 tons extracted, they will pay based on 100 tons. Next year 120 tons extracted, then they will pay based on 120 tons. So therefore the type of royalty what government gets will be variable royalty. But government don't want variable royalty, they need fixed royalty. Why fixed royalty? Because their expenditure will be fixed, correct? The budgeted expenditure will be fixed, so they want a fixed royalty. So now they appoint one person called as ERCC, Excess Royalty Collection Contractor. You can see this information in page number 147. Page number 147. State government of Andhra Pradesh assigns right to extract natural resources for a royalty of 10,000 rupees per ton to Messrs. Reddy Brothers. And this Reddy Brothers will be paying variable royalty. But government need fixed royalty, so they appointed one person as ERCC. What is the full form of ERCC? Excess Royalty Collection Contractor. What this excess royalty collection contractor will do? They will receive variable royalty and they will be paying fixed royalty to the government. Okay, like a swap arrangement. So they will be receiving what type of royalty? Variable royalty, and they will pay fixed royalty to government. What is the advantage of this to government? Government will always get the same amount, so there won't be any fluctuation. So they can plan their expenses. You got it? So why we need fixed income? Mainly to meet our fixed expenses. So then what is the advantage of this contract to ERCC? What is the advantage of this contract to ERCC? In a month or in a year, if variable royalty is more than fixed royalty, that difference they will get. Got it? So here it is like one person is taking the risk, the other person is hedging his risk. Okay, who is hedging the risk? Government. Who is taking the risk? ERCC. Okay, now in a particular year, they got a variable royalty 50 lakhs, but they paid a fixed royalty 60 lakhs. Understood? Now on that 50 lakhs, already Reddy Brothers would have paid GST under RCM, because services provided by government to business entity is covered under RCM. So already Reddy Brothers would have paid GST on what? 50 lakhs. But how much state government of Andhra Pradesh got as revenue? 60 lakhs. So what is the shortfall? 10 lakhs. On this 10 lakhs, ERCC is required to pay GST. So ERCC is not required to pay GST 60 lakhs. Hello, listen. How much they are paying to government? 60. But how much they need to pay GST? Only on 10. Why? Because on 50 already other person has paid GST. You got the clarity. So ERCC is exempted to the extent of variable royalty. To the extent of variable royalty. Now next example. What if the variable royalty is 45 lakhs and variable royalty is 65 lakhs and fixed royalty is 60 lakhs? Then nothing, no need to pay, because already Reddy Brothers is paying GST on 65 lakhs and ERCC not required to pay any GST. But 5 lakhs excess paid, will they refund, sir? government refund. What, yeah, you understood or not? Why will they refund? Yeah, if there is shortfall only, they will collect. One way only. Government is known for one-way traffic, okay? If there is any shortfall, you pay. If you paid excess, forget it, okay? So therefore, they are exempted. Who is exempted? ERCC exempted to the extent of variable royalty. Then that is this point. Next, last one, national permit charges or state permit charges. So usually when the vehicle cross one state to another state, so these rental vehicles like yellow board vehicles, they need to pay some permit charges. That permit charges collected by government is exempted. These are the last 4 points. What are the 4 points that we have seen? So profit petroleum, share of profit petroleum exempted, guarantee commission exempted, excess royalty contractor exempted to the extent of variable royalty, and last one, national permit or state permit charges, okay? So these 14 activities of government to business entity is exempted, whatever may be the amount, okay? Then apart from these 14 activities, any other activity, we have 2 general exemptions, okay? What are those 2 general exemptions? You see, services provided to business entity whose aggregate turnover during previous year does not exceed 20 lakhs or 10 lakhs, and it is not applicable in case of renting of immobile property. Now I will give you one example related to this. No need to make note, just listen. That is, I am starting one advertising agency, okay? So measures ABC advertising agency. This ABC advertising agency commenced their business on 10/5, commenced on 10/5/2024. So what is the previous year? What is the previous year? 2023-24. For the previous year 2023-24, what is their turnover? 0. Why their turnover is 0? Because they commenced the business on 10/5/2024. Now, this ABC advertising agency has received some advertising services, that is permission to place the hoardings. So from government of Tamil Nadu, so this ABC advertising agency has got the services. What services? By way of permission to place the hoardings, okay? So permission to place hoardings, and for which this ABC advertising agency is paying some consideration. How much? Let's take 10 lakhs per annum. Now tell me, is this activity covered under 14 specific exemptions? Search. Is this activity covered under, is this services provided by government to business entity? Yes. Is it covered in the list of 14 activities? RTI, interdepartmental, assignment of right to use natural resources, assignment of telecom spectrum, assignment of right to use natural resources to an individual farmer, guarantee commission, ERCC, profit petroleum, security, safety certificate charges, nowhere. Registration charges, no. So in that 14 points, it is nowhere covered. So now you check the first general exemption. First general exemption, you see, services other than renting of immovable property. Is it renting of immovable property or other than renting of immovable property? Other than renting of immovable property to a business entity whose turnover during previous year does not exceed threshold limit. Correct? Therefore, this activity is exempted. Why this activity is exempted? It is covered under general exemptions. Services provided by government to business entity whose turnover during the previous year does not exceed threshold limit is exempted. But this exemption is not applicable in case of renting of immovable property services. Got the clarity related to this? Now, second general exemption. Generally, this police and all we can take on hire. You know that? Police can be taken on hire. We can hire the police. Even Kerala government also recently has released the rate schedule. So if you want to take police on rent and all, you can take them. Okay. So think of, say for example, you are going, no, I myself, I will take. So I am coming to the class. So when I am coming to the class, so I may have some 4 or 5 people, police people required for me. Okay, I can pay. You know how much Tamil Nadu police rent? So 3,000 rupees only per day. 3,000 rupees rent if you pay, one police will come with you. Okay. So therefore, of which cadre, sir? So this SI cadre. SI cadre police and all, 3,000 rupees if you pay, he will come full day. Okay. Rent a police. So 3,000 rupees. Sir, why government is renting police and all? They have to pay salaries to the police now. You understood or not? So they may not have money, so they will be giving police on rental basis. Now in this case, this renting of police to a business entity, generally we will not take, we don't need, but some business entities may require a police. So why? Maybe for some event, they might be organizing some events or etc. and all, they might be required to have one police. So hiring of police by police department to a business entity, but how much is the charges? 3,000 rupees. So whether it will be covered under 14 points in the specific exemptions, nowhere it is in 14 points. But this business entity turnover during the previous year exceed threshold limits of first general exemption, not applicable. But see the second general exemption. What is the value of supply? Does not exceed 5,000, it is exempted. In this case, how much is the rental charges for the police? 3,000, therefore it will be exempted. Understood or not? Suppose if you want to take this CI cadre person and all, it will be 5,500 rupees. So whether it will be taxable or not? Yes, that will be taxable. You got it? So that is with respect to this. So tell me, what are the 2 general exemptions? Come on. Services other than renting of immobile property to a business entity whose turnover during the previous year does not exceed threshold limit. Second general exemption, value of supply does not exceed 5,000. In all other cases, it will be taxable, and who will pay GST? Business entity will pay GST. In that again, one exception is there, where if it is renting of immobile property to a unregistered business entity, liability to pay GST is on government under FCM. But sir, renting to unregistered person is exempted now. That is residential property. This is not residential property. Renting of commercial property. Government will not rent residential properties and all. They will be giving commercial properties to the business entities. If the business entity is registered, it will come under RCM. Otherwise, it will be FCM. So now we will update this information. So you please take your notebook and write down the next one, number 7, government services to business entities. So we completed services provided by government to business entities. So that part we are updating here. So government services to business entities. Government services to business entities. So what are the exemptions we have? We have 14 specific exemptions, correct? Specific exemptions. We have 14 specific exemptions. Then next, 2 general exemptions. What are those 2 general exemptions? Services other than renting of immobile property. To whom? To business entity. Renting of immobile property to business entity whose turnover during previous year exceed threshold or does not exceed threshold? Does not exceed threshold limit. What is the threshold limit for registration? 10 lakhs, 20 lakhs and 40 lakhs, depends. Okay. Then third exemption. What is that? Services to business entity where the value, services where the value less than or equals to how much? 5,000 per invoice. 5,000 per invoice. These are the exemptions we have with respect to government services to business entities. And in case when I say exemption, no need to pay GST. Neither FCM nor RCM. There is no GST at all. And is there any conditions for RCM? No. But only one exception is there where FCM is applicable. What is that? Renting of immovable property to which business entity? Unregistered business entity. Write down. Renting of immovable property. Renting of immovable property to unregistered business entity. To unregistered business entity. Renting of immovable property to unregistered business entity is covered under FCM. So this is about government services to business entities. I have not written this specific exemptions. So because big list is there, you just refer to page number 144. What is the page number that we have seen? 144. Yes. Page number 144. Then next one, number 8. So we have seen government services to business entities. Next, we have overseeing committee services to RBI. GOT. Overseeing committee. Overseeing committee services to RBI. So overseeing committee services to RBI. So generally overseeing committee will be providing services to RBI. Who is this overseeing committee? Generally, whenever banks give loans to some people who do not repay, usually we and all will definitely repay, because the number of documents they will be taking. If you are not repaying also because of their torture, so we will repay. But corporates and all, what they will do, they will take money, they will not repay and leave the country. Okay. Now what will happen to the bank? Bank will be in the verge of liquidation, because whose money they gave as loan to corporates? Public money. So now these corporates, when they are not repaying money to the banks, the bank will be in the verge of liquidation. So therefore today public money is involved. So therefore whom we will question? RBI. Why we will question RBI? Because RBI only gave license to the bank now. So therefore RBI will appoint one committee called as overseeing committee, which will restructure the non-performing assets of the banks. And for doing this job, RBI will pay commission to the overseeing committee, that is covered under RCM. We don't have any exemption with respect to this, and even we don't have any condition for RCM and any non-applicability of RCM, which means always it will be RCM who will pay GST. RBI will pay GST, not the overseeing committee. Then next one. Next one is TDR, FSI and long-term lease. Number 9, transferable development rights. Transferable development rights. Transferable development rights. So this transferable development rights, that is TDR or floor space index. Floor space index, FSI, or long-term lease of land. Long-term lease of land. So there are three aspects here: transferable development rights, floor space index and long-term lease of land. What is it about? So we don't have to go more details into it, because that much will not be tested in exam. So I am the landowner. I have the development right. I will give the development right to the builder. So for which I will get some consideration. On that consideration, the builder will pay GST under RCM. Same way, I have floor space index. So this floor space index means on the land, how much I can construct is known as floor space index. Again, I will give that to the land building, that is builder, for which I will get some consideration. On that again, I will not pay GST, builder will pay GST. Same way, I have a land. That land I am giving on a long-term lease. What is the meaning of long-term lease? Greater than or equals to 30 years is known as long-term lease of land. Okay. So please try to understand. Landowner will be giving development rights or FSI or long-term lease of land to the builder, for which builder will pay some consideration. On that consideration, who will pay GST? Landowner will pay GST or builder will pay GST? Builder will pay GST under RCM. You got it? Now, in relation to this, we have one exemption. What is that? If this TDR, FSI and long-term lease is used for construction of residential flats, and if that residential flats are sold before completion certificate, to that extent it will be exempted. Okay. So this discussion we will see with an example. So no need to make note of this example because it's already there in the book. Okay. Just listen. Please listen. So there is a landowner. That landowner has given the development right of land or lease of land to a builder. Using this land, what builder will do? Whether land is given or development right of the land is given. Development right of the land is given. So the landowner is giving TDR, transferable development rights, or FSI or lease of land to the builder, for which builder will pay the consideration. How much consideration? Let's take, so 100 lakhs is paid as consideration by the builder, excluding GST at 18%. Now on this 100 lakhs, who will pay GST to government? Landowner or builder? Builder, because it will be taxable under RCM. So therefore builder will pay GST to government. Now what builder needs to do is that he don't have to pay full GST. There is an exemption that is available. Using this TDR, FSI and long-term lease, builder is making two types of constructions. Okay, that is commercial construction and residential constructions. Okay, using this TDR, FSI and long-term lease. Possible commercial as well as residential in apartment. Usually roadside and all, there will be constructing shops. Inside they will be constructing the houses. So therefore commercial units is also there and residential units is also there. Commercial units and residential units. Commercial units and residential units. Okay. What is the rate of GST on commercial units? The rate of GST, you don't have to know this. For exam purpose, you don't have to know these rates. The rate of GST on commercial units is at 18% with ITC. With ITC, input tax credit. Whereas this residential units is taxable at what rate? 7.5% without ITC. Okay. Now tell me what happens in this case for the builder. Builder got a inward supply. This TDR, FSI and long-term lease is inward supply. Correct? Used for outward supply. Am I right? Inward supply, outward supply. On outward supply, they have to pay GST. On inward supply, whatever GST they paid, they can take as input tax credit. Am I right? But with respect to residential units, they cannot take ITC. Means is there a double taxation burden? How double taxation burden is there? Sir, if full GST paid, they can take as ITC, there is no problem. But if ITC not available, it will be added to the cost. Am I right? So you are purchasing for 10,000 rupees on the GST is 12%. So what is your cost? If ITC not available, 11,200 rupees is your cost. If ITC is available, 10,000 rupees is your cost. In this case, for which units ITC available, which units ITC not available? Commercial units ITC available, residential units ITC not available. Am I right? That's why what they are telling, in this proportionate to residential units, you will get the exemption. No need to pay GST because ITC not available. They are giving the exemption here. Sir, every case they will give like this or no? Only here they are giving. Mainly because residential units are for individuals, public, general public, in order to encourage the home buyers. So that's the reason why they are giving this exemption. Okay. So now, what is the exemption that is available here? Out of this 100 lakhs into 18%, what is 100 lakhs into 18%? 18 lakhs, fully no need to pay. Proportionate to residential units, we will get exemption. But how to calculate that proportionate to residential units? We need to take the carpet area. Some ratio we need, correct or not? Usually, how will you allocate the expenses in overheads chapter you would have learned? How will you allocate expenses related to land and buildings? On floor area basis. So, we need the carpet area here. So, what is the carpet area of commercial units? The carpet area of commercial units is, say, 40,000 square feet. 40,000 square feet is the carpet area of commercial, and 60,000 square feet is the residential. Okay, 40,000 square feet, 60,000 square feet. Now, in this case, tell me to what extent the builder has to pay GST to government. The builder has to pay GST to government. How much GST builder will pay? First, what is the liability? 100 lakhs on inward supply, not on outward supply, on inward supply. On inward supply, how much GST will pay? 100 lakhs into 18% into what by what? To what extent he will pay? 40,000 divided by 1 lakh. To this extent, he will pay GST to government on inward supply. So, to what extent it is exempted? To the extent of residential, exempted. To the extent of commercial, it will be taxable. So, what is that? 100 lakhs into 18% into 40%? 11 lakh, 7 lakh 20,000 is the GST that he will pay. Okay. So, builder is exempted to what extent? To the extent of residential units. Okay. That to those residential units which are booked before completion certificate. Why, sir, before completion certificate? If it is sold after completion certificate, anyhow there is no GST on that. Only those units which are sold before completion certificate, there is GST. To that extent only they have given exemption. So, write down TDR, FSA and long-term lease. So, to what extent it is exempted? Proportionate to residential units, booked before completion certificate, So, how to calculate this formula? How to calculate the exemption? GST on inward supply into what by what? What by what? What is exempted? Residential area divided by total area. Residential area, carpet area divided by total area. To this extent it is exempted. And is there any conditions for RCM? No. Is there any non-applicability of RCM? No. Okay. Now, related to this, we have exemption construction sector. You please check that in page number 157. Page number 157. See this example. There is a landowner. Please have a look into page number 157. There is a landowner. This landowner is giving TDR, FSA and long-term lease to the promoter or builder, for which promoter or builder will pay a consideration of 10 lakhs and this will be taxable under RCM. What is the rate of GST? 18%. So, that is 10 lakhs into 18%, 1,80,000. Now, using this TDR, FSA and long-term lease, this promoter or builder is making commercial units and residential units. How much is commercial units? 40. Residential units is 60. In that commercial and residential, how many units got completed before completion certificate, booked before completion certificate? So 15 and 25. Now, here, out of this 1,80,000, how much is exempted? Calculate and tell me. How much is exempted? How much is exempted? To what proportion it is exempted? 25 by? 25 by? What is the total? 100. 60 plus 40 is 100. So, total units 100. In the total units 100, how many are residential? 60. In that residential, how many are booked before completion certificate? 25. So, to what extent it is exempted? 25 divided by 100. Understood or not? So, what is the formula? Come on. Total GST on inward supply into residential units booked before completion certificate divided by total units. Okay. So, therefore, 1,80,000 into what by what? 25 divided by 100. That will be 45,000. So, 1,80,000 minus 45,000. Remaining 1,35,000 is the GST payable. You got it? So, that is the exemption that we have seen so far in this. So, we completed Sir, CG, got. So, what is that? Yes, come on. Security lending. I for import of services. R, renting of motor vehicles. Next, another R, renting of residential property. Then C, copyright services. G, GTA services. Okay. Then next, GOT. G, government services to business entities. O, overseeing committee services to RBI. T, TDR, FSI and long-term lease. Then we have Sir, CG, got salads. So, what we are left with is, so salads. So, we were into the discussion related to services which are covered under RCM. In that we have completed Sir, CG, got. Now, the next area, kindly make note, yes for sponsorship services. So, number 10, sponsorship services. Sponsorship services. In sponsorship services, who is the supplier and who is the recipient? Who is the supplier and who is the recipient? For example, BCCI is organizing a cricket match and that is sponsored by, say, Airtel. So, who will be the supplier? Who is the recipient? Airtel is? No. BCCI is the supplier and Airtel is the recipient. The one who pay money is the recipient. You know now BCCI, whomsoever they go with the title sponsor, their business will be shut down. Sahara, first they went, gone. We don't know where the company is. Next they went with Byju's. Byju's we know what happened to them right now. Okay. Then Dream11. This Dream11, 40,000 crore tax demand on them. Okay. I don't know who is the next lead sponsor. So, definitely, so some good people should be sponsoring. Even CA coaching centers also can become lead sponsor. Hey, Ilapana. So, just I am telling. Okay. So, sponsorship services. In case of sponsorship services, what will happen? The organizer of event is the supplier. Organizer is supplier and sponsorer, that is the one who pay the sponsorship money. Sponsorer is recipient. Sponsorer is recipient. So, the one who conducts the event, organizer, he is the supplier. The one who pay the sponsorship money is the recipient. In case of sponsorship service, we have one exemption, that is sponsorship of a recognized sporting event is exempted. Okay. What is a recognized sporting event? Any sporting event conducted by National Sports Federation. So we have BCCI, Indian Hockey Federation, etc. are called as National Sports Federation under Ministry of Sports. So they conduct any tournament. So for that sponsorship money received will be exempted. So BCCI will be receiving crores and crores of rupees as sponsorship money. Are they required to pay GST on that? No, 1 rupee GST they don't have to pay. Fully it is exempted. And next we have Inter-University Sports Board. This Inter-University Sports Board will conduct the tournaments between universities. So even the sponsorship money received by them is exempted. Number 3, Paralympic Committee. Paralympic Committee will be conducting sports for physically challenged people. And then we have Central Civil Services Cultural and Sports Board. Mainly they conduct games and sports for government employees. You might have heard of this Dhoni's story wherein he will actually work as ticket collector, central government employee, and they will be conducting railway cricket teams. Through that he gets selected into national, like that. Central Civil Services Cultural and Sports Board, that is that. And next we have Indian Olympic Association, which will be conducting national games. So that is also covered under recognized sports body. And finally, Panchayat Sports Board. So they will be conducting, this local level like kabaddi, then volleyball. Even in Kerala, this boat races and all they will be conducting. So that will be Panchayat Sports Board. So these are the 6 recognized sports bodies. And if they collect any sponsorship money, that is exempted. Apart from that, any other event, the sponsorship money collected will be taxable. Any event. It can be any kind of event. The sponsorship money, it can be cultural event or it can be promoting some arts, whatever may be. The sponsorship money will be taxable. Only for sporting event they have given exemption. So write down sponsorship money for which event? Recognized sporting event. So what are the recognized sporting events? Who are the recognized sports bodies that we have? Number 1, National Sports Federation. National Sports Federation. Then number 2, Inter-University Sports Board. Inter-University Sports Board. And number 3, Paralympic Committee. Paralympic Committee. Then number 4, Central Civil Services. Central Civil Services Sports Board. Then number 5, Indian Olympic Association. Indian Olympic Association. And 6, Panchayat Sports Board. Panchayat Sports Board. So these are the recognized sports bodies, and any amount collected by them as sponsorship money will be exempted. And is there any conditions for RCM? Yes. Sponsorship service will come under RCM if the recipient is body, corporate or firm. So write down conditions for RCM. Recipient is body, corporate or firm. Recipient is body, corporate or firm. Then it will be coming under RCM. What if the recipient is other than body, corporate or firm? FCM. If the recipient is other than body, corporate or firm, other than body, corporate or firm, then it will be coming under FCM. Okay, so that is about this sponsorship services, and we have an exemption related to this. So you can see the sports related services exemption, which is in page number 154. page number 154. We have sports related services. You can see this chart. Here we have an example for recognized sports body BCCI, an example for unrecognized sports body IPL. Now, this BCCI is getting money, sponsorship money from body corporate or firm, example Tata, so that will be exempted. Even if they get money from a sole proprietor, that is also exempted. You understood? Money, sponsorship money collected by recognized sports body from any person will be exempted. What if that sports body is an unrecognized sports body? Then the sponsorship money will be taxable. You understood? But who will pay GST? Suppose if they collect money from Tata, example of body corporate or firm, it will come under RCM. Suppose if they collect money from sole proprietor, say for example, I want to promote, okay. So if I give money, then will it be coming under FCM or RCM? FCM, okay. So therefore that is this. So IPL getting sponsorship money from Tata is taxable under RCM. But if they get sponsorship money from a sole proprietor, then it will be covered under FCM. You understood these points, pa? Then we have another exemption, that is any service provided to a recognized sports body by player, referee, umpire, coach, team manager will be exempted. So there is an individual who is providing service to recognized sports body as a player, umpire, coach, team manager, okay, even referee. So these 5 people exempted. Apart from these 5 people, any other person providing service to recognized sports body. Who are the others? Like pitch curators, commentators, selectors, technical experts, etc. They will be taxable. And even these people providing services to unrecognized sports body always taxable. Actually, any person providing service to unrecognized sports body always taxable. Only to recognized sports body, that to 5 people is only exempted. Who are those? Player, referee, umpire, coach, team manager. For example, Virat Kohli getting money from BCCI, taxable or exempted? Exempted, any amount. So match fees or man of the match, man of the series, whatever money that he gets will become exempted. Suppose if he gets money from, so IPL, that is RCB, taxable or exempted? Taxable, definitely taxable. Same way, if there is an umpire who is getting money from BCCI or ICC, taxable or exempted? Exempted. If they get money from IPL, almost all umpires get money from Mumbai Indians team only, okay. So therefore, whatever money that umpires receive from Mumbai Indians, they may be actually, BCCI, ICC umpires only. But when it comes to IPL match, that match may be between CSK and Kolkata Knight Riders. But for that also, Mumbai Indians only will pay money to the umpire. Okay. So what to do? That much fear they have. That way only they will get cup. Otherwise they will not get. Okay. So therefore RCB, needless to say. So nothing. So therefore this money paid to the umpires will be taxable or exempted? Taxable, because they are receiving money from unrecognized sports body. Then one recognized sports body providing service to another recognized sports body is also exempted. For example, we saw list of sports bodies now. What are they? So National Sports Federation, Inter-University Sports Board, Paralympic Committee, Central Civil Services Cultural and Sports Board, Indian Olympic Association, Panchayat Sports Board. Usually one recognized sports body to another recognized sports body. Example, Inter-University Sports Board is conducting a cricket tournament, and they needed to conduct it in international standard. So they took the support of BCCI. Now BCCI providing service to Inter-University Sports Board will be exempted. Okay, you write down that point. Any services provided by one recognized sports body to another recognized sports body is exempted. Any services provided by one recognized sports body to another recognized sports body sports body is exempted. Any services provided by one recognized sports body to another recognized sports body is exempted. Okay. Now, so we completed this sponsorship services and look into the next area. So, yes, ALADS, in that the next one, A is agent services. Agents services. So, yesterday itself I told you that class will be up to 6:45. Okay. We'll complete this. Then see the next one, number 11, agent services. So total we have 5 agents covered under RCM. Who are they? Number 1, insurance agent to insurance company. There is an insurance agent who is providing services to insurance company. And in case when insurance agent is providing service to insurance company, do we have any exemption? Yes, pa. If that insurance agent is earning commission from rural area, that rural area commission is exempted. Is it clear? So, business facilitator or business correspondent. What is the name of that insurance agent? Business facilitator or business correspondent. Business facilitator or business correspondent earning commission in rural area, earning commission in rural area is exempted. Okay. And we don't have any conditions for RCM, we don't have any non-applicability of RCM. So there is an insurance agent who is providing service to insurance company, he get the commission and that commission will be taxable. Who will pay GST on that commission? Insurance company. But one exemption is there. What is that? If that insurance agent is a business facilitator or a business correspondent and they are working in which place? Rural area, that commission will be exempted. This is about insurance agent. Number 2, recovery agent. Recovery agent to bank or NBFC. To bank or NBFC. So generally banks or non-banking financial companies will be giving loans. When those loans are not repaid, so they will be employing, they will be appointing some agents, recovery agents. So these recovery agents will recover the loans for which they get a commission. That commission earned by them will be taxable under RCM. Means who will pay GST on that commission? Recovery agent will pay, a bank will pay, a bank will pay under RCM. So, and is there any exemption with respect to this? No. And even we don't have any conditions for RCM also. So, first insurance agent to insurance company and then recovery agent to bank or NBFC. Next, number 3, direct selling agent. Who is direct selling agent? Those who do marketing for the banking products. So example, they will make a call and they will say, so we are calling from so and so bank, we are offering you free credit card, you don't have to pay anything, you take the credit card and you use it, like that and all they will be telling. And loans and all, 10 lakhs, no, I will get a call like 20 lakhs, sir, you are eligible for 20 lakhs loan. So are you giving free? No, I have to pay interest na. And even afterwards if I apply, no, they will say, no sir, already you have taken lot of loans, so we cannot give. Then why the hell you said you are eligible for 20 lakh loan? So like that sometimes they will market the banking products and for marketing that they get some commission. On that commission they will not pay GST, bank will pay GST. So direct selling agent to bank. And is there any exemption? No. But there is a condition for RCM. Supplier should be other than body corporate or firm. If the supplier is body corporate or firm, it will not come under RCM, it will be FCM. So supplier, see their conditions for RCM. Supplier is other than body corporate or firm. Other than body corporate or firm. So what if supplier is body corporate or firm? FCM. So write down in last column, supplier is body, corporate or firm, it will come under FCM. So liability to pay GST is on the supplier. Then next, number 4. So direct selling agent to bank. Then we have business facilitator to bank. Business facilitator to bank. Business facilitator to bank. So there is a business facilitator and business correspondent who will be appointed by bank as agents in order to expand their banking operations. So this business facilitator gets some commission from the bank. So that will be exempted if the business facilitator is working in rural area. Okay. So business facilitator earning commission in rural area is exempted. So then when it will be taxable? Only if the business facilitator is working in urban area. Sir, what jobs sir business facilitator will do? They will do money remittance activities. What is that money remittance activities? Example, you can also become a business facilitator, a very good business it is. Okay, what you can do is that, for example, in this street, complete street, there is no ATM. In the entire line, there is no ATM. Now what you can do? You can just put one tent and keep some cash with you and one device, that UPI sound box you can keep. Okay. So the moment you scan it, like people come who want cash, it's like mobile ATM. Okay. So they want cash, they can scan and the payment will be debited from their account. You give the cash to them. Commission you will get 5%. But 10,000 rupees, 5% is what? 500 rupees you will get commission. You understood or not? And suppose if you are able to make a transaction of some easily 10 lakh rupees, 10 lakhs into 5%, 50,000 rupees you will be able to earn in a month. So 10 lakhs. So mobile ATM, you can change anywhere you can go. What you need to do daily morning, you need to go to bank and get the cash in one suitcase, but you need to protect that cash under. Okay. You need to keep that cash with you and you need to keep that box, sound box, different places wherever people are walking. So like Paris corner, Central Station, like that different places. So wherever lot of people will be walking and all, they need ATM, just you need to sit there. So don't worry, it is like plan B only. If this plan A fails, so plan B only. So but I am just giving you one good advice. Okay. So this is the job of a business facilitator. And again, that 50,000 rupees what you earn, you don't have to pay GST. Who will pay GST? Bank only will pay GST under RCM. Okay. So that is this. Suppose if you go to rural area, then on the commission whatever is there is no GST at all. And is there any condition for RCM? No. Is there non-applicability of RCM? No. Okay. This is about business facilitator to bank. Related to this business facilitator, we have some more points. Have a look into this. There is a banking company. No need to make note, just listen. There is a banking company. And this banking company is having one urban area branch and a rural area branch. So this banking company is having rural area branch and urban area branch. Now there is one business facilitator who is appointed for this banking company. Business facilitator. That is, Mr. A is appointed as business facilitator of rural area branch and Mr. B is appointed as business facilitator of urban area branch. Now, A will be providing services to rural area branch and A will get a commission. What about this commission? Whether it will be taxable or exempted? Just now we saw whatever business facilitator providing services in the rural area branch, the commission earned will be exempted. Okay. Then next. So Mr. B is working for urban area branch. When B is working for urban area branch, Now B will be providing services to urban area branch, for which urban area branch will pay some commission. What about this commission? Is it taxable or exempted? Definitely it will be taxable and it will come under RCM. Means who will pay GST pa? Banking company or business facilitator? Banking company will only be paying GST on this particular amount. You got it? Then next, there is a agent of business facilitator. These business facilitators themselves are agent, but they can have sub agents. Okay, so there is a agent of business facilitator. There is a agent of business facilitator. Say Mr. X is appointed as agent of Mr. A and Mr. Y is appointed as agent of Mr. B. Now X will be providing services to A and for which A will share the commission. Whether this commission is taxable or exempted. Why it is exempted? Because the main agent's commission is exempted, the sub-agent's commission is also exempted. Okay, then next. Now, Y provides services to B. Y provides some services to B, for which B will pay some commission. Whether this commission will be taxable or exempted? Taxable. As the main agent's commission is taxable, sub-agent's commission is also taxable. And is it taxable under FCM or RCM? We don't have RCM here, so therefore it will be FCM. So who will pay GST on this part? GST will be payable by the agent of business facilitator. From this chart, what are the 2 points that you can conclude? Come on. Business facilitator, agent of business facilitator, earning commission from rural area branch is exempted. Correct or not? And then next. So, business facilitator shall never pay GST on their outward supplies and inward supplies. On their outward supplies to bank, who will pay GST? Bank will pay GST. On their inward supply from agent, who will pay GST? Agent will pay GST. Means business facilitator will never pay GST. Correct or not? So, therefore, you need to remember these 2 points that, business facilitator, here you write down in this, business facilitator earning commission in rural area, and below that itself you write down this conclusion. What is that? What are the 2 points you need to remember? Business facilitator or agent of business facilitator earning commission from which place? Earning commission from rural area is exempted. Then what is the second point? Business facilitator shall never pay GST on outward supplies and inward supplies. Because on their outward supplies who will pay? Bank. On their inward supplies who will pay? Agent. So on outward supplies and inward supplies. Clear here? Now we will see business correspondent. Business correspondent is like a branch manager appointed in a location where there is no branch. Means what activities they will do? Account opening, loan processing, check collection, check deposit, all the activities which a branch will do, that will be done by the business correspondent. So this business correspondent also gets commission from the bank in rural area, which is exempted, just like business facilitator. So first we will analyze about this business correspondent also, just like this business facilitator chart. So see this, no need to make note, just concentrate. There is a banking company, and this banking company is having a rural area branch and a urban area branch. rural area branch and urban area branch. Now, business correspondent is appointed, not business facilitator, business correspondent. Who is a business correspondent? Who is a business facilitator? Business facilitator will do only remittance activities, no other work, no other work. But business correspondent will do all the works which a branch manager will do, every kind of banking activity. Now, this business correspondent, say Mr. A is appointed for rural area branch, Mr. B is appointed for urban area branch. Now, what A will do? A will be providing services to the rural area branch, and for which, so A will get a commission. Whether this commission will be taxable or exempted, this commission is exempted. Just like business facilitator, business facilitator getting commission from rural area branch is exempted, na? Same way business correspondent also. Now, Mr. B provides services to urban area branch, for which the urban area branch will pay commission. Whether this commission will be taxable or exempted, it will be taxable, but it is taxable under FCM, not under RCM. You understood the difference? Business facilitator providing service to banking company is RCM, but business correspondent providing service to banking company is not RCM, it will be FCM. So on this, who will pay GST? Business correspondent will pay GST. Then next, there is a agent of business correspondent. Business correspondent itself is one agent. They may have one sub-agent, agent of business correspondent. Agent of business correspondent. Say Mr. X is appointed as agent of A and Mr. Y is appointed as agent of B. Now, X will be providing services to A, for which A will share the commission. So, whatever commission that A gets, out of that some commission will be shared with X. Is this commission taxable or exempted? This commission is exempted. Why? As main agent's commission is exempted, sub-agent's commission is also exempted. Now, Y provides some services to B. Y provides some services to B, for which B will share the commission. Whether this commission will be taxable or exempted, taxable. As the main agent's commission is taxable, sub-agent's commission also taxable. But this is not covered under FCM. This is covered under RCM. Then who will pay GST? Business correspondent only will pay GST on this, because it is covered under RCM. Now, what is the 2 points that we can remember based on this? Business correspondent, agent of business correspondent, earning commission from rural area branches exempted. You got it? Business correspondent, agent of business correspondent, earning commission from rural area branches exempted. Urban area branch taxable. And business correspondent shall always pay GST on outward supplies, inward supplies. See there, on their outward supplies, who is paying? Business correspondent, correct? Huh? And on their inward supplies from agent also, who is paying? Business correspondent only. Can you remember this part? So that is what we need to make note here. So the last agent we have is agent of business correspondent to business correspondent. So write down 4 points you have written. The 5th point is agent of business correspondent to business correspondent. So, agent of business correspondent to business correspondent. Agent of business correspondent to business correspondent. Now, what are the exemptions that we have here? Agent getting commission from rural area branch is exempted, na? Commission from rural area branch. Commission from rural area branch is exempted. And here also you need to remember 2 points. What are those 2 points that you need to remember? So these two. Conclusion. Business correspondent, agent of business correspondent earning commission from rural area is exempted. Business correspondent or agent of business correspondent earning commission from rural area, earning commission from rural area is exempted. Then next, number 2, business correspondent shall always pay GST, shall always pay GST on inward and outward supplies, shall always pay GST on inward and outward supplies. And we don't have any conditions for RCM, non-applicability of RCM. So tell me, who are the 5 agents covered under RCM? Who are the 5 agents? Insurance agent, then insurance agent to whom? Insurance company. Then recovery agent to bank, financial institution, NBFC or bank or NBFC. Then direct selling agent to bank. Thereafter business facilitator to bank. Then agent of business correspondent to business correspondent. Okay. Then the next one is SALADS, L for legal services. Legal services by individual advocate or firm of advocate, and A refers to arbitrator services. Okay. So write down first L, legal services. So this is next, which point? Point number 12. Point number 12. Legal services by individual advocate or firm of advocates to business entity, Then next 13, because the discussion for these 2 points is common. Okay. 13 is arbitrator services to business entity. Arbitrator services to business entities. Arbitrator services to business entity. Who is an advocate and who is an arbitrator? Advocate is a person who provides the services through the court of law, but arbitrator is a person who provides the services out of the court. Okay. So now advocate services and arbitrator services, we have many exemptions. In remaining cases only it will be taxable. Wherever it is taxable, it will be covered under RCM, where liability to pay GST is on the business entity. Okay, pa? So therefore, we need to first understand what are the exemptions with respect to advocate and arbitrator service, which you can see in your book, page number 159. Page number 159, advocate services. Page number 159, advocate services, you can see. Here we have 2 charts. Services provided by individual advocate other than senior advocate and firm of advocates. Who is a senior advocate? Senior advocate is a designation which is given by High Court or Supreme Court. So senior advocate is not based on seniority. Suppose if there is one advocate who will be arguing only divorce cases, successfully completed 100 divorces, will he be called as a senior advocate? No, not like that. So it depends upon the nature of work that he does and public interest litigations that he filed and won. So then the Supreme Court or High Court, based on the recommendations of Bar Council, will be giving him a status called as a senior advocate. Okay. So now the first chart is applicable to which advocate? Senior advocate other than senior advocate? Other than senior advocate and firm of advocates. Okay. So now this chart we are going to see now. So there is a normal advocate or a firm of advocate. They provided services to a other than business entity which is exempted. Okay. For example, I am applying for divorce. Example only. I am applying for divorce, and for which I recruited one advocate, and that advocate has argued successfully completed the divorce, for which he will charge some fees from me. Definitely it is not free service and all, it is chargeable, and he will charge some amount from me. I paid money. Is it taxable or exempted? Exempted. I killed one person, murder. Okay, I appointed one criminal lawyer and he saved me. It is what? Services provided to business entity, other than business entity, other than business entity. He will definitely charge some fees from me. Taxable or exempted? Exempted. Are you getting this? Next step. Suppose if I enter into contract with one company and I breach the contract, for which they filed a case on me, and I appointed one advocate to argue this case. Now this is services provided to a business entity. Why? Because it is related to my business profession. So therefore, any person engaged in business is known as business entity. So individual also will become business entity when? If the service is related to their business. You got it? So in this example, so I am entering into contract with a company, I breach the contract, so therefore it is related to business now. Even though the service are provided to individual, it is related to their business, so it will come under services to business entity, not exempted. Suppose if the service are provided to a person other than business entity, then only it will be exempted. So what is the first exemption? Services to other than business entity. Then what is the second exemption? If they provide service to another individual advocate or firm of advocate, one advocate to another advocate, one firm of advocate to another firm of advocate, or one advocate to firm of advocate to individual advocate. You got it? So between them, if there is any services, it is exempted. Okay. Then next, suppose if they provide services to central government, state government, or local authority, government, you remember. If they provide services to government, then also it will be exempted. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, even then advocate services will be exempted. So tell me, what are the 4 exemptions that we have with respect to individual advocate or firm of advocates? Number 1. If they provide service to other than business entity, exempted. Number 2, another individual advocate or firm of advocate, exempted. Number 3, government, exempted. Number 4, business entity whose turnover during the previous year does not exceed threshold limit. These 4 cases, advocate service is exempted. Which advocate? Normal advocate or firm of advocates. And in other cases, it will be taxable. What is that taxable? They are providing service to a business entity. That business entity turnover during the previous year exceeds threshold limit, then only it will be taxable. Wherever it is taxable, who will pay GST? Recipient, means that business entity will pay GST under RCM, which means advocate service is either exempted or covered under RCM. Advocates will never pay GST. You got it? Perhaps you cannot collect also from them. You understood? Because if you try to collect from them, they will put one case on the GST department itself. So therefore, advocates are not at all required to pay GST. Either their outward supply will be exempted or it will be covered under RCM. Then, now look into the second chart. The second chart is applicable to whom? Senior advocate and an arbitrator. What is the difference between these 2 charts? Here we have 4 exemptions. Here we have only 3 exemptions. What are the 3 exemptions? If they provide services to a person other than business entity, exempted. If they provide services to government, exempted. If they provide service to a business entity whose turnover during the previous year does not exceed threshold limit, exempted. What is that point which is missing here? What is the point that is missing here? If they provide service to another firm of advocates or individual advocate, it is not exempted. Then how to interpret, sir? Concentrate. Whenever there is a senior advocate who is providing services to individual advocate or firm of advocates, there is a senior advocate. There is a senior advocate who is providing services to individual advocate or firm of advocates, okay, or firm of advocates. In this case, what we need to see is that the ultimate litigant, applicant or petitioner will be there now. Definitely, the senior advocate is not providing service to them for their personal purpose. Even if it is for their personal purpose, it is exempted. How it is exempted? Now it is not service provided to individual advocate. It is to that advocate for personal purpose, means other than business entity. Senior advocate providing service to other than business entity is exempted. Correct or not? So we need to take the litigant. We need to take the litigant or applicant or petitioner. So on behalf of their client only they receive senior advocate services. Litigant, applicant or petitioner. Now for senior advocate services to individual advocate or firm of advocate, who should be deemed as recipient? The litigant, applicant or petitioner on whose behalf the service is provided to individual advocate, firm of advocate. For these people's case only, na senior advocate will do service. So this litigant, applicant or petitioner is only deemed as recipient. Is only deemed as recipient, and therefore the litigant, applicant or petitioner is only liable to pay GST. Suppose if that litigant, applicant or petitioner is an individual other than business entity, senior advocate service exempted. If that litigant, applicant or petitioner is government, then also senior advocate service exempted. If that litigant, applicant or petitioner is a business entity whose turnover during previous year does not exceed threshold limit, then also it will be exempted. Which is exempted? Senior advocate service is exempted. And suppose if that litigant, applicant or petitioner is other than business entity whose turnover during previous year exceed threshold limit, then in that case it will be taxable. And who will pay GST? Litigant, applicant or petitioner will pay GST. I'll tell you a easy way to remember. If the individual advocate or firm of advocate service is taxable, senior advocate service also taxable. If the individual advocate or firm of advocate service is exempted, senior advocate service also exempted. Okay, pa? You understood? So if the individual advocate or firm of advocate service to these people is taxable, even senior advocate service also taxable. Again, who will pay GST? Sir, for both the bills, who will pay GST? Senior advocate invoice as well as individual advocate or firm of advocate invoice. Both advocates invoice, who will pay GST? The litigant, petitioner or applicant only will pay GST. Got the clarity? So that's what I have given here. So whether senior advocate services to another advocate or firm of advocate is exempted. In such case, litigant, applicant or petitioner shall be deemed to be recipient and the activity shall be analyzed accordingly for taxability. If they are business entity other than government and having aggregate turnover during previous year exceeding threshold limit, then it will be taxable under RC. That's what we have given. Okay. Now, sir, what about arbitrator providing service to advocate? Why? Why arbitrator will provide service? Arbitrator will do out of the court settlement. Advocate will do through the court settlement. It is like allopathy doctor going to a homeopathy doctor and asking for medicine. You understood? Why will they go, pa? So therefore, arbitrator will never provide service to advocate. Advocate will never provide service to arbitrator. So that is a hypothetical situation that will not arise. Okay. So therefore, what are the three common exemptions you need to remember? Come on, you write down. What are the three common exemptions? For these 2 points, what are the common exemptions? Common exemptions. First point, to other than business entity. Correct? To other than business entity. Then second, to advocate. That is specific point. Okay. So third one, to government. To government. Then third, to business entity whose turnover during previous year does not exceed threshold limit. So this is common for everyone, correct? Am I right here? Then one point which is applicable only for normal advocate or firm of advocates. What is that? Only to normal advocate or firm of advocates. Only to normal advocate or firm of advocates. What is that? Which is applicable only to a normal advocate or firm of advocates. Between them. Between them is exempted. Between whom? Between advocates or firm of advocates. Between advocates or firm of advocates, the service is exempted. Okay. So these are the exemptions that we have with respect to advocate service. I simplified in these points. Okay. And remaining cases, it will be taxable. Wherever it is taxable, who will pay GST? Business entity. Is there any condition for RCM? No. Is there any non-applicability of RCM? No. Always RCM only for legal services and arbitrator services. So we completed this. Two more points only, Pa. We will discuss that. Just 5 minutes, please wait. So that is director services to company or body corporate. Next, S-A-L-A-D-S. DS we are discussing. S is what? Sponsorship services. A is what? Agent services. L is legal service by individual advocate or firm of advocate. A is arbitrator services. Now we are discussing the next point, number 14, director services. Directors services to company or body corporate. To company or body corporate. Is there any exemption? No. We don't have any exemption. We don't have any conditions for RCM. We don't have non-applicability of RCM. Always company or body corporate will pay GST under RCM. There is a director of a company who is not an employee, because if director becomes employee, there is no GST on salary and all. Okay. So this director, which will be which director? Other than executive director, other than managing director or full-time director, means non-executive director, independent director, etc. They provide some services to the company for which they get some remuneration, sitting fees, etc. On that, who will pay GST? Director will pay GST or the company will pay? Company will pay. That is this director services to body corporate. And then next we have security agency services. Security agency services. What is security agency services? Manpower supply. Security personnel they will be supplying. Okay. So example, if you see cinema theaters, shopping complexes, hospitals and all, security people will be supplied. Some security, private security personnel will be there na. So that manpower supply agency which will supply the security personnel is known as security agency. Example, Beast movie. Okay. So security agency services. So security agency services, so they will be supplying the manpower called as security personnel, receive some money. In that case, it will be taxable. We don't have any exemption. We don't have any exemption. But we have some conditions for RCM. What is that? Supplier should be other than body corporate. Okay. So see there, conditions for RCM we have supplier other than body corporate. Means the manpower supply agency should be other than body corporate. Other than body corporate. And number 2, recipient should be registered. Recipient should be registered but not opting for composition scheme. But not opting for composition scheme. Or not registered to deduct TDS. Or not registered to deduct TDS. Then in that case, it will be coming under RCM. So what are the two conditions? Supplier should be other than body corporate and recipient should be recipient should be registered. registered, not body corporate and all, registered. And they should not be opting for composition scheme and even not registered only to deduct TDS. Other than them, then it will be RCM. Suppose if any condition not satisfied, if any condition not satisfied, then it will be coming under FCM. With this, we completed the list of services which are covered under RCM along with the exemptions related to this. Okay, and so just give me the list once again, pa. Sir, CG got salads. Yes, for security lending. I for import of services. R for renting of motor vehicles. Another R, renting of residential property. C, copyright services. G, GTA services. Another G, government services to business entities. O, overseeing committee services to RBI. T, TDR, FSI and long-term lease. Then yes, salads. Yes, sponsorship services. A, agent services. L, legal service by individual advocate or firm of advocates. Then A, arbitrator services to business entities. D, director service to company or body corporate. Yes, security agency services. Now wait. Now in case of sponsorship service, what are the conditions for RCM? Two conditions or one condition only. Sponsorship service, recipient, check there. Recipient should be body corporate or firm. Then for renting of motor vehicles, what is the condition? Three conditions. Supplier should be other than body corporate. Recipient should be body corporate. Rate of GST should be 5%. Then for renting of residential property, what is the condition for RCM? Recipient should be registered. And then for direct selling agent, what is the condition? Supplier should be other than body corporate or firm. Then for security agency, what is the condition? Supplier should be other than body corporate or firm. Recipient should be registered and not opting for composition scheme or not registered only to deduct TDS. You understood? So it's not that only the services you need to remember. Even for which service, what is the conditions for RCM and what are the exceptions for this and exemptions. So this chart, whatever you have written, one day before the exam, mandatory you need to revise and go for exam. Okay, because in exam we will get confused in this place only. They will not directly give RCM. Sometimes they will connect it with exemption. So first we need to write whether it is exempted or not exempted. If it is taxable only, it will come under RCM. Okay, pa? So we completed this now. So in our next class, that is tomorrow, the agenda will be, we will complete the remaining exemptions. Already some exemptions we completed today itself. Remaining exemptions we will be completing, and we will be moving on to taxable event, that is supply, composite supply, mixed supply, then e-commerce operator liability, the taxable event discussion we will be making, and then we start with registration and composition scheme. That's the agenda for tomorrow. Okay, exemptions, taxable event, registration, composition scheme. So please prepare these topics and come, and tomorrow we will do that, and all balanced topics that we have, returns, payment process, etc., miscellaneous and problem solving will be fourth day. Okay, thank you. We will meet tomorrow. Take care.